Happy Tuesday. It is August 25th. We've got one day until the elusive Nvidia earnings report, but there's still some others hitting the wire. My name is Mike Butler. I'm here with Jermal Chandler. Jermal, how you doing this morning?
Fantastic, Mike. What's going on, man? You know what? Last night I went down the rabbit hole a little bit. I'll tell you how it started. My 13-year-old who plays football and basketball, we were joking about stuff, and he's like, I'm done with sports. I want to be retired. And I was like, cool. And I showed him the retirement speech of Michael Jordan back in the day and just reminiscing through that. And we watched it a little bit. And it was like a 5-minute video. And then this is where you're going to crack up. It went to the next video, whatever that may be. And it ended up being like a 1991 recap of the season. I've actually never seen this. The closest thing I've ever seen was Michael Jordan's airtime, which we've all seen, which is great. But this was like a 1991 recap of the season. 10 seconds into the show, it shows a guy we know very well in the front row.
Really? That's
Tom Sosnoff. Big Tom Sosnoff face.
That's so
shows his face in front row seats. It was hilarious. I was like, look at this dude. It was so funny, man. But yeah, I couldn't believe that we rolled right into that. But yeah, it was a trip just going down the road of that. I mean, everybody drove out to the Berto Center in Deerfield to watch to be there for that day. I remember what was going on that day. It was a wild day. I remember being in high school. It was like senior year. So it was just down the rabbit hole, man. It was a trip. But yeah, it was funny that this random video comes up and they see this dude's in the front row clapping or whatever. It was a trip.
It's insane. The stories that I've heard from those guys, I'm just like, you guys were literally just living the Wolf of Wall Street movie. Like that's what it was.
Yeah,
they were 80s and 90s floor traders.
Yeah.
That's all it was. It was just you go to the floor and then you go sit front row at the Bulls game every day.
Yeah.
And then you fly to Vegas because you want to.
Yeah.
On a private jet.
And then you get back to work in the morning and do it all over again.
It's insane.
Yeah, it was a trip,
hilarious.
man. It was a trip. Yeah, we got a great show for you guys today, man. As always, we got a whole lot of stuff geared up here. Let's pull up the slides and show the people what we got today. Morning news in a little bit here, and boom, gone. And it here, and boom, gone. And it's gone.
All the monitors are out.
All the monitors went out, but I know we got morning news. I know we got morning movers after that. We got the opening bell, of course, at 8:30 a.m. We got live trades with TP at 8:45. We have trading charts with Tim Knight, some tasty research coming up. We got confirm and send with Chris and TP, risk and reward with Gus and Errol. And then, of course, we got trade ideas of the day with all the folks. So check us out, man. We got a lot for you.
Yeah, it's going to be great. And lots to talk about ahead of this Nvidia earnings report. We do have some other earnings coming up today. Some household names, some not. But if you go to the watch list on Tasty Trade, you can go to the all earnings tab.
Yeah, we did just have Dick's
by the date. But Tuesday after the close, we got Intuit, Zoom, and Box. Dick's Sporting Goods.
Down $30, looks like.
Yeah. Let's see here. We've got, they close at 180. It's trading at 140.
How the hell is Dick's down $30 when everybody only just goes there to get stuff for their kids playing sports and it's $1 billion business? Like, what are they doing wrong? I don't understand.
It is insane. There's
an article like some big article out right now about sports, like sports for kids and whatever. I can't remember what magazine it is. I'll find out. I think New York Mag has a big article about how much people pay for sports. Yep. I put in New York Mag and it was the third thing. So apparently it's a big article right now. I just happened to see it, but yeah, around 5 million children around the U.S. now compete in travel sports. I refuse to play along. I've told you plenty of times. I don't play it. I don't play that game the way I did it with my oldest kid. I do it totally differently with my second kid. You're not going to hold me hostage to travel sports. You're not going to do it.
I would say it is a lot of work and a lot of time. It's kind of like the hockey parents. That's always like without travel, the hockey parents, they're waking up at 5 a.m. or like going at 11 p.m. games, that kind of stuff. But the travel, probably every weekend, right?
Yeah.
Like one of my friends has a son and he was playing baseball and I'm like, all right, so what's the schedule? Like, what's our golf schedule looking like? He's like, oh, we're never playing golf again.
Yeah.
Like, I got games every Saturday, every Sunday, all summer.
See, that's the thing. You don't really have to do that. You're made to feel like you have to.
Mm-hmm.
If you find the right way to train, and truth be told, like baseball's a tough one because, you almost do have to travel in a way. If you want to play some of the best teams are down south and they're playing all the time. Hockey is tough because of ice time. And that's the hard part. But like basketball is one of those where they make you feel like you got to travel to Texas to play a really good game. Whereas particularly here in Chicago, you could easily get a good game. You don't have to. A lot of times people will travel out of town and play the same teams that they're in the same area with. It's so crazy. So it's a broken thing. I don't understand why Dick's is down $30. That's what I don't understand. Like, how can you be down $30 when everybody goes to Dick's? If you go to Dick's now, most of that stuff is based around travel sports. It's not based on like adults doing sports.
Interesting.
Go to a Dick's. Wild. Go to a Dick's and you'll see. You'll see what I'm talking about. They have a whole section for baseball. They have a whole section for hockey, a whole section for basketball. And it's all for kids more than anything. It's a trip.
Yeah, I don't know. I will have to look into that, the conference call. I assume it's a conference call or something that they said that really spooked the market. But implied volatility for the next 24 days, 34 points. And we are down 34 or 35 points right now with just 1 day's movement. So huge move. This is clearly, they don't have weekly options, so you can't really see the pure implied volatility for the earnings announcement. But obviously, if you're down more than or equivalent to the monthly cycle in 1 day, that's a multi-standard deviation move to the downside.
Apparently, Dick's received $59 million in tariff refunds, $2 million in related interest. But guess what? The story is it's based off. It seems like it's down based off of people are having trouble spending on stuff like this. Like that's the idea because the prices are so high.
Yeah,
interesting.
That damn inflation.
I know, right?
It's you everywhere. We also have, let's see, Intuit after the close to it today. That'll be interesting. Salesforce tomorrow after the close with Nvidia. So we've got a handful of names: CrowdStrike, Workday, an interesting tech space with a little tech service woven in there, and our favorite Ulta trading at $600 a share. This stock always boggles my mind. This thing flies around for earnings and otherwise, but
I know, right?
It's nutty. E-mini's actually up today. Interesting. Usually we're like, oh, the markets are up again every day. Everything's normal. And recently it's been like, oh, the market's down 50 points every day. But E-mini's up 26, NASDAQ up 220. The Dow and the Russell are also up. And Bitcoin finally taking a breather, but it did hit 80K recently. And I know that because Chris Vecchio told me this morning. So Chris, we've got him on the line. How you doing today?
It was better when Bitcoin was above 80K, but listen, can't have it all.
Ooh, Jinx, personal drink soda.
I mean, Ulta has earnings. Are you going to tell me that people are buying makeup amidst all this expensive stuff? Is that what you're going to tell me? They're going to be up on earnings? Just, how is that possible?
I will tell you that
because of the GLP-1s.
Ooh, fair.
Well, what do you mean?
Because of the GLP-1s. Look what happened to Victoria's Secret.
Huh?
No, look what happened to Victoria's Secret. People are skinnier. People are fit. People are showing off. They're feeling good about themselves. They're buying more lingerie out there. Look at Victoria's Secrets. What else do people buy? Makeup. Makeup's going to do well.
I was going to say, if
that sounds crazy to me, though.
If Dick's Sporting Goods is
that's
down,
fine.
If Dick's Sporting Goods is down because the people can't afford the sports for their kids, that does not mean they're not buying makeup for themselves. That's for sure. That is for sure.
Makeup's like alcohol.
I don't believe
it's an inelastic good. People want to look good and feel good about themselves, and so they buy it through recession. They buy it through. I mean, the famous lipstick indicator, right? This is one of the things that economists look at, which I suppose not so famous. I don't know why I'm calling it the famous lipstick indicator, but basically, when sales of lipstick fall, that's when you know the economy is really in a bad place. Because that's like the last thing that women cut out of their budget.
Well, there you go. So this is pivotal. Then we can agree on that. Ulta's earnings are pivotal.
Chris,
that's what we're going to say.
Got
matters more than Nvidia.
I think it is based on what you just said.
Yeah,
maybe. No.
Hey, you are the one guy that will find alpha anywhere.
He sure will. This guy. telling me GLP-1s.
The pizza pentagon. This one was great. The pizza pentagon indicator, where the nearest pizza joint near the pentagon, when that thing's popping off, that's when you know.
Was I wrong?
Yeah.
Did we go to war with Iran? We went to war with Iran.
Yeah. We need to chart the pizza activity at that place relative to the timeline of wars being announced and wars.
But it's not just the pizza. There's also the bar component, right? You need the two indicators at once. If people aren't at the bars, but the pizza is on tilt, then you know we're going to war.
So you're looking for low bar, high pizza.
Low bar, high pizza. Yeah, absolutely.
Got it. Well, there you have it, folks. That's all you need.
That's it. Apparently, yeah.
Lipstick, bars, and pizza.
Yeah.
But yeah, Bitcoin finally selling off a little bit, but it did reach new recent highs, 81.6 overnight, and we've fallen since then. But crude is taking it on the chin here. Big sell-off here. Almost twice the ranges yesterday, and the market's not even open yet. The equity market's not even open yet. So what are we thinking with crude?
I did some trade management yesterday on a short iron condor position. We talked about this on air, taking off the short put spread side of the trade because it had decayed substantially. Today, with the move lower by 3% here, 3.02%. The short call spread side, I think, is now going to be taken off because that was sitting up at 23 days to expiration at the 92.93 strikes. That's now only in at 12 cents. Gentlemen, and I don't know, would I put down on a dollar-wide strike for 12 cents? Never. So, okay, there's some things that are potentially, workable here. Do I want to use this opportunity to reset the iron condor now that we've re-entered the range? It's only a 20.5 IVR, and raw volatility across the curve, isn't substantial. I see in the 40s as we're going out into the X. We're rolling past September 17th from the V into the X. So if you're sticking with a typical 45 and 21 out, I guess the 51 is where you're looking, and that's only giving you 47% IV. It's not a move that's giving you things above the recent lows or above the recent highs or below the recent lows. So will compensation be there? I don't know. I may just stay away this time. I don't think this is a roll candidate.
Yeah. I said yesterday that if we got a drop in the X contract, which is where I'm at, if we got a drop to 80, I would just close this position. So I've got the MCL straddle at 80, and you knew that if crude was dropping, especially this contract, towards 80, then we probably saw a calming of everything overseas with flattening of the curve and that's exactly what you're seeing. If you look at now, the backwardation is less than 2 points, only 1.5 points between the 23 and 51 day. But more importantly, these back months here are much lower than they were, especially in the main contract. 73.27 in both of the April and May contracts, the lowest we've seen in the last couple of weeks here.
I mean, look, actually, you can get compensated. In the X contract, the swing high is going to be up near 88. The low is going to be near 72. So if you wanted to go to 89 and 72, or 71, I should say, for your short strikes and go a dollar wide on each end, you're going to get 41 cents of credit, which isn't bad on a dollar wide strike, to be clear. But you're making the bet that this thing stays pinned and we're not going to go to new highs or new lows. I felt better about that a few weeks ago. Now with Bessent's economic D-Day, which I don't know, didn't really seem like a D-Day. We don't really, we find ourselves now at a crossroads. Is Iran going to step up war efforts again because they're being strangled economically? We'll see.
Yeah.
But I don't know, 20 IVR, it feels light for oil given what we've experienced in recent months.
100%. That's why I'm not in it, actually. I mean, this actually probably, I don't know the actual number, but this seems like fair value for oil over the last several months. I mean, given all the movement we've seen over the last this year, it seems like fair value to some degree. So it's one of the reasons why I haven't done anything because of that and because of the fact that this is kind of low volatility wise. So it feels like it could go $10 in either direction from here.
It could. And I have a legacy CLZ6 position on that I'm tempted to take off, which I guess I got in at 81 cents and right now it's trading at 58. It was a little bit better yesterday, but it's 84 days to expiration. So this thing is just a slow bleed. I'm comfortable with it because it's underneath the lows for oil after when the war started. But we're getting into that window where if we get another pop in oil here, maybe I should have taken it off yesterday. I was busy yesterday in the city, so I wasn't really paying attention to it. But if I take it off yesterday, I probably could have gotten close to the 50% decay. And with the 84 days to go, what the heck am I doing holding on to it? That's capital that could be redeployed elsewhere.
Yeah, you were at the stock exchange yesterday, right?
Yes. Made a little trade. Part of the company needed my time, and I said, I can give it to you if you give me some stuff for Tasty. So we have new show bumpers coming.
Nice.
Which is great.
Very nice. That place is popping.
Lots of me going, you're watching Tasty Live up next, confirm and send, and stuff like that.
Oh, yeah. Love to see it.
Yeah.
Yeah, I mean,
we went down to Stone Street, got some beers, interviewed some people, thoughts on AI, the economy. Lots of people in the Wall Street area very optimistic about AI's impact on the economy. Shocker.
Mm-hmm.
Don't say. But yeah, I like that area a lot. So a buzzing energy for sure.
Yeah, and yesterday, and it was actually a good backdrop because when we were doing these interviews, one of the places on Stone Street, it was their Lobster Fest. And so they had these like tables and tables of people just sitting there eating lobster and line around the block of people waiting to come get their lobster. And it's like, yeah, you would just have like a lobster day where there's hundreds of people eating lobsters on plates right off of Wall Street. Well, we're dealing with the cost of living crisis elsewhere.
Right. That sounds about right.
Gas is $4.50 and this company's giving away lobsters. Like, what?
Everything is great.
I think that
downtown everything seems great.
Checks out. Yeah, I mean, yeah. I think I'm gonna have to force close this USO position because I don't want to be in it as it continues to slide. It is already down $5 today. It closed at 132. It's down at 128. On the open here, if we stay here, this will still be a winner just because the short option has a lot of extrinsic value, but it'll probably drop below $500. But I'm just gonna close it just in case we continue to slide and flatten out the curve, which is going to be bad for the price of USO. That's for sure.
Yeah, gentlemen. I mean, I honestly think yesterday was one of those days. I feel like today is lining up to be another one. You don't get too many like risk management days, if you will. And just to clean up some stuff, I actually did that yesterday with a lot of different positions, some things that I just had to fix. And I mean, I think, take advantage of it because who knows what we're going to see as the next couple of days unfold here. So I think I did that with SMH. I mentioned before that I've been wheeling out a position in SMH. I had sold a few weeks back a 630 call expiring September 18th for $12.30 credit. Yesterday I got rid of it for $1.76. That was enough decay for me, right? And so taking in about a little over $10, close to $11 here on that is great. Offsets some of the cost basis on SMH, but I have to roll back in because I'm still wheeling this thing out. So I'm back in a 52-day, and this time I'm matching my actual entry, which was 615. But Mike, listen, I take $10 out of this. My cost basis really isn't 615 anymore. It's more like 605 in my head. So doing short the 615 call, if that gets called away, fine, so be it. But that was in at 915 here. So, just using that decay. If I'm short puts, from short calls, volatility has come in. I know it's bounced the past few sessions off the lows near 14. However, if you're short premium and you're at 50%, we're heading into the teeth of the big macro window. I mean, Nvidia is a macro event. It determines the global sentiment around the AI trade. And then we have Jackson Hole. So vol's low. You could argue complacency is there because this is a market that's like, there's no substantial put skew. You look at SPX options, there's still call skew through the end of the week. VVIX is exceptionally low. The move index is low. Right? Maybe it's low for all well-intentioned reasons. But if there is something that's going to destabilize prices and shoot up vol the next few days, like this is the period of time for it to happen. Next week is the week before Labor Day. It's the final week of summer. And there's no real macro events on the calendar. And there's certainly no earnings on the calendar. So this could be the thing that sets us in the direction for the next 5 or 10 trading days before liquidity returns that first week of September.
Yeah, I think making adjustments now, especially in the September cycle, is something we want to keep our eye on. Like this, I have this 7,800 to 8,000 strangle in MES into this rally. I'm looking to roll that 8,000 call down to the 7,800 to make a straddle. I'll pick up another, there you go, just got filled. Pick up another $200 in extrinsic value premium. but it's kind of a win-win, right? I hedge the position in the U contract by going to a straddle, picking up some more value. If we sell off, I'll just roll the straddle out to the 52 day and just get into the new contract. But if we rally, I'll just buy this back at 7,800 and then probably roll it out to a new strangle where I have the short option, the short put at 7,800, and then I'll have the ability to go back to a strangle up here and do like a 7,800, 8,000 strangle and get rid of that straddle. So just always reducing cost basis, piling up the credits. You can't really go wrong, especially over time as markets move, and hopefully you get your product back in the window of profitability.
Yeah, I moved my M&Q strangle yesterday from regular SEP to the SEP 30 cycle as well. So yeah, it's that time. Rolling out.
Yep.
Rolling out. Yeah, and changing. Like I have some things here, like Procter and Gamble. I've been rolling the 140, 145 short put spread. That was in at like $1.74. I think it's now at 88 cents pre-market. We're getting pretty close. PG has not done anything for months. It's actually one of the great things on dips, sell put spreads, because it's been pretty stable above 140. And it's a staples company. Like how consumer staples don't move around violently. So now that we bounce back up to the midpoint of the range, I'm going to take off the put spread. I'm going to put back an iron condor. If it rallies to the top, I'll take off the put spread side. We'll see if it can fall back in the range. Just continuing to play ping pong here. Like Jermal, what was that game on Atari? Pong?
Yes.
Right? We're playing Pong here in PG between like 152 and 140. So now trading at 146, it's the midpoint of the range. It's not a ton of volatility here, but if you can still get something that's like a third of the width of the strikes, it's yeoman's work. You do it, you move on. So that's kind of how I'm approaching this right now. I think we're all on the same page here that it's a good day to clean things up before the catalysts come down the pipeline and perhaps make things a little bit scarier and hairier.
Is that a subtle dig? Just asking you.
I mean, I'm glad you said it because I was gonna say it, but see, I don't want to be that guy. But I'm glad you said it.
It was
like, oh,
what's that dig?
Ancient
Let me ask the old guy. You remember Pong, right? I heard it.
What did the ancient scroll say, Jermal? Tell me.
I heard it.
Oh man,
I heard it.
That was good. I also know what Pong is.
Yeah, Mike knows what Pong is too, by the way, Chris.
Yeah. Sorry.
But if you ask Gus or E, no chance.
No chance.
No chance.
No.
No, sometimes I mentioned this the other day, but with these guys, when I ask them questions, like with you guys, it's an earnest, like, oh, have you seen this?
Yeah.
But with them, it's like, please tell me you've seen this because see, that's what you guys are. I don't even ask them. I don't even ask them because I know that they probably have no idea the things that I'm talking about. Unless they're talking about something. Yeah, Pong was the old school. Unless they're talking about something more current to bring it more current. GTA 6 coming out. I'm hyped, man. I'm gonna buy this game. This is the one thing I can't wait.
that I kind of. It's not one. There's getting to be many as my older kid gets older. But my boys. I had 3 kids. Two of them are my bookends are boys. It's like the thing that I would say easily we have in common. Like we can share common interests. I'm a video game dude. For a lot of people who don't know, I love video games. We share that thing in common, so I'm hyped for that when that comes out. Apparently, I saw yesterday. Apparently, there's a nudist colony in the game now. And I said this to my oldest last night. He was like, oh, they had one of those in the last game. I was like, really? I don't remember that. And then I guess there was one a part of a mission or something. I really don't remember it. But look, this is why I love the game. Not because of nudist colony, because it literally has anything that's similar to real life. I mean, I always thought it was the greatest game ever. The fact that you can drive so many different cars, you can own homes, you can play the stock market, you can, gamble. Like it's crazy.
You can pretend you're the owner of the 49ers if you want.
I love the way that you just laid that out. Oh God, I wish
the meme. The meme of the Lamborghini and like the shanty. Okay, that's Jed York.
Yeah,
I think I should get off air before I go further with this.
It's such great content. Oh, damn it! Why can't we talk about it? Oh.
I mean, think about all like the things along the way that you're like, okay, I got off the highway. It's like the seedy road. There's a gas station with the lights flickering. Like now I'm in a trailer.
He was at home. He's from Ohio. He was at home. He was at home. He knew what he was doing.
In honor of the new
This
GTA.
wasn't the first time.
Yeah.
This is not the first time.
Nate Silver pointed out that the 49ers are now the Mets of the NFL, which to my San Francisco fans, I'm so sorry. You don't really want that.
Oh God. You know that meme that they show of Tom Brady when like somebody's walking in the room and he goes like this and he's like excited to see them. Yeah. I saw somebody do that one yesterday. If we could find that meme, Ben, pull that up. I saw somebody posted it yesterday, like at the next owners meeting when Robert
Kraft.
Yes, when Robert Kraft sees him and he's like, that's at the next owners meeting and Robert Kraft sees Jed York and he's like, he turns around. That's so good. So good. Oh, God.
NFL owners, they just do what they want, don't they?
Hey, look, that's going to be interesting, man. How is he going to get disciplined? What's going to be? Supposedly they hold owners to a higher standard. Oh, yes.
Jerry Jones has.
Oh, that's great. This is great. Yeah, that looks accurate. It looks like accurate. How is he going to get disciplined? It's going to be great.
Have to sell. Listen, speaking of sports controversies, we should all be so grateful that Mark Walters royally screwed up his businesses. You know, here's a funny thing about the insurance industry, right? If you take client money, one of the things that you can't do is like invest in your own business with the money that you hold, because that's a lot of risk. You're supposed to spread it out and diversify. So what did Mark Walters do? He used a bunch of money from his insurance companies to buy up all these sports teams. So using financing to self-finance, which, problematic.
Didn't Matt Ijioma do the same thing?
Matt Ijioma borrowed money from JP Morgan, which he guaranteed with his own stock. And when the stock's down 90%, he actually got a collateral call last week. So the Suns could be on the block soon too, which, the Cleveland Cavaliers owner, Dan Gilbert, that's like his mortal business enemy. They hate each other in the mortgage space, which is really weird gossip to know, the business world. But like Dan Gilbert and the Cleveland Cavaliers are over the moon. What's happening with Matt Ijioma? Anyway, how did we get here?
Something sports. Look, it's relatable.
Shohei Ohtani,
GTA,
Shohei Ohtani,
TTWO. I mean, we can.
No, here we are. For Mark Walters and all this stuff going on with the Dodgers. If Mark Walters sells the team or Andrew Friedman is no longer the GM of the Dodgers, Shohei can opt out of his contract. So let's all calm down. Let's not get too excited, particularly if you're a New York Mets or New York Yankees fan. But there may be a world where all of this corporate malfeasance comes back around.
Well, it's funny. We are making jokes about sports, but look, there's always a tie-in. I mean, you talk about Shohei and these contracts that they have in baseball that go out to, 2050 right now. I'm not even sure what year they're out to, but it's almost like selling bonds, right? It's almost like
check out the companies. Check out the Braves. Right. The Braves are a publicly traded, traded company. The market's been piling.
Batra.
Batra, yeah. People have been piling in short into Batra here. If you look at short interest in the stock in recent weeks, because it's a way to play a potential lockout. Because obviously they're not going to make any money in calendar year 2027 if there's a lockout in baseball. So, there are ways to play this. Listen, maybe I am.
Wow, this stock is up here.
I totally forgot about the NBA lockout. Place. That was crazy.
The NBA lockout? I remember that. We were trading at that. I remember being on the desk when, they had the pickup games. They had like crazy pickup games.
Yeah.
I remember being on the desk when they stopped the lockout. But I guess this could be a way to play a lockout. Is this thing even liquid though? Probably not.
No.
Yeah, not too many.
Which means more risk, more opportunity there. So you can definitely buy a put. However, no one may be there to take it off your hands.
Look at us as a bunch of traders, just always finding ways. Talk about finding alpha.
I did not have this on my bingo card, getting to Batra stock analysis.
Yeah, I know.
Just look,
you know what? Hey,
Frankie
asked that to the chat. Frankie asked me, the question is, will PCA beat Ohtani for the MVP? I asked that to the chat. I want to know. Poll the crowd.
Yeah.
I want to know.
If the Cubs win the division, for sure.
I guess my son was like, my youngest, he was like, is PCA better than Ohtani? I said, son, we are Cubs fans. But no. We're not going that far. He might be better than him this year, but no.
I mean, listen, it's not close. Ohtani's cumulative WAR this year is 4.1. PCA's is 4.7.
Yeah, Ohtani's not been great batting. His batting has not been good.
Yeah.
Now,
Relative to where he should be.
PCA's value comes from his defense. He only has 110 WRC plus, which is like the standardized, index to 100. Ohtani's is 162, and he's also pitching like a Cy Young candidate. So never mind. I retract that. It's Ohtani's to lose. So.
I'll tell you what, though, in this town, man, that dude, his jerseys are everywhere now, for real. I'm watching young ladies with preschool kids walking around the area, and they have the jersey on. I mean, it's everywhere.
You go to Japan, it's like every street corner is Ohtani.
No doubt.
Insane. But
next time I'm in Japan, I'll check that out, Mike.
Good. You got to go to Japan.
Yeah.
Especially with the Japanese yen so weak.
Yeah.
Bang for your buck.
Basically paying us to go.
I get a whole lot for $140 there.
Oh, absolutely. It's crazy. You get a whole meal. It's like $20. It's nuts. But Chris, appreciate your time. That was fun. And I think your Mets are playing this afternoon or maybe tonight, but hopefully they can squeak out a W for you.
I have to catch up on House of the Dragon and then Lanterns, which
Priorities.
Pretty good.
I just started Lioness on Paramount Plus. That show's crazy.
Season one is very good. Season 2, you're like, okay, a little off the rails. Maybe it can recover. Season 3, you're like, this is not what I was watching.
Okay. Well, I'll just
enjoy.
Maybe I'll stop at season 1. But season 1 so far is insane.
Season one is great television.
Love it. Well, we will take a quick break here, Chris. Appreciate your time. And we'll see you all a little bit later. We're going to take a quick 90-second break. You're watching Tasty Live. What's up, everyone? We are back, and we've got Gus in the house for some morning movers. As always, Gus, how you doing?
Good. Got to sleep way in today. I don't know.
Oh, yeah.
I don't know how you guys do this every morning. I got to roll out of bed at 6:15. It was glorious.
Yeah.
Gus was the hardest working man on Tasty Network. It started and
It
closed.
was a load of day yesterday. I owe everybody a lot for the Alaska time. I gotta make it back up. Happy to do it. But yeah, feeling good. And Ohtani's the MVP. I think. Hey, what's PCA's ERA?
That's a great question.
That's my question. But yeah, we got a few big movers this morning. Kicking things off, the biggest mover of the morning by far is Dick's Sporting Goods, which is tanking this morning, down about 15%. Actually, closer to 19% now. Just continues to slide in pre-market trading here. Just terrible earnings report. I mean, about as bad as you could possibly have. Miss, lowered guidance on everything. They did see 4.9% comparable sales growth at Dick's stores, but Foot Locker and all the Foot Locker stores, there's a whole suite of those, Foot Locker, Finish Line. There's a whole bunch.
Champs still around?
Champs is one of them. Yes. Those were down 3.6% in comparable sales. So that kind of offsets the one good thing that Dick's did have going for them. Lowered full year net sales outlook, revenue, EPS, everything. So bad run at it for Dick's here. This is typically the type of earnings move that I would like to step in front of and get long. Don't know if I'm going to.
I agree.
This is all very, very bearish news.
It doesn't make sense to me. Like I was saying to Mike, I mean, I go to Dick's Sporting Goods now. I don't know. I go to Dick's Sporting Goods now, and it's mostly revolving around kid sports. So it doesn't really make sense to me unless it still doesn't make sense to me. If people are ordering online, I don't get it. I don't really get it. Surprise. It's a big move.
Yeah, I think it is probably just a shift to people ordering online. It's much easier to go direct to consumer or whatever. If you need a pair of cleats for your kid, just get them on Amazon or Walmart.com or buy them straight from New Balance, whatever. I think it's just, online shopping. I mean, Dick's has been behind in e-commerce. Dick's and Macy's are very similar to me in that regard. I've always said that. Even though Macy's has caught up a little bit, they got a pretty good return policy now. But it feels like they're both just the giant retailers that kind of missed the big e-commerce boat and have been playing catch up ever since.
Is Dick's going to go the way of like Best Buy? Best Buy, you guys know, Best Buy was like a movement, dude. Like Best Buy used to be a really big thing and go into those stores. And then now it's like nobody goes into a Best Buy. You just order everything online.
Yeah, I think that's it. I think that actually explains why Dick's is so kid oriented. Because remember when you were a kid and you went to Toys R Us?
Sure.
It was like the best day ever because you walked in there and there's toys everywhere. That's probably why they restructured to be kids oriented, because if you tell your kid you're going to Dick's Sporting Goods to get new sports stuff, they're going to be excited. Where adults just buy it online.
Sure.
I don't walk into a store unless I really have to. The only thing I want to go get is new cologne. So I will go to an Ulta. So maybe I should just put my mortgage on the Ulta. But I will go to an Ulta to go test out some stuff.
Yeah.
But if I need something from for golf or whatever, or new shorts, I'll just get online.
Yeah, I think that's a good point. Even the colognes, they're trying to run that out now. There's Scentbird and all these other companies that'll send you 10 samples, and then you can buy the real one if you want a big bottle.
Oh, no kidding.
But yeah, that is.
They're little vials.
Yeah.
You can get 50 little vials.
Yeah,
you can get it on Amazon too.
Yeah, Amazon will do it. Yeah, just all your samplers, and you can try them that way.
It's funny you say that. You talk about Ulta because these other places that exist that you can buy cologne. I don't like going in those places. I feel like I get hassled. I mean, seriously.
They do press you pretty hard. Especially if you go to a Macy's, it's I just want to smell some fragrances. Yeah. They're grabbing your
cologne. Buying a car, it's similar. Holy cow! I really get pressured. I don't like it.
It's true.
Lady, I just want to smell good.
Yeah, as it pertains to Dick's, I mean, I don't know. I definitely grew up going to Dick's in Cincinnati, but when I moved to Texas, I was surprised to find that everybody goes to Academy. Dick's is a non-factor at all. ASO, Academy, is also publicly tradable if anybody wants. They're moving down today, I guess, along with the Dick's sentiment. But yeah, I think it's just a space that's becoming ever more diversified, ever more online. Dick's just having a hard time keeping their market share. Second thing, which this may excite Mike personally a little bit, United Airlines has announced their 2027 flight destinations. They are up about 3% on the news. They added a whole host of new European destinations and a number of new Japan routes. From Sardinia to Okinawa is what they said on the press release this morning. So it's they're making a push. They're realizing that there is a shift into travelers booking what are called open jaw flights. I did not know that this was a term. I have done this before, but it's where you fly into one destination and fly home from a different destination, go to Europe and shoot across on some trains or Japan or wherever, fly back from somewhere different. So they're trying to provide more options for people who just want the one way in, one way out flights.
I've heard of that before. I heard it a different term though. I forgot you said open jaw. I've heard a different term for it, but yeah.
I feel like kayak has a term for it that I've heard that's not open jaw, but
yeah.
I don't know. That's the verbiage that United is rolling with on this one. But yeah, there's Slovenia. There's a bunch of different ones in Japan.
That'll be good.
Yeah, I have a full list. I won't rattle off Marseille, Ibiza.
Surface trip.
Yeah, a couple new ones in Portugal, Luxembourg. So yeah, they're a great expansion coming from United, and the market likes it.
Yeah. Well, for Japan, the traditional, if you go there for like a standard tourist trip, you fly into Tokyo from Chicago straight, and then you take the bullet train from Tokyo to Kyoto to Osaka. Like that's the line. But if you want to go back to Tokyo, you got to take the train back, where you could just take a 10-minute car and fly. Like the past 2 times I've gone, I flew from Osaka back to Tokyo to then fly from Tokyo to Chicago. So if they're opening up these flights, now you can take the bullet train and then just leave wherever you want.
Yeah.
Whether it's Kyoto or Osaka, if they have flights back. So that'll be amazing.
Yeah,
There you
exactly.
go, that's the train.
Oh yeah, there you go.
Oh yeah.
Yeah, and they'd prefer to have you united both ways in that situation rather than taking whatever random airline in the interim.
ANA.
Or taking a different airline to just get out of Osaka or wherever you might wind up. So, yeah, market responding positively to it. I'm always a proponent of more destinations. More destinations, more competition in the airline space is good for everybody.
Yeah.
Absolutely.
Last thing I got on the docket, whole semi-space taking a little bit of a move up today. The headline is actually that Raymond James upgraded AMD and said that they expect them to pass Intel in the CPU market. But hilariously, Intel is up more than AMD on this news. Intel up about 3%, AMD at about 2%. Nvidia and SMH both taking a climb alongside the broader move here. Analyst upgrade is not usually something I cover, but it is moving the whole sector that we care the most about right now. So felt that this was worth a note.
Yeah. Up sizably this morning. Strong day. And like this is another one of those products where it's like, if we're going to see just absolute selling in AMD, why not position for a little bullish movement? Maybe you see it. And here we are, up 10 points, 15 points pre-market. It's going to be a nice move here.
Yeah, this reminds me to check my Broadcom position, which it's up alongside everything as well. So,
we like that. Yeah, I got that too.
Yeah, taking a nice little jump here. So whole semi-space getting some life injected into him by Raymond James. $641 price target on AMD as well is what Raymond James is floating. So,
I guess it checks out. Like some of these are actually like within the band. Like 114 points, like it's right there. $600 right outside the expected move.
It's true. I also, analyst price targets always kind of make me laugh because there's no time horizon. It's like
never.
AMD will grow to $641 sometime.
Yeah,
I'm sure. I'm reasonably certain about that. So it's great.
No, it's like college game day, bro. It's like college game day. You can come on, you can call who's going to win these games at the end of the show. Nobody comes back next week and says,
"It's true."
You called for what? Air Force to win? Doesn't happen.
They have started, I think, tracking their season.
They do
records, though.
one of them. Yeah, they do kind of.
It's a little fun. They have some fun with it. But I need analysts to start giving me a strike price and an expiration date.
Good luck with that.
That's what we got to do.
Good luck with that.
Put your money where your mouth is. Also, as I tweeted yesterday, let's pick uniform verbiage across the analyst space, please. All right, I'm tired of buy, outperform, overweight, undervalued. These all mean the same thing, guys. Let's pick terms and go with them. I'm sick of having to think, because outperform and undervalued are different. Overperform, it's all confusing. It's confusing me, you guys. It's needlessly confusing. We don't need to be unique in the analyst space. Just say buy. Just say buy, hold, sell. Please. There we go. Thank you.
This is great.
Let the man cook.
Yeah.
I love that.
Yeah.
Yes.
Analysts.
I have these thoughts weekly.
And you can actually see, if you go to the news and research tab, if you go to, where is it? There's somewhere here.
Their ratings.
Yeah, you can see like the analyst. I thought it was here.
I'm sure.
But yeah, you can see all this stuff. Income statement, balance sheet, and all the jazz related to AMD. News, fun stuff. But yeah, this is an interesting turn of events here for the semis.
They got their corporate address on there. We're just dox them.
Yeah, just in case you want to visit.
Yeah.
Everybody send a physical letter to AMD and ask when they're going to be at $641.
Yeah, let's see what they say.
Pretty soon. With the balance sheet rising, revenue rising. Love it. Net income rising. Come on. $600, no problem.
Santa Clara. It's not a real place. It's so crazy. I remember being there once. I think it was before I was at Tasty. I might have been with SIBO still, but I was doing like a live show event, whatever, talking about options. And I just remember, I don't even remember what company parking lot I was in, but some robot just was rolling around. And it was the first time, this was like 2018 or 2019. I was like, wow, that's interesting. Just watching this robot like roll around the parking lot. I don't even remember what it was doing, but it's just not a real place.
We got those little food delivery robots all over the place here.
Yeah.
I help them sometimes.
I remember first seeing those in Cali. And so, yeah, seeing them now, it's a trip.
They're expanding. I'll never order food through one of them. Every time I see one, they're stuck. Maybe there's a survivorship bias going on here just because the stuck ones are easier to spot or whatever, but they're stuck so often. Also, it can't come to my door. A person comes to my door in my apartment. I'm not going to the street in the snow to meet this robot.
Do you get the opportunity to decide whether you order from Joel or not?
I don't know if it's these Joel ones specifically,
How do you know?
It's on DoorDash. It'll say
so
robot delivery.
it's DoorDash specific. Okay,
Yeah,
so I don't order off of DoorDash.
I manually decline it, and then they give me a pop-up that's like, why don't you want a robot delivery?
It is funny though, because like all of these have unique names, so it probably says like Bianca's delivering your order.
Yeah.
Who the hell is Bianca? And you're like, oh, Bianca's a robot.
Yeah, but I do like they ask you for help. If they get stuck and you go walking up to one, they'll say, "Can you help me?"
And then you help them,
good.
and they say, "Thank you."
You help them, and they say, "Thank you," and then they go rolling away. It's great. I like they put the eyeballs on the front to make me have more sympathy for them too, and it works.
Yeah, clearly.
Do they give you sad eyes when they're stuck?
I don't know. That's a good question. Yeah, there's
I love the Coco. Yeah, the
Nobody,
Coco
I mean, I've never seen anybody messing with these. I'm sure people do, though.
Oh,
Dude,
surely.
Every time you walk down Ogden, there's at least one or two that are just rolling right by you. Ogden is the hot spot.
Ogden.
Yeah,
They
you're
are,
right.
They are hot on Ogden.
Yeah, they do go down Ogden.
Yeah, I mean, if I were homeless, I'm whacking these things.
I mean, you know what I'm saying? Like, that's what I'm getting at. I'm surprised.
I mean,
yeah. What are the repercussions?
Yeah.
Yeah.
It got to be hard to crack into, I guess.
It might be.
Like a safe, a rolling safe.
I would imagine, yeah.
Yeah, because I don't see any messed up ones just hanging out, like knocked over.
Yeah, I've certainly
on the
never
ground,
seen one
right?
that looks
You haven't
like
seen
somebody
that.
beat it up with a baseball bat or anything.
Oh, well, here we go.
Oh,
This
well,
is.
that-
Oh, yeah.
Wet cement.
Well,
That is not ideal.
That's just a trap. I don't even.
that's also in the suburbs. I've never seen them in the suburbs.
It is. I like to make fun of these things, but I don't know what it was supposed to do in this situation. That's just unfortunate.
It's tough.
Need more
Yeah,
caution tape.
Just miscalculation.
Yeah.
It's bad for all parties. Somebody's waiting for their food. The concrete guy's got to show up tomorrow and look at this.
To be fair, though, there's something that doesn't look right about that. I mean, why isn't it on the sidewalk? It looks like it's coming from the street. That doesn't seem right.
It is, yeah.
I don't know.
those
Is it
things
coming
are
from the
road.
street and turning in the
Maybe it's
driveway?
crossing the street.
There's a lot of questions here to be answered.
It's true.
I don't
It's true.
understand.
I saw one. It was like midnight. I was walking back from wherever I was, and there was a gas station. The gas station on Ogden, and there was this one that was just ripping around, like speeding through it. I'm like, what is happening here? You got a rogue Coco.
That's the first sign. Things are going off the rails.
Yeah, it's true.
Terminator 2, man.
Yeah, they're going to put ChatGPT in these things, and suddenly they ain't going to be asking for help animour.
No, be asking.
All of a sudden, they got pistols on
They're
them.
going to be tapping into their database and everyone that walked by when they were stuck. And damn it, I won't be in there.
Oh, yeah. Do you get sued there? Do you get sued in that situation? I wonder. That's
Who's
Miami,
sued?
by the way. That's Ocean. That's near Ocean Drive. I know exactly where that is. I'm not mistaken. That looks like Miami.
Yeah, I see some
A couple of blocks off of Ocean Drive.
Yeah.
I know that Walgreens.
That's about right. Well, Gus, appreciate your time as always. And yeah, we'll have to look at some of these products, see if we can catch a bid here. AMD up 15 points. Love to see it. It's well off the highs of around 560 that we realized just a few days ago. So yeah, we'll check it out. But we're going to take a quick 90-second break here, and we'll be back on the other side of it. You're watching Tasty Live. What's up, everyone? We are back, and we got a packed day for you with today's scheduling. And we pull it up here real quick before the market opens. In about 8 minutes, we can run through it one more time before the mayhem of the equity opens.
Ensues. That's right. Opening bell in a little bit here, about just under 8 minutes. We got live trades with TP at 8:45 a.m. Central Time. Trading charts with Tim Knight at 9:20 a.m. Central. Tasty research at 9:30 a.m. 10 a.m. We'll flip over to Chris and TP for confirm and send. Risk and reward will start at 10:30 a.m. Central Time with Gus and E. And then, of course, we got trade ideas of the day. You don't want to miss it. Be there.
Yeah, it's going to be quite wild. We've got the E-minis up 2750, NASDAQ up 215. So far this morning, closed this MCL straddle, the 80 strike. We can see here, I initially sold the 76 put in the money when oil was down at like 73. 4 days to go, $3. Rolled it from a short put to a straddle out in the 21 day for another 255. Then I just rolled that out in time from the 17 day to the 50 day for another $3. Then rolled up the 76 that was in the money. I think oil was at 77 at that point in time. So I rolled from 76 to 78 for small credit. Oil kept rallying. Moved from the August 78 to the 80 out in September. So rolled up and out in time and moved either at the money or in the money at that point for another $3. And then rolled from September to October for another $3. And then oil now just retreated back closer to 80 and I closed the whole thing for $424. So just another example of just following the market, not taking on too much intrinsic value, and then getting the move towards your strike over time where you can just exit the position. Nice whip.
Beautiful.
Love it. Love it. And then, other than that, made some adjustments to the MES position. So I moved this one here, the MES U6 to the 7,800 straddle. So I just rolled the 8,000 call down. And again, we're 100 points out of the money, or with the call side, we're 100 points in the money on the put side. But if we sell off, I've already reduced basis more than I had. The original call was basically worthless. So I add another $200 in premium here. If we get a rally up to 7,800, I'll just buy it back, roll it out to the October cycle and just move it up to a strangle or keep it a straddle. We'll see what the credit looks like. But same story, just pile on credits, never pay a debit, and just follow the market and we'll be good.
What's that roll market look like? 65, 66 points. Okay, just curious.
Yeah.
It was like a little over 250 for the MNQ roll market when I rolled that yesterday. Not quite 300, close to 300. It's about yesterday. Yeah, when I shifted up yesterday, I ended up shifting it up by 250 points to be able to collect a credit. So.
Yeah. The 31,000, 3125, 31,250. So yeah, that's basically it. You can do whatever you want here, but really the name of the game is for this position, keeping neutral to bullish delta, piling on credits. It's been a good trade.
And just know the multiples. Like in the case of MNQ, it's 2 times. So that 87 is actually in real dollars 174. And then in the case of what Mike rolled, whatever that credit is multiplied by 5, you get the actual real dollars of your credit.
Yep. But yeah, we'll have plenty more positions to adjust here on the open, most likely. We got about 3.5 minutes exactly until the equity market opens. E-mini's catching a bid here, up 30, NASDAQ up 230. The Dow is up 240, and the Russell is up 0.5% as well. Bitcoin hasn't moved at all, which is kind of crazy. Like literally hasn't moved.
I think it's kind of sat in the same spot, it seems like.
Yeah. Over the last 15 minutes, this thing has had a 100-point range. Nuts. Basically nothing.
Mm-hmm. Well, you would imagine. I mean, again, it is one of those days where people, I felt like yesterday people were adjusting positioning, and I feel like this is going to be a similar type day. And we've seen these. It does feel like that's what's going on here ahead of this. What people believe are some pretty big catalysts. We'll see.
Yeah. But yeah, we've got a handful of earnings coming up after the close today. We've got Intuit, CRM tomorrow, Nvidia tomorrow, CrowdStrike tomorrow, Workday on Thursday, Dollar Tree and Dollar General before the market opens on the 27th. That'll be interesting to see with the inflation story going on. And then Dell, September 1st, after the close, which is a Tuesday, I believe. But yeah, we have a YouTube chat question we can pull up here if we get a second. What are you going to do with the MES position with when new expirations go away? So, so this is a scenario where MES options are going from physically settled to the contract. The contract cash settles anyways, so it's not going to be too crazy of a position, but ultimately the new options will settle into cash. So instead of like this put, if this put 36 days from now is still in the money, I would be put the contract MES Z6. Now these options are just going to be cash settled. So it's going to be very similar to like SPX where everything is cash settled. So what's going to happen is most likely is similar to like a product that has had a split. I think UVXY might be a good example. So here you go. So UVXY, there's this deliverables tab. So when they have a planned split, so it looks like UVXY has had or is going to have a 5-to-1 reverse split where you have non-standard 20 shares of UVXY, standard 100 shares of UVXY. So that's probably what's going to happen is when they introduce the cash settled MES products, you'll probably see a deliverable here. So I can just roll into the new cash settled product. Like it won't be anything different than that, from what I understand.
Mm-hmm.
So I'm not worried about it.
Yeah.
And yeah, I think when that happens, then we'll have the new liquidity product, and we'll just keep rolling. And the product's going to be the same. It's just cash settled instead of settling to the contract.
We'll still have options to trade.
Yeah, for sure.
Seems like it's going to be a quiet open here. Yesterday, volume-wise, ended up being like 928,000 or something like that, just under 1 million, which, again, goes along with the thesis that I feel like people are checking and changing positioning as we head into the open.
Yeah, that's good. Okay, we got out $425 for USO.
Yeah.
Just got out right on the open. So that was a nice fill there. And yeah, hopefully that saves me from continued selling here in USO. But yeah, USO is going to continue to sell off if crude oil continues to sell off and the backwardation continues to flatten. This is the most flat we've seen it, about a point and $1.40 between the 23 and 51 day. It's been over $2, closer to $4 over the last couple of weeks here. But most importantly, these back months here dropping to 73. These were like 75, 76 in the back of the curve a couple of days ago. So this tells us, I think the flattening of the curve and the sell-off in crude and really the lower print in the back month tells us that things are starting to, at least being perceived to be calm in the later half of next year.
Mm-hmm.
What else is moving here?
Yeah, that's what I'm kind of looking at. Like Gus mentioned, AMD kind of lifting the space today for a lot of tech and AI related names. SanDisk is up. WDC is up, as you would imagine. Meta making a move here, up $8 and change.
Yeah.
Yeah, a lot of those semi-related names. STX, as you would imagine. SK Hynix, Micron is up. As far as Mag 7's, the only one that I see that is in the red is Microsoft. But a lot of the tech space is up today. We'll see what that means for anything that is not tech, and I think those are down. They had their day in the sun yesterday, so yeah, they're down. Walmart's down, Pepsi's down, McDonald's, Costco, Kroger, all of the usual suspects. Gold and silver down, which is different than what we've seen over the last several trading sessions here, and Bitcoin red as well.
Yep. Yeah, interesting movers in the NASDAQ 100, Marvel, SanDisk, AMD, WDC, sector rotation back into those products. Let's look at the...
Looks like Nike is down on Dick's earnings. Yeah.
Oh, yeah. Leading the way to the downside, down 3%.
Lulu also down. Wow. It's a sector rout.
Yeah. Indeed it is. This Iron Condor, I've got this Iron Condor here. I'm trying to work in order to close this thing. So this is like 24 days to go. I've been in it for 33 days. It's literally in the money on the call side. If I can get out of this for a profit, I'm just going to close this thing. It's marking for a $200 profit right at the money on the upside. So if I can get a profit in here and really just get anything out of this position, I want to do it because another 20 points to the upside and it's fully in the money.
Yeah.
So we'll see if we can get out of this for something around $200. See. But yeah, that's something I want to keep my eye on, especially with it being right at the money.
You know what's weird is SPX options aren't open. That's very strange.
Yeah. Very odd.
Huh. And they're very wide. What is going on?
The SIBO floor has got to be going nuts.
Dude. Like what?
Meta position here. So Meta, I put on a call calendar spread when we had that sell-off in Meta. Just playing for a continuation to the upside, just kind of a longer-term positioning. If we look at the daily chart in Meta, we sold off all the way down to basically session or annual lows here, down to 540-ish. We've rallied back since. This is now a $200 winner. I think I'm going to try and exit this thing. Just take some risk off into this interesting, crazy day. But we'll try and get $180 exactly out of that one. Apple catching a bid also. But I think really the story for this portfolio is just keeping an eye on some things that they're moving around. And anything with a P&L day over $100, I look at. And if I get a P&L open that's sizable, I see if it's worth a close. But that's basically it.
Yeah, same. And in the reverse direction.
Mm-hmm.
And it tells you a lot about the portfolio. It tells you what's working, tells you what's not.
Yeah.
In my case, it looks like a lot of the stuff that's down is consumer names. I mean, Pepsi. These are things that I'm long. Pepsi, Home Depot, Kroger, Nike, McDonald's, Costco. That's why it's always kind of easy to formulate that story early in the morning. SanDisk, I'm up. That's a call butterfly. Western Digital is a shortfall play that maybe I start to think about closing, but I don't know. It's been working out great.
Yeah, WDC been flying around up 3.5% right now. And another one that's sitting at annual lows almost, or the last couple months, I should say.
Pretty quiet.
Yeah.
Relatively speaking.
These ones are still 70% IV. Like, these ones are interesting candidates for an upside butterfly, I would say. 24 days. Let's see what this is.
Most definitely.
Yeah, this is, I mean, the premiums like so similar. 460, 480, 500.
That's why I did it in SanDisk for the 24 days. And I did it further up, and I centered it around 2,000. Because, these have been really, really quiet. I don't anticipate they're going to be quiet for the next 20 days. I just do not. No. I feel like they've already been quiet for 20 days, honestly. Not even 20 days. Just about, actually. Ever since we had the big earnings on the 30th and whatever, 29th and 30th, and maybe the week after, things kind of calmed down, and we've been in this lull period to some degree. We've had days where SanDisk has obviously moved like $100+, but it's been back and forth. It hasn't been in one sustained direction, is my point.
Yeah, this is...
SPX options aren't open, bro. What's going on?
This is kind of wild here. Yeah, I don't know what's going on there, but the September butterfly, the 450, 500, 550 is trading for $8 for 24 days. You just cover the entire upside implied range.
I know.
I gotta get into this.
That's why I did. And again, you got a lot of time, and it doesn't, change that much. I did one in SanDisk for $9. I was actually trying to buy more of it yesterday because it tanked, and I was trying to buy for like half, like 450, but I didn't. I never got it filled, and then it bounced.
I think 850 is I think the highest I'll go.
The $9 I paid in SanDisk, it's $150 wide fly.
Yeah, it's crazy.
Yeah,
I mean, it's just really it just takes advantage of this crazy call skew. You can see it here. Like, the premium drop off on the downside is so substantial, but you go to the upside and all these options are trading for thousands of dollars, like all the way up the chain.
Yeah.
So an upside butterfly, if you're able to sell this premium that's similar value to the one you're buying, it's going to create a cheap butterfly. This is an $800 butterfly with a max profit of $4,000 with 24 days to go, and you literally cover the entire upside range. So if there's any upside movement near or to the expected move in WDC, this will be a couple $100 winner, at least. 850 I was filled in WDC. Also got out of that meta position for $180 winner. Closed the USO position for 420-ish, I think. And then made those adjustments to MES and closed MCL also. So just some risk management here. Yeah, USO was a $426 winner. Meta was $180. So yeah, just taking some risk off, freeing up some capital ahead of Nvidia earnings. I did place an Nvidia call calendar spread here, 220, long November, short the 3-day, and just went out as far as I could for Nvidia. In the trade of the day yesterday, I just said this is going to November just gives you another ace up your sleeve if you want more defensive mechanics. So like after the earnings announcement, if we get a sell-off or a chop, I'll buy back the 3-day, go to the September cycle. If we still don't get the rally I need, I can go from September to October. Where if you went to October, you're going to get a bigger vol crush. You don't have the ability to roll into October unless you go to a vertical spread, which just slows down the trade entirely. So yeah, we'll see what happens. But hoping for a rally for Nvidia, but I've got plenty of defense in case that doesn't happen.
Yeah, and there's going to be plenty of things moving on those earnings, that's for sure. There's going to be a lot of other things going on.
Oh, yeah. Especially after 7 straight days of just selling here.
Yeah. 7 days in a row. It's not nothing.
But yeah, E-mini still chopping around here, up 25 points. NASDAQ up 211. The Dow and the Russell are up as well. And Bitcoin is finally trying to continue its bid for that 80K mark.
UAL is up 2.5%. Gus mentioned that before the open about the international flights. Stock is jumping higher.
Yeah. Love it.
Well,
Love it.
Dick's down 22% now. Real. And it's ugly.
Yeah, I think it's time to get into some United. Why not? Show the company some love.
You all
130. Yeah, I think it's just a standard long Nove short October. 120, 130 for $6. Standard setup. Instantly
cookie
filled.
cutter.
Hate it. 595. 10-point wide diagonal. Long November, short October. October is right at the expected move here, which is typically what I do is just sell the expected move option, buy the at the money option in the next cycle. And anytime you can pay half the width for a diagonal spread, it's a good risk reward if you get that directional move to the upside. So we're in on that. And yeah, I think that's pretty much it for what's going on in this morning session for this portfolio. But yeah, UPS, WDC, Walmart, some interesting names there. And then the earnings watch list, if you want to check out what's coming out today and the rest of the week, we've got the earnings, all earnings tab. You can look at the earnings and sort by date. So yeah, into it. Coming out today after the close, 27-point implied move, $366 stock. So nothing too crazy. Still pretty high though. That's like 8%, 7% of the implied move. And I think really what's interesting is you've got 27 points for this week and only 44 points for September, only 50 points for October. So plenty of implied volatility, lots of implied volatility being priced into this near-term cycle. 94% IV when you adjust for time. And if you look into its implied volatility chart, we haven't gone lower than, if we look year to date, we haven't gone lower than 50%, really. Yeah, so this is 48%, 50%. So if you look at the current cycles, 54% still elevated because of this earnings announcement. I would expect that this drops to 50%, somewhere like that. Maybe a little bit lower into the high 40s, but I think that's a good gauge of implied volatility collapse. So 4 percentage points is not too much for an earnings announcement if you assume it's going to stay around 50 or into the high 40s.
It's crazy when you look at the chart. I mean, this is one of those names that's a software name that has, been beaten down. But look where it is right now. Look at the area it's trying to climb out of. I mean, there's a big gap right there that it's basically coming up on, and it just so happens to be earnings. It's always interesting to me how that happens.
Earnings trying to recover from the previous earnings that it sold off from.
Yep.
With a new earnings announcement.
Right.
But we'll see if they can do it. 27 points would bring it to 400 almost. And that would be a sizable move to the upside if we can get it. But lots of weakness in the market. Like even today, we're up today, but it doesn't feel like it's a really strong rally.
Right.
It kind of just feels like we're chopping here. We've sold off from the recent high right around 7:15 a.m. And even on the open here, had a big rally and we just sold off immediately. This has been the story for the last couple of days where you get the gap higher on the open and then it just kind of slides to the downside. Bitcoin just turned red. But yeah, I think that's it for us for now. But we've got TP with some trade ideas coming your way right now. TP, take it away.
Oh, thanks, Mike. Thanks, Jermal. Okay, getting whacked on my short bond position these days. Let's check out the specific positions here. So looking at ZB, I'm sure along this put spread, the 109, 110. And so bonds are 109.15. The way to interpret that if you're a stock trader is There's 1 point, obviously, between 109 and 110. That's $1,000. They trade in 30 seconds. So this is almost at 109 half. In other words, 15 divided by 32 is what, 40.43, whatever it is. This is almost right in between the strikes here. I'm going to hang on to it. One of the things that's going on that's making me a little bit cautious or nervous about this bond spread I have is that the Treasury with Scott Bessent, I think he's going to try and squeeze some of the people like he cares about me, but squeeze some of the people who are short bonds expecting rates to go higher. And that if he can just keep rates down a little bit before the midterms, then the pressure will be off him, and the rates can go wherever they want. The problem is he's got what's his name, Warsh, and I have no idea how Jackson Hole ever became such a big deal, but apparently it is. So that's kind of at war, not at war, but he's kind of a counterpose to what Kevin Warsh might be wanting to do with raising rates a little bit. So, but again, it's the Fed, Kevin Warsh is all about short term. I think what Bessent is doing is more out towards the long end, specifically around the 10s and the 10, 20s and 30s, and the things he can do. So he's putting maybe some buying pressure or threatening to, and that's causing some speculation on the upside. Let's take a look at the open interest here on these options. So if you look at, and this is just the 17 days, the September weeklies, we can look at some others too. These, not huge open interest. Again, the markets in bond options are very, very tight. That's always, I love trading these things. But, a few hundred here. Here is where you get this spike. At the 110 half strike, you get almost 6,000 contracts of open interest. Let's open up, let's look at these 3 days and see what we're getting. A lot higher open interest. So about 5, 10, 15, 22, 25, and on the call side, you get 4, let's say 10, 18. It's a little bit biased towards the call side, and this is what I'm hearing is that there's some there are a lot of shorts, trend followers. We need a chart here of bonds. So, geez, how did I lose it? Let me go back in here. Let's just stay on this little one for a second. So this, bonds are trending lower if you're a trend follower. I guess, moving averages or whatever you use. So a lot of commodity trading advisors are already short this stuff. They're feeling a little bit of heat. And there's some thought that the Bessent's push to get bonds higher, rates lower, is to maybe punish these shorts to cause a little bit of panic buying. If bonds rally up just a little bit, they're going to start scrambling to cover their shorts, driving the price up even further and driving the rates lower. So that's who knows if that's an actual, who knows if that's the truth. That's a story I'm hearing. One of the other things I'm looking at is nat gas, that there's apparently a shortage in Europe, or they're looking to very high prices for their energy because they've made some dumb choices over the past few years about powering their countries. And now they're saying, okay, we need some more natural gas. Nat gas, we're going to chart a nat gas. It's down here towards its bottom. As a contrarian trade, let's take a look at the skew here. Let's go about 31 days. And this is the sort of trade that I would look at for just kind of always having a little bit of long bias in nat gas. Futures at 276, or right around here, 275. Go down, a point, up a point. The skew is pointed a little bit towards the upside. So comparing to the 265 puts 94 to the 285 calls at 1006. Skew's a little bit pointed to the upside. And I would do so going in here. How do I pick the strike? Well, I pick the strike based on the generally, without considering anything else, looking at the probability of expiring worthless. So this is the OTM percent. This 66% means that according to the current implied volatility of the 2.6 puts in nat gas, given where nat gas futures are right now, 275.9 or 2759, the probability is 66% that this put will expire worthless in 31 days. That's what that OTM percent means. Doesn't mean I'm going to hang on to it, but here's the issue. So if I sell, this is a big product. So if I sell this put, my max profit 740. Let me expand. Let me blow this up a little bit so you can see it easier. Max profit 730, 740. But my buying power effect, I need about $2,000, $2,100 to do the trade. That's a little bit steep for a lot of folks. So this is a big product. So what I would do is verticalize this, just go down and buy the 250 puts. Now it looks a little bit slicker. So max profit 280, max loss 730. The buying power effect is less than the max loss because it's band margining. In this case, maybe I just look at the max loss here. So $1,000 between here. I could even tighten this up. And do 500 points here and $1.50. Maybe I'll pull this up a little bit, get a little bit higher credit. Yeah, $180 versus 310 of max loss. So let's just route this. Let's just ship this off and see if it gets filled. Well, the other trade, and I put this out on the cherry bomb last night. And if you're not getting the cherry bombs in your email every day, go to tastylive.com, news and insights, sign up, and you'll get those delivered to your inbox. And what those cherry bombs do, they're not trade recommendations. They are just my take on something that I would maybe look to trade in the morning the next day, because they come, I write them the night before, they come out in the morning, about 7:30, 8 o'clock in the morning before the market opens. And it really is just the thought process for how we trade here. So it's liquidity based, probability based, volatility based, strategy based. I give a little bit of context to what I'm looking at, but it's really just, here's something you could do. And you can disagree with the bias I have. If I'm bullish on something, you can be bearish. Just use a good strategy. Use a smart strategy to express that. So what I was looking at is Microsoft had a massive rally up. This is when earnings came out for MSFT back on 729, 730. Huge rally up here. And then since then, Microsoft has been pretty flat, even as the S&Ps have been a little bit more volatile, and the other Mag 7 stocks. And I think Mag 7 has kind of jumped the shark a little bit. It's not it was kind of 2025's bellwether mini index, but still it's one of the flatter, more stable Mag 7 stocks for $1 trillion company, whatever it is. So I was looking at selling an iron condor in here. Let's take a look at that trade with 3 days to go. Why not? Keeping these trades short term, because it's just to keep the ideas going and to try and get paid. And why do I like this trade? It's outside the expected move. So this expected move number of 982 is based on these August 28th options. And I like this only for very short term. In other words, sub 1 week. So about 985, that's represented by this light brown bar here. So selling premium outside of that bar, it's outside of its expected move. I'm not going to sell naked premium in here. It's too bloody expensive for a $488 stock. It's too rich, or it's too much capital. It's too much. It ties up too much capital, and I don't think people are well served with that. So selling premium outside here, 78, I'm going to try at 80 cents. Gives me $14.96 of theta. Max profit 80, max loss is 170. Yeah, $250 dollars between there. So I'm collecting about a third of the width of the strikes on this stuff, which is my target. But the theta, $15 for 170 is pretty close to about 10% of theta per day. So it's an extremely high theta return on capital. I'm going to ship this at 80 and see if I get filled. And this is just a neutral trade in MSFT. Let's get into the SPX, because we always do that iron condor. So the SPX are down about $5 since I came on, or since I was watching it when I logged into this. Going into the 0 DTEs, how are we looking? Let's go look at the VIX. The VIX is down 2 cents, 1583. It's not bad. I mean, it's closer to 16 than it was. Okay, so I'll take that. Either way, the strategy is to, and I'm short some put spreads in the VIX. So that is me talking up my position, hoping for a sell-off in the S&Ps that will drive the VIX higher. Hasn't happened yet. What I do here is sell an option, start off with an option that's about $2. So I like to match up for the iron condor in my style of trading these things. You can do different. It's the same basic idea, whether you choose this option, that option. The iron condors are all kind of the same. I sell a $2 put and I need more strikes. More strikes. And I buy a put $25 out, 76.20s. Let's go find the $2 call right here at the 7,700. Then I'll buy the 77.25. So about $2.80 credit. Again, versus 2,200 of max risk. Yeah, that's the risk reward. I'm going to ship this at 285. Let's go for 285. Let's make them work a little bit for it. So that's working. I may get that. A little bit of a sell-off. I may get that. A little bit of a move in this. So if I'm filled at 285, I'm going to put in an immediately put in a buy order to buy it back for $1.40. Just to have that order resting. That would capture a 50% profit on the trade. That's what it is. You can use 10%, 20%, 25%. There are different ways of treating this depending on your risk tolerances, but this is how I trade them. Going back, and let's check out crude oil as we head out into this. Crude oil's down again. And yeah, I can understand. I was talking online to some of the folks in my 1 p.m. Live trading show yesterday. The past couple of days talking about bearish trades in crude oil, and they've been right about that. I'm more neutral on crude. I think it could stabilize. Check out a chart on crude oil. But yeah, this is a nice little sell-off. Unfortunately, and let's check out my miserable little love put. So I'm short the 45 puts in, what's my expiration? 24 days. I'm short I rolled that. I was short an August put in love. Let's go back. Where's my chart? So I shorted a put right here. Or shorted a put actually up here. 45 put blew through that. They hated the airlines, and I'm getting whacked on that. So what I did was I rolled out to a further expiration, collected a little bit more credit, sold a call against it, sold a front month call against it. They say, oh, I hate hedges. Well, here I am kind of hedging or reducing the cost basis of my short put. So that's what we have today. Nvidia is the big story that everybody's talking about. Earnings coming out on Wednesday afternoon. I'm going to wait where did it happen? What happened here? Put in the wrong symbol. NVDA. Nvidia is up. I'm going to be biased a little bit short going into that number, but I will probably put on a trade tomorrow afternoon during the 1 o'clock segment. So with that, I'm going to wait and see if I get filled in my SPX. If I do, And did I get filled in anything? Nothing done yet. It's a slow morning for me. I will push those out on the follow page. I will send this back to Mike and Jermal, and good luck trading, folks.
Qué bueno, ay. Ave María Morena, Ave María Morena, Ave María Morena, caballero iré morena, Ave María Morena, le digo rumba buena, Ave María Morena, morena pero que me muero, Ave María Morena, 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 Ave María Morena, y tú son los ratos buenos, Ave María Morena, morena pero mira morena, Ave María Morena, oye que bien ya suena, Ave María Morena, oye digo que morena, morena morena, ven morena morena, oye morena, morena, mira que bien morena, estas son las rumbas morena, enrúmbala, morena, estas son los buenos buenos, morena, estas son las rumbas buenas, morena, estos son los ratos buenos, morena, oye mamá, morena, cántalo hasta mañana, oye pero ve morena, oye morena buena, que bien ya te suena, oye pero me vi, estos son los ratos buenos, morena, morena.
Hey, what's going on, everybody? Welcome back to Tasty Live. Markets are moving a little bit higher and seemingly in a good mood ahead of Nvidia's earnings, but not everybody thinks that the market is going to be doing great things. Ahead, we have here now Mr. Jim Welsh, the macro and technical strategist for macrotides.com. Also an author, Jim, I hear as well.
Jermal, I do a weekly technical review and then a monthly macro tides issue, which looks at the bigger picture. So I'm the author.
I hear you. What's the author of the book? What's the book?
Oh, no, it's not a book, man. It's just what I'm writing every week.
Oh, gotcha. Makes sense. Yeah.
Now, if I added up all the things I've written, it'd be a very long book.
Maybe that's the next thing to do, Jim. That's definitely sounds like something to do.
That's what my wife tells me.
We got to listen to them whenever it makes sense. Markets
happy wife, happy life.
Hey, that's what they say for sure. Markets have been moving higher here, but you have a different thesis for where things might be going.
Yeah, I think the technical underpinnings are okay, but I think we're weakening, Jermal, and I think the market is set up for a pullback. The question is, obviously, as always, how deep that pullback is. And so if you look at a chart of the S&P 500, you can see from the recent low, there's 5 waves up. So we're completing something from the recent low, I don't know, 70, just below 7,300, I think, or around 73.16, I believe. But if you go all the way back to the March low at 63.16, you can also, for me, see 5 waves up. And that sideways chop, and thanks for bringing up the chart, that sideways chop that you see from the June 2nd high until July 29th,
yep,
to me looked like a triangle. A, B, C, D, E. And my take was as long as the S&P held above 7294, we were going to see a thrust to the upside that would carry the S&P up near 7,800. It got to 7,816. So from my perspective, Jermal, I think you got 5 waves up from March 30th. This thrust has been relatively weak. If you look at breadth, advances, declines, the kind of thrust that we got during that thrust, or that pop to the 7816, really weak. So my take is at a minimum, we're going to go down towards the low end of that chart, which is, 7250, 73. But I think there's a reasonable chance that we're going to correct the advance from the March 30 low. And then, that gets you down between 7,000 and 7,200.
Yeah, that would be a little, just under 10% correction, if you will. And a lot of people may ask, what's the catalyst for this? But, I'll be honest with you, I don't think people have to look too far, which is the next topic of conversation. It could be the bonds. I mean, bonds are showing us something here right now. And that could be the reason. What do you see?
Yeah, if you look at the 10-year Treasury yield, you can see it's tried 3 different times to get above 475. And I don't know, the old saying is the third time's a charm or something. Well, if we go up there a 4th time, Jermal, I think we're going to take that out. The next stop would be about 481, which was the high going back about a year and a half ago. Ultimately, my take has been that the major trend in yields is higher, that we've begun a secular bear market. The secular bull market ran from 1981 to 2020, and we're in an upswing in yields. And I think the first target on the 10 years over 5%. So my take has been that's where we're going. And that could be obviously a pressure point on equities. If and when the 10-year breaks out above 475, people start to notice. The other thing, Jermal, I think, not much is Nvidia is getting more attention than Warsh's speech. And I think if you read his press conference very closely, I think he's going to come across more hawkish than people expect. First of all, he's not going to give any forward guidance. I mean, that should be clear to anybody who's listened to this guy. Number 2, Wall Street's like, well, we want his reaction function. We want to know if this happens, what's he going to do? He's not going to do that. What he has told us very clearly is their goal is 2% inflation, getting it down to that. That is the goal. I don't think he needs to explain how he's going to get there. Wall Street will, we want to know. Give me a break. How does a central bank get inflation down to 2%? They don't lower rates. Plus, as we all know, the sentiment is that, well, he's a lackey for Trump and, he's never going to raise rates. And I think if he wants to get that monkey off his back, hiking in September will do that. It will shut all those people up and I think gain the credibility that he kind of needs. Plus, in the June meeting, 9 of the 18 people provided information for the summary of economic projections. Where they wanted to raise the funds rate at least once. Now, the softer employment report, well, they lost 53,000 government jobs. The retail sales number were skewed by Amazon shifting its, prime special thing from June of last year to July, or vice versa. Anyway, it subtracted 0.4% of the 0.6% decline in the retail sales. The point being is, the data appears on the surface to be, wow, that's pretty soft. Under the surface, it's not quite as weak. And again, I think there's the bias that for most of the folks on the FOMC is, hey, inflation's been above our target for 65 months. We probably need to do something. So I think, Jermal, that his tone is going to come across again, that he's serious about getting inflation down to 2%. He's not going to give him crumbs regarding forward guidance. Wall Street, I think, might not like that. It also has implications, I think, for the dollar strengthening a bit. Maybe the Treasury yields do pop then in response to his talk above that 475, and that should generate a pullback in gold.
And as we get to gold, just want to show the expectations here for potential hikes. You mentioned September. Right now, you said that any chance for him to really gained this interest of people saying that he is not Trump's lackey, is a potential hike in September. As of right now, the market is not viewing a chance for a hike in September. I mean, you look at the 3-month SOFR futures, again, this number subtracted by 100 is basically 3.8%, which is kind of where we are right now. Only chance right now is on the December futures. And there is showing potential chance of a hike at 4% if you look at this. So that might be the chance. At least that's what the street is thinking. But you're right. If it were sooner rather than later, maybe that would change the sentiment. But gold,
I mean, it's going to be it's going to be a close call. The thing I would point out before the employment report and the other data, CPI came in okay. I think it was about 57% chance of them hiking in September. So everyone's dialed back their expectation based on the data. And my point is the data wasn't as weak as the headline suggested. And I think for those members on the FOMC that are worried more about inflation than the labor market, I think their bias is why not do it? But it's going to be a close call. I just think that would, to your point, bringing up the numbers, if they do go in September and there's another inflation report due out, another employment report, the market would be more surprised by that. And it'll be interesting to see if he comes across as more hawkish, Jermal, on Friday, does that percent move up a little bit in response to his comments?
Yeah, it'll be very interesting. And we've seen a huge move in gold recently on the heels of what was a surprising move in the 30-year bonds. And of course, it's changing the outlook on a lot of these non-yielding assets. And gold has been a huge beneficiary here. You just mentioned this. Where could we possibly see gold going?
Well, in late June and July, I recommended buying gold because I thought that we had completed the first part of a larger correction from that high at 55.95 down to 39.45. And my expectation was that we were going to see a retracement rally that at least would get to 43 to 4,400 and potentially as high as 47 and possibly even 4,900. So my expectation was we were going to see a very nice move. Bigger picture, I think gold is in wave 4 from the December 15 low at 1,046. So wave 3 topped in January at 55.95. I think we get the pullback. We've gotten a bounce. I think the bounce has a little bit more to go. Bigger picture, I think once this rally is over, and I think it still has more to go to the upside, Jermal, we're going to see a C wave as part of that wave 4 picture, taking gold below 39.45. So then I think we're going to new all-time highs on gold. So this has been, I believe, a corrective rally, if you will.
So you're saying we'll see a drop of about $700 around in gold, and then eventually a big move back upwards?
What I'm saying is you might get another $200-300 to the upside, then a decline of about $1,650. In other words, if you get to 4,700, I think we're going below 39.45. In other words, completing one leg down, bounce, and then another leg to a lower low. And at that point in time, I think gold will be set up for a rally above 55.95. So that's like over the next maybe 1 to 2 years rally or perspective. One thing I would point out is the wave 2 correction went from 2070 to 1616. It took 39 months. Time-wise, wave 4 should be, it doesn't have to be equal, but it's not going to be over in 6 months. And so again, the pattern suggests you got this big decline, we get a bounce, and we're in that bounce, got a little bit more to go, and then there's another leg down. Because I think the dollar index is going to surprise people to the upside. It's got to get above. First of all, it's got to stop going down. Okay. But the news item, with Besant doing the Treasury thing, that coalesced a lot of negativity on the dollar. So sentiment is pretty sure now, hey, where it's going down. And you had 1 day drop on that, and it's just been kind of hanging out. I think the dollar is close to a low. If I'm right about Warsh's comments on Friday, it's going to get a tailwind. And then ultimately, it's got to get above 101.80. If it does, I think 105 to 107. Why? If you take the high from 22 at 114 and change, the high from January of last year at 110, you draw a trend line, it comes through at about 107. So the point being is, I think we're going to get a rally that gets near and to tag that trend line. And then we'll take what happens then. But that's, it's like driving a car. it's great to have, here's the layout, right? But when we drive a car, we look at the 100 feet in front of our, hood. And so to me, market and the way I try to track things using technical analysis is just watch what's in front of the hood and respond accordingly. So in June and July, to me, it was like, we're set up for a pretty good rally here in gold. Sentiment had gotten pretty negative and so forth. And that to me is the only way to track markets is use technical analysis as a complement to fundamental analysis. In this case, I think, we're so serious about the Fed getting the inflation down.
Yeah.
So.
Well, he's calling for some big moves in gold and big moves in the market, and we'll see how it all plays out. Mr. Jim Welsh, he's an author. He's also the macro and technical strategist for macrotides.com. Jim, appreciate your time.
Hey, thanks so much, Jermal. Have a great week.
You too. Folks, markets are up a little bit here. S&P 500 E-minis are up 15. The NASDAQ up 140. A little bit different than what we've seen yesterday. We'll see if they hold on to the gains. We're going to take a quick 90-second break. We'll be back. You're watching Tasty Live. If you look at a heat map, there's not a whole lot going on, but I tell you what, somebody's here to break up the monotony of this morning's show, and that's Mr. Tim Knight. Tim, how you doing?
Oh, what a sick. Hello, heat people. Heat miser, cold misers right here. Yeah, it's strange lately because I always end the day with massive amounts of trepidation, and so far it looks like things are kind of softening up. But I think between now and Nvidia's earnings post-close tomorrow, there's going to be a lot of sitting on hands going on.
It seems like that right now. I mean, look, it's early in the day. I actually never really pay much attention to volume at this point, so I don't really have a frame of reference, but it looks like we could be hard-pressed to get up to 1 million contracts in the E-mini S&Ps. We'll see.
Yeah, there's the two big events this week, of course, are within like 36 hours of each other. We've got the Nvidia announcement Wednesday after the close, then Jackson Hole half hour into the trading day on Friday. And I suppose people would really like to get both of those behind them before they kind of assess what's what. And I try to be a purist about charts and try and let news affect me, but I got to say, I took profits on AMD. I took profits at MU because, like, do I really want to be short all this stuff, through the Nvidia announcement? Mm-hmm. Of course, if it plunges, then I'll be upset. But all the same, it's as always, I'm kind of doing for myself kind of the bottoms up kind of choices and picking charts on a piece by piece basis. We can look at a couple of 3 sectors to kind of get a taste of things.
Love it. Let's do it.
Sure. Let's start really broadly, and this will go to this sitting on hands motif. Here's the ES, which looks remarkably like an oil painting. The past 3 days, it has been just grinding around that blue horizontal, and all the blue horizontal represents is the prior lifetime high back in June, which we popped up above based upon Besant's declaration that the Iran war is going to be settled in a day or two. It wasn't, but that's what compelled the prices higher, and it has sunk below that, but has basically been playing jump rope for the past 3 days ever since, just going absolutely nowhere. In a little bit of contrast to that, looking at the NQ, it has been kind of going down on the same time span. We can see here where Jermal mentioned Christmas lights a moment ago. Red, green. That's kind of the toggle happening right now. But broadly speaking, quite plainly, you can see over the past 7 days, it has been working its way lower as opposed to kind of flatlining like the ES has been. And my own obsession, which goes right to the Nvidia thing tomorrow, is SMH. We had that gap down where that orange ray is anchored, and we have been in fits and starts working our way lower as people wring their hands a bit more about AI/hyperscaling, which, I don't know, as the resident perma bear, I've got to wonder that since everybody's talking about the AI bubble, is it a bubble? Because people don't usually telegraph it quite like that in history. But that whole area is definitely giving bloom off the rose kind of vibes.
No, 100%, especially in this time period where we got all these high interest rates, right? Like, I think it's starting to wear on the psyche of all the people who have these AI longs. It's like, wait a minute, we're dependent upon low rates for the future, for these future earnings, and rates are what? 30 years from now? What? Like, it's not looking good, I think, for that trade for that reason.
Right. And we are precisely 10 weeks from the midterms. And I think the texture, the tone, the personality of the market is going to have a Jekyll and Hyde change following that date. And for 2 months, it's going to be unchecked pandemonium, which I'm kind of looking forward to. But in the 70 days between now and then, there's going to be gimmicks and announcements and basically everything bullish possible thrown at this thing. Like I say, I'm just kind of counting the days till the bearish liberation day, so to speak. One item I've been watching with some interest, of course, has been Bitcoin, which has been just a dynamo lately. And it's a fascinating chart because, as I've made clear, I've sort of removed my bearish cap on long-term Bitcoin. It found so much support around 60,000, literally for months. It was just grinding around there. And in retrospect, we can plainly see with that rectangle I've drawn, a base was building. And about, 5 days ago, the energy from that base was finally released very explosively. And yesterday, I went ahead and, based upon the premise that the big round number 80,000 would provide some kind of resistance to this, and more importantly, this broken trend line would provide resistance, I went ahead and shorted IBIT, the big Bitcoin ETF. And last night, when it vaulted from like 79 to 81, I kind of rolled my eyes like, you got to stop touching crypto, Tim. But it's actually worked out. It's shown a nice profit so far. And the good news from a charting perspective is this is a very overextended looking chart. It has every decent chance of falling back to around 67,000 or so. But I'll just balance this bearish disposition by saying if it does get to the upper 60,000s, and these are words you probably never would hear cross my lips, but it may be a good time to buy Bitcoin.
Sorry, I didn't hear that. What'd you say?
Yeah, no, Bitcoin bull. No. I know, I stunned silence, I realize. So I'll recap. No, I'm short IBIT, profitable, and going to hold on to sub 70. But because this, and believe me, I'm not buying Bitcoin. I'm old school. I'm old fashioned. You know, the little intro when they do the song and show my face, it's like they're watching me age here. That picture was from 2 decades ago. But weirdly, you know, even though I do not embrace it, it sure is acting like so-called digital gold, and the correlation's gotten really close. I'll put this in a way that's more palatable. If Bitcoin gets to the upper 60s, I think gold will likewise have fallen, and then I think I'm going to buy a lot more gold. I'll just say that, real gold.
The line you got there, what would be that high if Bitcoin touched that? Not the high, but like what would be that? Yeah, what would be that top?
Oh, like when is the trend line busted?
Yeah.
Just eyeballing it here with my poor aging eyes, I'd say probably like 83,000 or so on the futures.
Yeah, that's what I was thinking.
On the cash, I could get it more precisely, but something like that. And psychologically, 80,000, just like 70 and 60 and so forth. You know, 60 was the big round number that offered support. 80, I think, is the big round number that's going to provide resistance. I don't know what the cash peak was on this, but probably kind of close to 80,000. So it kind of makes sense that it's in this retreat. Of course, the looming uncertainty is Jackson Hole. But I would not be surprised if between now and the end of next week, we got back down to the upper 60s, at which time I would get out of the short. And like I said, not buy Bitcoin, even though I think it will go up, but buy gold.
Yeah, just looking at the last 3 days, I mean, you see these candles, you see these long wicks. It does seem like it's beginning to run out of steam a little bit here. So I was actually thinking it might be a decent area to get a little short too.
Right. These are the three monsters, and then they're just kind of padding their gains right there. But it's as we back up here, and the broad premise for me, and this isn't completely out of the question. The broad premise for me was this monstrous zone right here would constitute a really important top, which would send this thing down to say 40,000. It was its resistance to doing that kind of threw doubt, and it's going to take a lot of work to bust through that rectangle there, to cut through all that, because this does represent pretty meaningful support. And by way of contrast, and to kind of augment this, gold, here's the GC futures, very much the same setup. We ground around here. We got a skosh below 4,000, but we ground around 4,000 for a while. And its release was earlier. It finally burst out of it here. And so we added about $700 to gold in a matter of just a few weeks. It cut above this horizontal, it cut above this descending trend line. And so the equivalent diminishment in price would be down around here, something like 4,400, just to put a simple number on it. So just to put this in a sentence, if gold gets down to 4,400, I think it's going to be a terrific time to buy.
I can agree with you on that one. Yeah, I mean, it does seem like it's again, they're both kind of moving for similar reasons, right? These non-yielding assets, all of a sudden you got interest rates at highs, but I guess we're going to get some answers here in a couple of days. We'll see what happens on the other side of this Jackson Hole.
Yeah, you never. I mean, I've got the scar tissue from the Bernanke Jackson Hole event. I think I'll have to my dying day, and so I probably put too much weight on just how big a deal the speech is. There have been Jackson Hole speeches before that was just absolute nothing burgers. Just like, why were we even caring about this? Yeah. And this could be another one. Who knows?
Because it's a great article writing opportunity, Tim. That's why, for a lot of people. That's my theory.
All the speculation and dissecting every semicolon and comma. And they conveniently put it right at the start of the trading day. I'll say in brief, just briefly, one sector that I've got a bunch of shorts on has nothing to do with semiconductors, but is kind of techish, I guess, which is, I've got to come up with a better name for this. I just call it the SpaceX type sector. SpaceX itself is fine. hats off, champagne glass raised and all that. But anything else with a rocket engine attached to it, I've got short positions on. And those are doing pretty good, even on this very green day. We've got Echo Star, red bar on that over that's up a little bit today. Viasat, which is down just a touch, but this is like its 10th red bar in a row. Rocket Lab, which is down about 1.5%, 5 red bars in a row. So that whole, and it's not like I have this general view that satellite/space is in trouble. It's just that it just so happens that those charts all looked good on the short side. So in spite of SpaceX being weirdly stable, it's much smaller competitors are continuing to slip lower.
Yeah, I know it is. You talk about calling the group. I guess we can't call it the space. I guess we got to find the exploration space.
Major Matt Mason's moon mission. Just space stuff. I'm just glancing at the clock here, see if we got time for one more. I'll just
one more real quick.
Yeah. Let's talk about Dix. We've been 1 to 2 every day. Here we are, DKS, wipeout. I wish I could say I was short this stuff. I'm not. I followed it for the longest time, and DKS, Dick's Sporting Goods, is just getting fricasseed today. Oh my goodness gracious, it's down over 25%. You can see that for months and months and months, this thing went absolutely nowhere. And I just stopped charting it. I stopped looking at it. I stopped thinking about it. And lo and behold, today they came out and said, hey, revenue, profits, everything else going a lot less than we predicted. And so for those who didn't know, this is the big wipeout today, Dick's Sporting Goods. Ouch.
Yeah, and a lot of names in that space. Nike's down, Lulu's down. So yeah, really tough run of it there, but we'll see how it ends up playing.
I haven't looked at Foot Locker. What are they up to? Let's peek.
I don't even know their stock number. And
whole lot of nothing. 4 days of nothing. Okay, well, I guess it's all about DKS at this point.
It really is. Yeah. So
definitely a very big fish that got away from me. But anybody who was short out there, hats off, congratulations. I was not following that. In retrospect, it's a beauty of a chart, but it took years to reach this point. So I don't have the patience, I'm afraid.
I hear you. Well, Tim, good to see you as always. Thanks for your insights. Appreciate you. We'll see you a little later today.
Good luck, everybody. And tomorrow I got a feeling we're going to be talking about Nvidia some more. So I'll see you then.
For sure. No doubt. E-mini S&Ps are fading here, only up 9 now. And NASDAQ is only up 126 points. But again, this seems like a day where people are just repositioning. I don't think there's going to be a whole lot of volume, and nobody wants to really put themselves out there ahead of some big catalysts coming later this week. But we're going to take a quick 90-second break, and we'll see you on the other side. You're watching Tasty Live. What's going on, everybody? It seems to be a little bit of a quiet day here. E-mini S&Ps are only up 10 now. They were up as high as 30 points this morning, so a little bit of a fade. And it's a classic quiet day before we get to some big catalysts over the next couple days. You got Nvidia earnings coming out tomorrow after the close. I know it's a full 24 hours a day, but yeah, it seems as people are waiting on it. You have, of course, later in the week, and highly anticipated first speech at Jackson Hole by Chairman Warsh. So we'll see how that plays out. But for right now, we got some research. We got Sahil in the house with some tasty research. What's going on?
Yeah, not much. How much? How are you doing?
I'm surviving.
Yeah.
Surviving, yeah.
Liking the sideways market?
Yeah, it's fine. I mean, I like when things move a little more.
Okay.
I feel like that's when I am at my best.
Mhm.
But I've learned not to overtrade in markets like this too.
You know when to you know when to put on lots of trades when it's a little bit more
Yes.
volatile, and also when to sit back.
Yeah, I mean, once upon a time, you see a day like today and you just have all these theories and things that you might want to sort of test out without the move happening yet. And that's the hard thing about it. Like sometimes you, let's see, I'm trying to think of something. I'm trying to think of a theory or something like, I don't know, like say you think that, Walmart and Costco and consumer defensive names are about to go to the moon because everybody's really going to struggle. And so I'm like, yeah, I want to get super long these names. And I would go out. This is like years ago. I go out and like buy calls like 3 months out because I feel like that's the prevailing thesis. And all these articles I read say so much so. And so I'm going to do that as well. And I would definitely employ that on a day like today where really no direction has been settled yet. And then next thing you know, it goes the other way. I could be right for all. And this is the sort of what this network was founded upon, right? And so it's like I could be right about that story, right about all the articles I've read, and all of that makes sense, but the trade's not working, and I don't understand why.
Yeah, I can understand why all you guys were kind of contrarian traders a little bit. With the market makers, in the pit, it's kind of their job to be the contrarian trade, take on the opposite side, but also the markets that we have known, my generation has known, has only really been a bullish, upwards going market.
Yeah.
And so we have not had our lost decades or, anything, or the Volmageddon from like 2017, 2018 or whatever.
Yeah.
So it's just a different mindset. I'm sure when actually like a big crash happens or whatever and it refuses to go back up, then we're going to change our tune on it. So
yeah. And the interesting difference about the guys who started the network and me is that like I'm like the next generation of them. They started on the floor. They took all kinds of flow. People in the market could be, you see SPX markets, they were wider than that. Let's just say a market on a put or something is like $50 at 60 less. That's pretty wide. I mean, somebody's buying 60s. And so they would just sell it to them. I mean, that's a very wide market they just crossed. They immediately got paid. When I worked at a market making firm, I didn't get that same opportunity. I was trading basically similar to what we're trading now. I just had more size and ability to move markets if I wanted to, but I was mostly making markets, not taking them. You know what I mean? So kind of how it went.
All right.
Yeah.
It's a nice backstory.
Yeah. Just letting you know, it's we didn't like kill it all the time. Anyway, what's this research that you got going on?
It's about durational volatility. So a question for you is, do you like to stick to the Tasty Trade 45 DT schedule? Or you try to go a little bit earlier now, maybe? Maybe in these types of markets, you like to take it off at around 20, 25 DT. In longer markets, you like to hold it a little bit more.
It really it varies from trade to trade. I don't think everything for me is specifically the 45-day 21, but it just really varies.
Depends
but
on the stock,
that's my
depends on the
guideline.
volatility.
Yeah, that's my general guideline.
Okay. So we're going to look at different types of diversification. So the main diversification people look into is like price, sectors, but you can also diversify through the durations themselves. And so this is exactly what you were trying to get at. It's not everything needs to be, strictly 45s or whatever. You can kind of mess around with it based on the actual trade, based on the stock, based on the volatility, what it's doing. So yeah, if we get into the intro slide.
I know they're just messing with.
No, it's okay.
I want to see if you memorized it.
So we generally like to sell volatility at higher levels because it has a good chance of price contracting. And then, however, we've received emails of people having larger losses in the high IV stocks. So why do they have the higher losses in higher IV stocks? Obviously, because of the volatility. It can give you a lot, but it can also take away a lot. So this segment will go over the P&L in different IVR environments and different durational environments and why certain losses may occur in your portfolio and how to mitigate them as well. So lots of interesting stuff. So next one. So yeah, so the study part of this, how we set up the study, so we had one standard deviation strangles, which and puts, which were around 16 delta in SPY from 2013 to now, and these were all managed at 21 DT. Basically, they were taken off at 21 DT, so there's no rolling or anything. It's just taken off at 21 DT. We grouped SPY by the different IVR levels, and then recorded the average PNL, the success rate, the standard deviation of the PNL, and then for each of the IVR levels and the PNL volatility. So lots of metrics. Lots of stuff for different 16 delta strangles. We've done this many times before, but we're just going to try to incorporate different durations into it because we usually stick to our 45s. So we're going to try to do 30, 60, and 90. So yeah.
Okay.
Next one. All right. So this slide is for 0 to 20, 21 to 50, and then above 50. These are your different IVR brackets that we have. And this is a slide that we've shown million different times. Is the average PNL kind of increases when your IVR increases, right? Your success rate actually stays the same for most of them, 85, 83, 82. There's not too much different. And then your standard deviation of the PNL also increases. So you have higher average PNL. That's why we like to trade in high IVR stocks. But the standard deviation is also a lot. So if you have a smaller account, if you are taking on more capital allocation than you actually should be for your account size, then you can get hit if the volatility goes against you.
So I'm reading this to see that they're all generally successful, but clearly you get rewarded for taking risk when IVR is higher.
Mm-hmm.
Okay.
And Tuvi noted that this does not include 2008 or whatever, because the data starts at 2013.
Okay.
So yeah, if people are questioning why the numbers might be a little bit higher from what we show, because our data used to start from 2005 to whatever, so we included all those years into it. So
okay,
yeah.
Why'd you go with 2000? Why'd you start?
It's just where our data starts now.
Oh, okay.
Now we're incorporating new stuff. We're trying to get more minute data into it as well. So now it's 2013 onwards. No, yeah.
Fair.
Yeah. Mm-hmm. All right, next one. Okay, weekly P&L volatility now. So this is your famous gamma risk. So why do we take off the trades early? You have 45, 21, and 7 days to expiration. You just see your P&L volatility increases. At the very start of the trade, it's 16%. Then right around management time, it becomes 23%. If you hold it a little bit more, it's 25%. And no management, your P&L volatility is 28%. These are all still fairly low numbers because we're dealing with SPY over here. It's a index, or sorry, it's an ETF. SPX is the index, so the volatility numbers will be still a little bit low unless you're trading something like Apple or Microsoft, Nvidia, whatever, then your volatility numbers will be a lot higher. So these principles apply more for those types of stocks. But yeah, this is why we take off our trades early, as we've shown millions of times, is because your gamma risk just increases so much as you get more into the trade. So
yeah. I mean, I think this is pretty standard. I think a lot of us kind of aware of this, but that it's still always interesting to see. I mean, that's the one thing I think the big takeaway here is as you get closer to expiration, things change quickly.
Mm-hmm. All right, next one. All right, so now we're going to get into the study portion of this. So we have three, we're going to test basically that the durational volatility aspect of it. So we're going to have 3 puts with 30 DT, and then we're going to have 1 put at 30, 1 put at 60, and then 1 put at 90, and then see basically what are the trade-offs, because there are trade-offs. So there's just no one best strategy out of all of this. It's basically what do you want, what do you care about more? Do you care about volatility more? Do you care about P&L more? That kind of stuff. So this is how we set up the study. So next one. So we're going to call this short puts and then laddered puts, laddering through different expirations. So when you're just doing the basic short put strategy, just your 3 contracts, whatever, your average P&L is 87, while with the laddered puts, it's 66. So actually, with the durational risk, when you're diversifying through the different durations, your P&L is actually reduces. However, your success rate increases and you do not have as much of a largest loss, which means that your P&L volatility also reduces. So this is just trying to show that with short puts versus the laddered puts, you have more P&L if you go with the same duration, our same strategy that we always go with, but you have a lot more volatility. With laddered puts, diversifying through different durations, your success rate increases, your P&L volatility reduces, all that stuff happens. So yeah, it's basically what you want to choose. So,
yeah.
Just and another way of diversifying. You don't need to just diversify through the different sectors, through the different prices, whatever. Mm-hmm. Are you into tech stocks right now a lot, or are you trying to diversify through different sectors? You think?
Yeah, no, I am. I'm in tech stocks for sure. Yeah, I'm definitely got to trade on a bunch of those. So it's kind of the area. I mean, there's so much volume in those.
You don't want to just step away and do something.
I do have some other stuff. No, I do. I do
whatever.
have some consumer staple stuff. But yeah, it's.
I agree. It's where the movement is. I'm also probably heavily into.
Yeah.
A little bit too much into the
Yeah.
tech stock. So if stuff happens to crash a little bit, they're all going to crash at once. That's
the correlation.
Yeah, that's the correlation. All right, slide number 7, and then the takeaways. So, all right. So this one is volatility of your entire portfolio. So we found that diversifying positions across multiple expirations can reduce your portfolio volatility. So they're just looking at it through a different angle, because it's portfolio of your entire portfolio, basically volatility of your entire portfolio. Yeah, traditional is 33%, and then as you reduce it, you have as you go longer, and this is whole diversification aspect of it is because as you go longer, DT, your P&L volatility tends to reduce. This is why 0 DT weekly options are so volatile compared to 45 and holding it even longer. And overall, it just ends up being 25 versus 33. So it depends on what you want to control, basically. Are you somebody who's a little bit more aggressive and you want to control your volatility, or are you somebody who wants the more P&L at the expense of the volatility? And keeping in mind that this is testing on SPY, we should probably start doing more studies on Apple, Nvidia, whatever, if we're able to, just because with SPY, all these numbers tend to be massaged a little bit, just being the ETF, and they do not look as striking as if you were to look at single stocks, whatever. So just be careful about that if you are thinking that these numbers are still not as volatile and you can just go gung-ho into the 0 DTs or whatever.
Yeah.
Be a little careful,
Yeah. Similar durations. Yeah, for sure.
It's got to know your risk. All right, takeaways. 3 takeaways. I don't know how. Okay, these are a lot of words. So, when you're making slides, you're like, I'm just going to throw everything on here just because, Julia or somebody else is supposed to present these types of segments. And you're like, I want to make sure I explain everything to them on the slide. But then when you're actually
there you
presenting,
see, you read yourself.
I'm like, it's a lot. Okay. Well, yeah. Anyway, so higher IVR brings greater opportunity and greater variability. And then average P&L tends to improve as IV rank increases. You need trade management to help you control your IVR risk. Managing positions can reduce P&L volatility and still allow traders to benefit from richer premiums. So this is all stuff that we know. But then the new part that this study is trying to introduce is diversification across time and strategy can also smooth the results. Using multiple expiration cycles may improve consistency and success rate. And then neutral strategies like strangles also tend to show lower variability than naked positions. So yeah, just different types of diversification over here. And
Perfect.
Just one that we can use. So
Perfect. Good stuff. Sounds good. Appreciate your time, man. It's good research as always.
Anytime.
Folks, markets are they're hanging in there, still positive. We'll see if they hold on to it. We are going to take a quick 90-second break here. You're watching Tasty Live.
We just living it up, yo, that's real life.
What's going on, everybody? Well, thanks for watching Tasty Live. Markets are hanging in by a thread here right now. Nobody wants to make any major positions ahead of Nvidia, ahead of Jackson Hole. But I got Craig Bewick from the CME here with me. What's going on, Craig? How you doing?
Good. Thanks for having me back.
Good to see you, man.
Yeah, you too.
How's the end of your summer going here?
I hate hearing that.
I know.
We were out for the Air and Water Show a couple weeks ago, and I always say the Blue Angels or the Thunderbirds come in, they fly away with our summer.
It's true.
Like the last big thing that Chicago does, right?
Yeah.
And then all of a sudden it's Labor Day, but it's beautiful out.
Why'd you have to start it like that? I didn't
started it.
I just said, how's the end of your summer going? I was positive.
But hey, if we can keep this weather for a couple months, it doesn't get any better.
No, this is this is where we get to the great sleeping weather. But we got a heat wave coming in October at some point. For sure. Here to talk about some of the micros today.
Yeah, I think we're going to talk some options today.
Love it.
We want to put those slides up. I think we've got some information on the NQ and MNQ options. And I think before we get into it, it's probably worth pointing out, and we talked about this a couple weeks ago. I think we were using the S&P at that time. But for both the micro S&P and the micro NASDAQ options, we've gone to financially settled options. So instead of deliverable if you're in the money, both the micro NASDAQ and the micro S&P financially settle, which I think is attractive to a lot of individual traders because you don't have to worry about that pin risk as much. You don't have to worry about if you're in a spread, one leg getting assigned or exercised and the other not. So I think it's a pretty positive change, both for the brokers, I think, for firms like Tasty as well as for the traders.
Yeah, and this is I know it's going to affect in some. We don't necessarily have it yet, but I know we're probably going to be getting it at some point, and it's going to look a little bit different, I think, in that like Mike mentioned earlier this morning. For those who are watching, you'll see, I think, at some point some change up here. It'll show like a deliverable. Like sometimes you'll see this on stocks that have a deliverable or have sort of a corporate action or something. We'll have a little bar up here that'll show whether it's the because we still have both. You'll have some that'll show that are either financially settled or that are still selling in the future.
Yeah.
But then eventually the ones that settle in the future are going to roll off, and it's just going to be all.
It's a great point because the way we had to roll it out was such that we couldn't take any options that had open interest off the board, right?
Yeah,
so we had to let the older
were asking
ones
a lot of questions about that, and they didn't understand
that were deliverable. We had to let those roll off as we introduced the new. So it will be a little bit confusing for another maybe month or two where both of them exist. But I think ultimately, it's going to be a better product for individual traders because of what I just mentioned. And the other thing I think worth mentioning is that, and I've talked about this on this show before, a lot of people trade like 0DT, SPX, or spiders, or QQQ options. They don't realize that they can get essentially the same option exposure using the ES or the NQ options that they're getting in those securities markets. If it's the SPX or Spider, it's the S&P 500, just like the E-mini S&P. And then if they're trading like Q options, that's the NASDAQ 100, which is just, that's the NQ futures option. So I think it's worth pointing out that these exist. And then, the margining sometimes works in people's favor
for sure
with the futures options.
Yeah, for sure. Especially these micros. Yeah. I mean, I haven't traded. The only times I trade SPY and Qs and things like that now are honestly when the market is like really down big and there's big volatility and those are high in volatility. It's like my last go-to. It's like, all right, I've sold everything else. Now I'm going to sell.
What else can you sell?
You know what I mean? Like it's kind of how it is.
Yeah. But like, if you just want to run through the Iron Condor real quick.
Yeah,
and the reason I think it's nice to do that is because it kind of underscores the fact that these options work the same way, whether it's on a future like an Iron Condor is an Iron Condor, whether you're doing it on the NQ, the NASDAQ future, or the QQQ, the Iron Condor works the same way.
Absolutely, it does. And again, Mike and I have talked often about how we have positions in these. We have short, just straight vol positions. But again, using an Iron Condor, I mean, this is something that I didn't trade a whole lot at all. As a matter of fact, I don't think I ever traded until prior to coming to Tasty. It's definitely I would say a largely retail type of trade. Although there was a point in time everybody heard about a lot of bigger firms using multiple Iron Condors in low vol environments. I think they gained a lot of interest there. But I mean, it's just a simple way of sort of taking a non-directional play, right? I would say when you're selling, of course, if you're buying, you do want it to move, right? But you're combining two spreads. call spread and a put spread. However you want to do it, whether you want to sell both call spread and put spread and you don't want it to move, or whether you want to buy both a call spread and put spread and hope that it does move and one of those wind up in the money. So they're
that's
good for that.
exactly it. And I think it's, it's for individual traders, it's also a way to put on a defined risk trade, right? So at execution how much you can make or lose on that trade.
Yeah, for sure. Doesn't the one on the right always look like somebody going like this? That's kind of how it does.
Right. Yeah. But you're right, though. At the end of the day, it's just buying a call spread, buying a put spread, or selling both of them.
Yeah. Yeah, it's pretty simple. I mean, pretty straightforward. And I think it's a good trade for a lot of people who have yet to trade. It's a good way to figure out how risk works, whether you want to sell it. And usually it's defined risk. And you can make them as small as $5 wide, in some cases $1 wide if you really want to. But just understanding, I'm selling this call spread. What does that mean? I'm selling this put spread. What does that mean? Or vice versa. I'm buying this call spread. I'm buying this put spread. What do my break evens look like? I think they're good for helping other people understand that.
Right. And we were just talking about the micros, but it's worth pointing out, obviously, that we have options on the E-mini NASDAQ future as well. And, when you contemplate one of these spreads that is defined risk, it makes, even though that's a big contract, even though that mini NASDAQ is a big contract, when you talk about these risk-defined strategies, it really makes that more approachable, I think, for individuals.
Yeah, for sure. I mean, at that point, well, it maybe not so much on NASDAQ because, again, the strikes are wider, so I don't know if there's $5. So I'm pretty sure there aren't. But I was just about to say, look, the idea is whether it's $5 wide strike is $5 wide strike. Doesn't matter the notion of the contract, right? Like if there's that $10 wide strike, it's a similar deal. NASDAQ, of course, again, I think you'd find more of this in the MES versus MNQ, but MNQs are bigger. There's usually bigger strikes in between, probably on the order of 100, I think. I trade this thing so 50, right? When I look at MNQ, 50
points, yeah.
And then probably NQ might be 100. Probably not the 50, right? I think. It's been a while since I looked. I trade MNQ so much. Okay, yeah. So it's mostly 100, sometimes 50. It's interesting
where the delta is, like how close is the money.
Yeah. But the point is just you're even if in a big contract, again, you're looking at the difference in between strikes, right? Like that's the main point here to attention understand.
Right. And, like I said, just like it works in the securities market. So a lot of people are used to trading these strategies, whether it's an iron condor or a call spread or a put spread, and they work the same way in options on futures.
Yeah. So, I mean, in this case, we're selling a iron condor here. And again, they're $100 wide. So now you can see the difference in between, collecting $26. And again, it's 20 times, right? It's like 20 times on this. That's how you get this max profit here. And that's how you see what you can see your max profit here of $500. That's what you're collecting overall, $525. And then your max loss obviously is the difference between those strikes. In that case, the 100 times the 20 gets you 2,000. So
exactly.
That's how you get, that's how you sort of see your risk. And again, in this situation, you're just saying, I don't want this thing to move. I want it to stay between these strikes. This orange bar is the expected move. So this is the expected move over 24 days. Now, this is based on everything we know right now. Again, we don't know how Nvidia earnings are going to play out. We have no idea how this Jackson Hole situation is going to play out in interest rates, which are going to affect tech stocks. So it's something to keep in mind, but always nice to know your risk.
Exactly. And I think it's great that you pointed out that 20 multiplier, because that is kind of the one thing that if you're used to trading securities options, you're just used to multiplying what you see on the screen in your head by 100, right? It's kind of instinctive. You just know it's on 100 shares. That's where futures options do differ, and you just have to know those multipliers, right? So in the E-mini NASDAQ, it's a 20, just like you said. In the E-mini S&P, that's 50. And then in the micro, it's 2 and then 5. Yep. Right. So it's not, those numbers could look really big to someone if they instinctively tried to multiply them by 100 to get the dollar amount. So you just have to know those multipliers. Yeah. And you're right. Like vol's high, obviously in Nvidia, but also kind of across the NASDAQ options, right? Because of Nvidia.
And then again, you can flip this thing. Again, we were showing a short iron condor, but you could flip this thing. So you're like, I don't feel comfortable selling that thing. Well, sure. If you want to put up $1,400, if you want to put up $500 to potentially make $1,400, sure. But then you just need a bigger move. And again, you need the move through your break evens here and to get an idea what it looks like. Can we back this thing up? Come on, back out. There we go. So it's so wide. It won't even, I don't know if it'll back out all the way, but Again, you want in that situation, just think about it. You're buying a call spread, you're buying a put spread, and so you want it to move to you want the move to exceed what you paid for this thing. And again, that's your potential profit if it exceeds through those strikes. But
Right.
who knows how that goes?
Yep.
You need catalyst for that. Good stuff, man. Good stuff.
Very good.
Yeah, great talking about. Always love having you here, talking about a lot of the CMB products. We trade them so much, so it's just a natural fit.
Love being here too.
Good to see you, man. Well, folks, that's the morning hour here at Tasty Live. Again, markets are hanging by a thread, and by that I mean they're slightly positive. They've drifted lower from where they started this morning. It does seem like nobody wants to put any strong risk on. We'll see where we end up with as far as volume today. It does seem like it's going to be a maybe lighter volume. I don't know. We're at 450,000 contracts. Maybe we reach 1 million. We'll see how it plays out here. But stay tuned for all content Tasty Live. We got Chris and TP coming up next with Confirm and Send.
We're back. You're watching Tasty Live. This is Confirm and Send. You send in your questions. We confirm that we receive them and then maybe find a trade. TP, Tom Preston. I'm Chris Vecchio. Tom, how's your morning going?
Turning the losers into winners here, Chris, and not through any of my own efforts, so I'm not going to take credit for it. Yeah, I was down a little bit this morning, $2,000. Now I'm back up to the back up positive small, so I'm happy with that. And it's just across the board. across the board. I get filled on that iron condor, the SPX iron condor. Here's what's really odd. It's and you'll see it on the follow page, I think. Yeah, it's up there. So I sold the 0 DTE, the 7620, 7645, 7700, 7725 iron condor. I had originally put that out at 285. They dropped immediately. I was, they were like mid price is 280, 285. I was like, let me see if I can get a nickel on them. And thought it'd be cute and put it out at 285. And then immediately they go down like 275, 265, 270. Nothing done. I go downstairs, pet the dogs for a while, come back up, bang. Filled at, what did I get filled at? $3.10. So I got 25 cents better on that fill. I am perplexed, and I don't think the market makers made a mistake. I can't believe that they don't make those kind of mistakes. But I'll take it. That is a gift, a $25 gift. And so right now I have an order to buy it back for $1.50, a little bit higher than I would have originally. So if I had been filled at 285, I'd put in a $1.40 bid. Filled at 310, I'll put a $1.50 bid in. See it right now. It's trading for about $2.10. I might be able to buy it back in the next hour if they take some premium out of the market. And so there you go. That's my trading day, and that's helped me a lot, actually.
You mentioned the follow page earlier. Someone had flagged that there was a problem with some of the trades going through. That should now be fixed, by the way. So I could see here that some of my stuff hadn't been backed up since the 19th. It's now 20th, 21st, 24th, and today. There you go. Yeah, TP. I mean, the only major thing that I'd done in recent days was I had wheeling out this SMH position, and I had this, short call that I took in for about $12 and some change a few weeks ago. It was back in for $1.76. So I took that off. I rolled it back out, figuring that if my cost basis on the shares was $6.15 and I took a little bit over $10 out in my head, now my cost basis is about $6.05. So this time, instead of selling a $6.30 call, I sold a $6.15 call against it, which if I get assigned to $6.15, okay, well then the shares are out of the portfolio and there's a bounce back here. But I can continue to wheel this out, try to milk some of this out of the market. If it drops again to like $3, $2, I can take profit. I can then go kick it out a little bit more, continue to lower the cost basis on the share side of the position.
Well, Chris, you've talked about this a bunch, and this is a perfect real life example. You bought back bought back that call for $1.76, sold the next one out for over $9. That's the extra premium Chris got for managing the position. Is it going to work out? I hope it works out. It's reducing cost basis. That's awesome. I don't know if it's going to be a winning trade or not, but what he's doing is in the SMH world with a $550 stock, sitting on hoping to make a little bit more premium from an option that's worth $1.75 isn't worth it. Okay. He's much better off, I think, managing that position, rolling it out and collecting a $9 credit. What's that, about four times bigger?
Yes.
So you're collecting that much more premium by managing the position.
Right. And so if it's bouncing back, so the call's a little bit worse off today, but share prices are bouncing back. So SMH is a little net up. And that's the goal here, right? If I can get this, if this thing gets back to, 605, I'm in a world where effectively I'm at my cost. I can just take this off then and see you later, right?
Yeah.
But until then, there's semis. I feel pretty good about them still. And doing this in real time for the sake of this example here, TP, this is how you wheel it out. And you can continue to milk it for as long as you can. If this thing goes down to 500, I got a big problem. The short call is not going to subsume the amount of loss. Obviously, that comes in from the long share. So that's just, that's the consideration here to deal with. But let's talk about this market a little bit more before we get into the confirm and sim questions here. Stocks stabilizing-ish, although a little bit more weakness here on the session as the day has gone on. We're back down to 76, 79 or so. We had perked up and we're trading around 77.14 earlier here, TP. This is actually a little bit of a good news intraday development for me, insofar as I'm still holding short that 77.50, 77.25 call spread, which is part of that older dated iron condor, which when it was at max loss, I said, you know what, I'm going to hold it. It's whatever. It's now from like a $600 something loser to about $160 here. If this gives me a close below 76.50 today, I'm going to feel a little bit better about holding this towards expiration and maybe being able to get this off.
Yeah.
At just even break even is quite frankly what I'm aiming for right now. So riding it out for now.
And there's nothing wrong with that. I think it's, they were up S&Ps were up about $30 this morning. They came steadily selling off, but there's not a lot of panic. And just to look at the VIX in here, the VIX is down again. So because I was looking at this an hour and a half ago, when the S&Ps were up about, like you said, about $30 or whatever it was, the VIX was trading at 1583, I believe, 1583.
Yes.
Now the market's sold off and they've actually dropped. So the VIX is down. And
vol across the curve, TP, the U contract, new close. This would be a new low for the year. The Z contract, new low for the year.
Yeah. No, we're talking about complacency yesterday, and it's a sub $16 VIX when there's, you have Nvidia coming out tomorrow, whatever. The market doesn't seem to care right now.
You mentioned not caring. I'm just going to look at the skew here. 76.61, 2, we'll call it. So 64. We'll call it 65. Okay, so we're going to go $35 in either direction, down to the 76.30, down up to the 7,700. That
it's pretty flat.
It's pretty flat. Yesterday there was call skew when I was looking at this exact spread here on confirm and send. So it's now back into some minor push skew. That's good. Maybe the market's not totally complacent after all, heading into Nvidia, at least at the index level. But hey, we have some questions here that are related to Nvidia earnings.
Yes.
For confirm and send, and perhaps we should get into them here. As always, confirm and send here on Tasty Live every day, 11 a.m. Eastern, 10 Central Time. Myself, TP, Tom Preston, the man himself. You can send in your questions, research@tastylive.com, research@tastylive.com. And of course, please put them in the YouTube chat. So if you're on the platform, come over to YouTube, hit like and subscribe, join the conversation. First question here, Nvidia reports tomorrow and options are pricing in about a 5.4% move. What would make you sell the earnings premium versus sitting this one out? TP, I want to give a little background here on some of the data that our teams pulled together about Nvidia. And I included it in the morning note this morning. So I don't actually think that was published to the website today, but I'll read it off here anyhow, which is on me, not on anyone else. The numbers going into Nvidia this week are enormous. $92.18 billion in revenue, 99% growth in both EPS and revenue effectively year over year. Great. However, here's an interesting fact. Last 6 quarters, TP, Nvidia has beat on both revenue and EPS. 5 of those 6 quarters, the stock was down the next day. And a week later, the stock has averaged a 1-week return of minus 4.8%.
Okay.
So it's not enough to beat for Nvidia, right? But I point this out because the market's pricing in a 1-week return of minus 4.8% here. And the question that we're being asked is about a 5.4% move here, TP. So even though this is a company that has disappointed historically, at least how the share prices have performed relative to good earnings, revenue, EPS figures, it is technically been averaging a move with inside the move a week out. So I wouldn't be looking to the 3 days to expiration. I'd be looking to the 10s here.
Yeah.
That's where I'd be looking.
It sounds like a disappointed mother. I do for you kids, and this is the thanks I get. I deliver earnings, revenues, yada yada yada, and you still drive my stock down. I think this is going to be, Chris, what do I know about the semiconductor industry? Nothing, okay? But everything seems to be focused on CapEx, and unless Nvidia has a blowout number, just smokes whatever the estimates are, and says, "Oh, geez, we're not nearly our debt costs for our capex really aren't that high, and oh, by the way, the higher chip prices, and the customers are paying for it, no problem." The stock might rally up, but I think there's going to be. I'm gonna bet bearish on that, and so yeah, going out 10 days, the way I would trade that. Yeah, I mean, so what's the question? Nvidia reports tomorrow, option pricing above 5.4% move. What would make you sell that earnings premium versus sit it out? The bottom line is, as long as you're doing a one lot, I would participate and do a defined risk trade. So you can sit on your hands you can find any reason not to trade. Oh, geez, market's looking a little weak right now. I don't know. Or Nvidia's looking a little volatile. I don't know. Yeah. I'm going to wait this one out. And that starts to become a habit. That is a lousy habit or a very difficult habit to break. Okay. You come to me, Chris, and say, TP, I'm trading 100 times a day and I'm having a little trouble making money. I say, okay, Chris, maybe you want to back that down 25%. Right. It's easy to take somebody who's over trading and back that person down than it is for a person who sits it out all the time to get that person to actually pull the trigger. So I would say if I were going to be, let's say, bearish on Nvidia, the reason you would do this is that the volatility is relatively high. It's not as high as it was back in July, back in May. But at a 44% overall volatility, well, actually, let me see. Yeah, the 10 days of trading with an overall vol of 54%, that's 3 times what the VIX is. Okay, that's why you would trade Nvidia. If I were bearish on it, yeah, I might sell the 225 calls, buy the 227 half calls. I'm not getting enough credit for that, though. I'm not getting enough credit for that. The way I would trade this, and I'm thinking about doing this tomorrow afternoon, is I'd buy a put spread. I would buy the 215 puts, sell the 210 puts, and do that trade with 10 days. I would even go shorter. I would even do like a 3-day, but that's just me. But I would, the nice thing about that put spread, Chris, selling the 210s, buying the 215s, is it generates positive theta. You say, how can a debit spread generate positive theta? Because the debit spread is less than the intrinsic value of that 215 put. And the issue here, the reason why I like a debit spread is it's going to be more responsive to a sell-off in Nvidia's price than a short call spread will. A short call spread, I'm probably going to have to hang on to it. A debit spread, I might be able to turn that around for a profit quicker.
TP, if this thing is trading in at 210 right now, and it's looking at a $13 implied move to the end of next week, I can go out just beyond the expected move in either direction at 10 days to expiration here, beyond the 4.6% average 1 week move that we've seen. Same thing for, thinking about the earnings, 5.4% applied. Still $1.60, $1.59 on $5 wide strikes. That's pretty dang close to $1.67 for me.
Chris, you're right there.
I can put this on here. Hopefully it gets filled. There you go. Activity. And you know what? I'm going to put the dev team to work here. Let's see if it actually can get pushed through here now. We're going to see if this actually works. And you know what? There, I think it's going to be. There it is. NVIDIA follow page is working again. There you go. Okay.
As they say in France, Viola. There it is.
So let's go to the next question.
Anyway, that's NVIDIA. I'm looking at it. Everybody's looking at it. Yeah.
Second question, does the market tend to behave differently right after a big options expiration, and how should that affect the way we trade? TP, I'm assuming this person has in mind the monthly OPEX that we just had on Friday.
Yeah, I don't necessarily think it behaves any different. What you have to think about is anybody who's trading this stuff, that market makers who are long and short options and have stock hedges against them, they're rolling this stuff out on the Friday of expiration. They're cleaning stuff up. Market makers in general, or at least I never did, I never wanted stuff going through expiration so I wouldn't know what was happening on Monday morning. I like to have stuff cleaned up, pushed out to the next expiration. So I think if it's behaving differently, it's because maybe, and we've seen recently a little bit lighter liquidity, not as much trading activity, that if institutions, dealers are repositioning on Monday morning instead of Friday afternoon, yeah, you can see maybe a little bit more volatility if that's what the person is looking at. I personally don't factor any of that into my trading. I don't necessarily. I think it's very hard to tease out, is something different after earnings or options expiration that would poke its head up above the random noise of everyday trading. I don't think so.
So, I mean, I don't treat OPEX as, oh, it's after OPEX buy or after OPEX sell guaranteed. It's OPEX is a chance for flows and dealer hedging to potentially reset. Like TP, if dealers are short a bunch of gamma around a big strike and OPEX comes around, then the market can calm down on the other side of it. If dealers are long gamma, maybe there's pinning, maybe there's not, but that there is a sense, and I think traders, when you go through enough OPEX and you pay attention to it on the board, you'll see, the day or two after OPEX feels a little bit different because the flows now are different. And so really every OPEX cycle can be differ from one to another. Right. But it's really paying attention to the flow structure here, but it's not a directional, OPEX is done, we can go buy or sell. If anything, it may mean like the market can loosen up a little bit, and instead of having that pinned action, then things can move a little bit more freely. But there's no hard rule.
No, and I think maybe I had this question turned around, that if the person's seeing like that Friday of expiration, seeing some wacky price changes, a little bit bigger than expected, and then on Monday things calm down a little bit. Chris, that's exactly what you're saying, is the flows, the dealers have cleaned up their stuff. They've adjusted their hedges, and they're already looking forward to the next expiration. So that Monday might be a little quieter, but yeah, it's not, I think it's very hard to tease that out from random behavior.
Very difficult. Okay. Next question here. If time decay works so quickly in 0 DTE options, why doesn't that automatically make them better for selling premium? Where does the extra risk come in? TP, it's because theta is fast for a reason, because you're getting paid to stand in front of the gamma.
Mm-hmm. Yeah. So it's the way to think about that is any premium you sell in the morning on Friday of 0 DTE, it's all extrinsic value. It's all theta at that point. Okay. So you're just collecting a massive amount, and you can see that in any 1 or 0 DTE option, whether it's SPX or individual stocks. What's the extra risk? It's that you can't really adjust these things. There's no rolling or anything. Yes, you can. Okay. And I had this question yesterday come up. So TP, put on these SPX iron condors. Do you ever roll up the untested side? Meaning, I put on an iron condor. And by the way, I just got filled buying that spread, buying that condor back for $1.50. Again, for less than an hour's worth of work. Okay. So if I sold that iron condor, S&P start rallying up, and that short put side is really, really cheap, would I ever roll that up to a higher strike put spread to defend the short call side? No, I would not. Okay. The risk you're taking is that suddenly, and I've seen this happen too many times, Chris, in the last half hour of trading, the SPX will completely reverse direction. It's up 30, now it's down 15. Right. So I try to get cute and roll up my untested side to offset the risk on the short call side, and it blows through my short put spread in the last half hour. Okay. It becomes very binary. There's no like, if I sell an iron condor out with 43 days to expiration, all right, it has a P&L to it and the stock's moving up and down, stuff like that. But I'm not seeing huge swings in the P&L on those longer dated iron condors. Zero DTEs, like you said, Chris, you have a pile of short gamma. Okay. At least if the index is anywhere close to your strike prices, you're having a huge amount of short gamma that manufactures deltas the wrong way. Okay. Short gamma means that in a rally, when the stock is going up, you are manufacturing negative deltas. That's not good. Okay. And so we talk about that in a lot of different ways, about, pinning and gamma risk and stuff like that. That's what gamma risk is. Okay. You don't have that with a longer dated iron condor or longer dated options. Both the theta are high, and it's 1-to-1. Not 1-to-1, but it is directly related. The higher your theta, the higher your gamma. You will not get you can't separate those two things. Okay. So yeah, just like Chris said, you are picking up that theta ahead of the short gamma train.
There we go. Question number 4 here, TP. Is there really an advantage to keeping a portfolio delta neutral? And what would a properly balanced delta neutral portfolio look like? Depends what you mean by neutral here, right, TP? Because when you're going delta neutral, it's you're effectively saying you're making a bet against a big directional movement. But when you're delta neutral, you could have zero delta. That still means you could be short gamma, short theta. You could have overconcentration in one sector. You could have factor exposure to interest rates, for example. So, I mean, it's not no risk, right? But when you're thinking about delta neutral, it allows you to focus on things other than directional movement, like volatility, time decay, yada, yada, yada. Mm-hmm. So true delta neutral is also going to have things incorporated across sectors, across time horizons. I mean, if you really want to go delta neutral, start stress testing your portfolio. What if rates go up 1% and the VIX jumps by 2%? What's going to happen to my positions? And it's like, oh, all of a sudden, I just lost 6% of my portfolio. Well, clearly you're not delta neutral here, right?
Well, there's risk in the portfolio. So I think the way I think about this, and I'm not sure. I think we are still the only platform that has the beta weighting tool. I built that back at Thinkorswim, added it onto the Tasty platform, and I innovated that 20 plus years ago, and is still a very valuable tool. So I can have a bunch of trades on in individual names and S&Ps and all that stuff, and I can get an overall portfolio delta using the technology. Is there an advantage to that? Just like Chris said, and I'm going to make it a little bit simpler. I think if you're looking at just deltas and you beta weight against the SPY, which is our default symbol to beta weight against, I'll get I want to phrase this correctly. It is the SPY equivalent deltas of my portfolio. Okay, so I may beta weight it and see that, I'm +5 SPY deltas, which is for all intents and purposes flat. The advantage of doing a delta neutral portfolio. And the way you get into that, by the way, sell an iron condor here, sell an out of the money put spread there, sell an out of the money call spread there, do a calendar spread, things that have very small deltas in general. You have them all lined up. Some long deltas offset to shorts, teeny tiny amounts, and it's kind of overall flat. It's not like, I'm generating, 750 positive SPY deltas. Now I'm going to sell 750 shares. That's not how most people get into delta neutral. The reason you're delta neutral and you have those small deltas is, like Chris said, you're generating positive theta. The advantage is that, in my opinion, I can't pick the direction of anything. Okay. I'll show you my directional picks and I stink. Okay. I'm no Chris Vecchio. Okay. And you should say, and you never will be. So the point,
You don't trust me. You don't want to be.
and you don't want to be. So my point is, my directional opinions stink. Okay. The only thing I can count on is theta. So if I can take the actual delta off the table for the most part, and my deltas are actually I don't even look at it because I know what it's going to be. It's going to be sub 20 SPY deltas if I beta weight. And I've got some all sorts of crap on. But the point is, it lets me focus on that theta. I get paid in theta. And if I don't have to worry about the Nvidia deltas and all that stuff, yeah, it lets me earn money in time decay.
Yeah, I mean, use the platform for this. You don't want to be scribbling out, your beta calculations by doing your ordinary least squares and covariance between SpaceX and the S&P 500, and you just avoid that.
Just use
the tools.
Here's the thing. This is why we put it in there. It is more important for you to try and make money as a trader than it is to figure out the beta calculations or the probability, or how do you calculate implied volatility? You want to do that? Great. Okay, fine. But there's no real profit for you to do that. Okay. We put it on the platform. We figure it out, put it on the platform so you can focus on trading.
EP, speaking of focusing on trading, we're going to focus on trading here. 76.86 right now in the S&P 500. A little bit of a bounce here over the past 30 minutes. We're taking a brief break here on tastylive. Coming up next, the two gentlemen that we know and love, Gus Downing and Errol Coleman themselves. They're here for a little bit of risk and reward. Stick around. You're watching tastylive.
What is going on, everybody? Welcome back to Risk and Reward. Today's Tuesday. We've seen a little bit of a choppy market in the morning. We had a little bit more fall through to the downside. Now we're chopping back around a little bit more. We're seeing volatility come back in. But before we do that, let us know what you're looking at. Let us know what you're trading. Good to see you guys. Brother Gus, how we doing today? How we feeling?
Doing good. Yeah, feeling good. Portfolio is moving in the right direction. I'm feeling better physically, getting over
good day for the good guys.
Over the hump of this sickness. So yeah, I'm a happy camper. It's good to be here with you. We don't get to sit in the studio together nearly as often as we used to. Between your SIBO on Monday, both at the SIBO on Wednesday. It's 2-3 days a week we're in here now. So yeah, it's
a little bit
good to be able to hit it.
100%. It's good vibes. Market's moving. You're starting to feel a little bit better here. I know it's Tuesdays. Today's Taco Tuesday as well, so we'll see what that means for the rest of the market. I don't know if Taco Tuesday is going to extend its arms and its legs into any type of upside moves that we have here today. But again, let us know what you're looking at. Let us know what you're trading. Before we get into the market, what's new? What's going on? It feels like fall weather right now. I can kind of feel it just in the breeze of the air right now.
Yeah, it is. It is creeping in.
Summer's over officially.
Yeah,
we have to.
I think is it August 21st is officially the first day of fall. I think.
I can feel it.
Or is it September 21st?
I didn't look at the technicalities, but I could feel it in the air.
September 22nd.
September 22nd. Okay.
Yeah. Okay.
We got about like officially 3 to 4 weeks left.
About a month.
I can't shortchange it. Yeah, I can't shortchange the summer. Not out here.
No, I agree. I mean, definitely is starting to feel a little bit like fall out there. I don't know. Everybody gets all excited about the fall. And I mean, I like the fall too. You know, football, basketball comes back. It's certainly the best sporting time of the year.
We're waiting for the butt.
But yes, but being from Texas, now living in Chicago, I do not get particularly excited for the fall because it means that it is about to get very cold.
Because you know it's next.
Yes, absolutely. The sweater weather, in my experience, comes a little bit more on the back end. It feels like it's summer, a little blip of fall, then it's really cold.
Yeah.
And then but then on the back end, March, April, May, you get a lot of those 40, 50 degree days where it's a little bit more tolerable. So I'll take the summer as long as I can get it. But I'm excited for football season. Got my fantasy football drafts this week. So it's exciting week.
Good vibes.
It is.
Jumping to the market. I know we'll circle back around to that. It's always exciting when sports come back. I know last time we had any type of conversations around that, it was a World Cup. I know for your sake, you're happy that we have real, quote unquote, real football back. I won't take any offense to that. But no, I feel you on that.
Yeah, all the European soccer leagues starting up too. Football on the other side of the pond, getting going. Yeah,
everybody's lit right
now.
Yeah. Now jumping into the Tasty Trade platform over here, we can see volatility coming in a little bit today. Trading at 1557 right now. Again, we had seen a little bit of choppy action in the morning. We had seen the market sell off to the downside a little bit. Now it's in a state trying to figure out what it's trying to do next. And if we take just take a quick look at QQQ. We can see over here on the daily chart, like we brought up 1,000 times, right? The big question still is SPY going to catch up to QQQ or is QQQ going to catch up to SPY? Because we can see this pretty obvious, visible divergence right now between both the assets. SPY still near its all-time high and QQQ still well below its all-time high. And whenever SPY was hitting that all-time high in July, QQQ never made it all the way. So I think that's still going to remain the big question. And I think that is going to be shown in either one of these assets. With that being said, not too much going on in the portfolio today. Apple's pulling back a little bit on the day. We have a little bit of short delta on there, so that's nice to see. After earnings, we had that pretty big gap to the downside at around 308. We've just been chopping around and consolidating around that price range since then. We haven't done too much in there, but Apple's still the low-key MVP of the year. I mean, they're trading at 309. They've had one of the best years considering Microsoft and all those other Mag 7 names that we see in the market right now. AppLovin finally seeing a bit of a recovery on the day. This is a pretty wide market, so I mean, things can change very quickly, but we had a pretty big gap down after earnings, and we continue to stair step lower. In my opinion, one of the most difficult types of trades, whenever it's putting in consecutive red days, you never really know where the bottom is going to be. So we sold some out of the money puts, give ourselves a little bit extra cushion, collect an additional credit by selling a $10 wide spread, widen those break evens at the same time. So we'll see if AppLovin can put any legs underneath it. But I would love it because it's been a tough market to trade. It's very reminiscent a little bit of the bond market when it keeps stair stepping lower. It's reminiscent of the SpaceX trade that I had on. Those trades where there's no bottom inside are tough, right? And like you go back, depending on what decision, do I let this run a little bit longer? Am I being emotional? Am I being mechanical right now within my process? Those specific trades can throw you a little bit for a loop.
Yeah, absolutely. Yeah, AppLovin, this is one I consider taking a swing on off these lows as well. But yeah, it really is hard when there's no, well-defined bottom, whether it be technical, valuation based, whatever you're looking for. It can be really hard to decide when it's time to put those stops in because usually if there is not if there's no precedent for a bottom, it's because something is in relative free fall, which absolutely can present buy opportunities. I've been sitting here all day trying to figure out if it's time to get long Dick's Sporting Goods or not.
What's that ticker on
DKS?
DKS.
Yeah, just getting obliterated today. And it's like,
what is that, earnings?
Yeah.
Okay.
Just terrible earnings. Everything was bad, and I get that, but at some point this must be a buy. Like I just can't exactly figure out why. I'm kind of waiting until at any point today we get a 1% swing inward to show me that there are buyers in the world who are interested in this stock. But it's like at some point, regardless of how bad this earnings call was, this must become a buy. But to the same point as Errol was just making about AppLovin, I don't know where that is at all. When something is in complete unprecedented just downslide like this, and obviously this is to a much greater and quicker degree than what we're seeing with AppLovin, it's so hard to try to time that bottom.
I'd even argue that Dick's Sporting Goods is more of an established, I don't want to say relevant company, but a little bit more of an established company. So to see such a massive directional move in Dick's Sporting Goods like that, it surprises me a little.
Yeah. Oh yeah. And they own Foot Locker, which means that they own, all the other Foot Locker brands, Champs, Finish Line, all Foot Locker's assortment of stores.
Are you familiar with JD's? JD's?
Yeah. JD. Yeah.
Was that previously Champs?
No, JD is its own thing.
Is it its own thing?
Yeah,
okay.
Yeah.
Same vibes.
Making you tap into the sneaker resale days.
I know.
Yeah, no, JD has always been its own thing.
Okay.
And then to give a sneaker resale analogy, Foot Locker and all its brands, those are always called foot sites.
Foot sites.
Yeah, which is Foot Locker, Champs, Finish Line. There's maybe 3 or 4 others as well.
Okay.
East Bay is in there. So yeah, they have a whole portfolio of brands. But yeah, this earnings call is terrible. I don't really love Dick's long-term prospects. They've really lagged on catching up to e-commerce, and they sell goods that there's no reason other places can't swoop in and sell. Academy has taken a lot of their market share in the South, I know for sure. So it's not like I'm in love with this company or think that this is going to rebound to its previous levels or anything like that. Like, this move is substantiated, but I do think a dead cat bounce is imminent, and it's just about at what point I try to get involved and play that.
Yeah. Maybe a bit of an over-exaggeration to the downside for sure. I mean, shout out to Dick's. It's actually one of my favorite stores. Dick's, I think it's just one of those sporting goods stores I'm very fond of.
Well, yeah, and
similar to a Best
Buy. Core numbers on Dick's, it's just not that bad. Like EPS,
Everybody calm down.
EPS expected 376, comes in at 353. Revenue expected $5.65 billion, came in at $5.59 billion. So what's that? A $6 million miss there. And they took their guidance down from, they previously had guided net sales at 22.1 to 22.4 billion. They took that down to 21.9 to 22.2. So there's still overlap in that guidance range. Like, I don't know. Does this justify the company losing over a quarter of their value? Like, I don't know that it does. It's not, they're not going under. They didn't, they're not closing a bunch of stores or anything like that. It's just, it's a bad miss. It's bad to miss and lower, and Foot Locker sales are shrinking and all this. But I mean, Dick's stores saw 4.9% comparable sales growth. I just think this has to be an over exaggeration. But obviously the market can stay irrational longer than you can stay solvent. I'm not looking to race into this and just insist that this is an irrational move. If I had done that off the open, I would have bought in when it was down 16% and probably would have already had to lick the position. So, you got to obey what the market is telling you at times. But I think that there has to be other people who are playing this same waiting game that I am right now, and that this will get scooped up and propped up a little bit into the rest of the week. I just can't decide when the entry point is for me in particular.
No, I hear you. I think I'm going to throw that into the watch list as well. It's starting to look pretty attractive. And to the point that you just made, it's going to be a matter of, when do you want to start engaging with the market? But definitely going to put that one on the burner.
Hopping back over to the chat here. The past few days, I haven't been good at keeping up with the chat, guys. My apologies. I love all of you. I'm dearly sorry. Stan, I placed my first trade today on Tasty. I've only been watching for about a year. Took a while to move over and actually trade in it. Let's go, Stan. Let's go.
Better late than never. Is that how the saying goes?
Love it. Yeah, that is what they say. That is what they say. What's going on, everybody else? Nova, Ash Finn. Ash, haven't seen you in a little while. Hope you're well. Nice boy. Legit Trading. That's a good name. Sergio. Nice boy. I said nice boy twice. Good to see all of you. Happy to have you here with us.
Nice boy had that Google comment.
Does anyone ever buy Google hardware?
Yeah.
I keep getting emails about their Pixel phones, which always look way too expensive. I've never. Oh yeah, of course, Stan. We're happy for you. I have never had any Google hardware myself. I will say the Pixel phones look nice. I mean, if Apple didn't have such a stranglehold on me, I would heavily consider.
Yeah.
I'm just like, and it's so funny.
You've seen these phones in person though, not just like from the marketing commercial.
Oh yeah, I've seen the Pixels, and they do have some cool AI stuff built in. One of the things that actually used to always sway me on these Google phones is the fact, and I know you can do this on Android, and a lot of Androids as well, but you can just speak directly.
Waiting for the comment in the chat.
You can just
3 years ago. No, go ahead. Don't mean to cut
you can just speak directly to Google.
Okay.
It's not like Siri, where you ask Siri something and she's like, oh, here's what I found on the web.
Don't even get me
whatever.
started with Siri, right?
Yeah, Google.
Genuinely don't even get me started.
I know. It's incredible how far behind Siri is. I always like that about the Google phones. And they have good cameras and lots of like quick photo editing stuff. Like you can just draw the little circles and take people out of the background or whatever.
So why is it that whenever you're sending photos via a Google Pixel or an Amazon phone, what is it in the processing that sometimes we receive it on the other end and it's a little bit blurry? Do you have any insight on that?
Oh, no.
Okay.
No, I don't.
I'm just curious as to why that might be, because whenever I see the phone in itself, I was like, I see the crystal clear image, but why is it being processed?
It's something with the processing. I've had things like that. And I even remember in like 7th or 8th grade, one of my buddies had like a beater Android phone of some sort. And we were taking pictures for him to post on his Instagram. And when
what year was this?
I don't know, 2015.
Okay. It was a few years after Instagram actually came out.
Yeah. So I took the pictures on my phone because I had a phone that had a better quality camera. He had like one of those serious potato.
Is this an iPhone or Android?
I had an iPhone 5, I think.
Yeah, those are clean and crisp.
Yeah. And so I took the pictures on there. But even sending the pictures to him, when he went to post them, they would be blurry.
Okay.
Like it was the strangest thing. And he wound up having to log into his Instagram on my phone and post them natively. And then they went out just fine.
And they were fine.
Yeah.
Okay.
But it was like his phone just couldn't even handle the resolution. I think we've come a long way since then. I don't think anyone would stumble across this same problem with modern smartphones. This is a decade-old story.
I don't know. My mom still sends me images, and it is like Minecraft pictures. I'm like, what happened on the way to sending this to me? Because I can't even depict what this image is about. But yeah, that's odd.
Yeah, and Herschel just hitting it on the head here. Apple ecosystem, my files accessible from all devices, and security stance keeps me. Yes, Herschel, I agree with you. They just have me so intertwined. Apple's done such a good job of that. And it is so funny because I am just like a perfect little mindless lemming consumer. I mean, I know that the Galaxy phones are getting all the iPhone stuff 2 years in advance.
Yeah.
And I just don't care. I just can't get there. I like my Apple ecosystem too much.
Did Apple win with simplicity? Is that where they're really?
I think so. I mean, they were definitely first to market in smartphones for
sure
as well.
For sure.
It's the big thing. I mean, like you guys have probably seen the Steve Jobs press conference where he announces you're not going to have to use a stylus. You can just tap it with your finger. Yeah. That's like a revolutionary thing at the time.
And as he said that, still years later, Android was still developing new devices with the stylus.
Yeah.
Which is funny how he's calling those dated, and we haven't even got to some of the like the Note 2, the new Notes.
Yeah.
I was in love with those phones, but it is funny.
Yeah. So I think it's partly the simplicity for sure, but I think it's just the ecosystem.
Is it the ecosystem? Is that what they're doing better?
What? Yeah, I think so. I mean, it's just everything is so transferable from one device to the next. You have all your stuff everywhere.
I think
you can
the AirDrop in itself
and FaceTime from
has
everything.
me in a chokehold.
Yeah.
Just AirDrop.
AirDrop, yes.
Everything else aside, the AirDrop got me.
Yeah.
So.
Yeah, all of it.
Google down a little bit on the day, actually. Speaking of Google, down about $1.30, just a 0.5% down today. So IB Ring trading at 14.9, pretty low, but still near its highs. Nothing like Apple right now. Apple's still trading near its highs, so we'll circle back around to these products. But we do have a position in one of the two of these. We did buy a put yesterday on gold. We've seen a little bit more volatility from that market. We had gapped down overnight. If I zoom down in here into the daily chart, you can see overnight. Let me go to the 5-minute chart. The liquidity or the volatility from a visual standpoint is a little bit better on a higher time frame whenever you're looking at an asset that trades lower volume levels. But overnight, we had a gap down on GLD from 424 all the way down to a low of 422. And we've seen only an uptrend since then. We put in the lows today at 1422.34. Right now, trading at 426.80. That's not helping out the put that I bought yesterday for trades of the day on GLD, but we have about 9 days left. We'll see how this ends by the end of the week. I'm thinking for this gold put, because we're working against time, I don't think I'm going to hold it into next week. There's 9 days left to expiration. Depending on what happens, maybe if this remains in drawdown, maybe we take it off and manage it before the week ends. But there's 9 days left to expiration. We'll give it a little bit more time. See if we get that directional move that we're looking for. But no, these metals in this gold market is still trending to the upside, still looking pretty strong.
Yeah. The currency risks continue to prevail. Once again, gold just moves in perfect tandem with bonds. TLT logging another good day for me today, up at 83.35 now.
Shout out to bonds.
Yeah, just need one more dollar, and I can get out of these. Start to get out of these 600 shares. Yeah,
nice, actually,
we're climbing. We're climbing. Yeah, I need actually pretty much exactly one more dollar. 84.33. Is my spot here. So
look how volatile these bonds are.
I know,
right? Like 4 days ago, we were at 82.98. We went to a low of 81.81. Now we're back through the swing highs since we've been in the last 7 to 14 days.
Yeah, no, it's incredible. This has become my the first thing that I check every morning when I sit down. It's like Schrodinger's position. It's alive and dead until I open that chart and see what TLT is doing pre-market. But getting a good day out of it today. Point B also didn't mean to overshadow your comment. He says, I moved from iPhone to Pixel and love that transition. Google Pixel phone is amazing. So it is happening. People like the Pixels. And Cryptozer. I was trying to figure out if there was a dozer in there or if it's just Cryptozer. Not sure what you think about this play. I bought some $30 VIX calls for November. I'm pretty sure you guessed my thesis.
I thought he was going to say IBIT or Bitcoin.
I do definitely see the midterm thesis with the VIX calls. And I don't hate it, Cryptozer. I'm actually a proponent of trading VIX directly, which is not something that people will often do. And there are certainly more advantageous ways to trade a volatility environment. But I am almost always keeping some VIX calls in my back pocket just in case, because if you get the broader market downturn and all of a sudden all my positions start to go against me to an extent, especially if it's drastic, the way that VIX will squeeze upward and the premiums just elevate on that call side, it does act as a pretty good hedge. I mean, obviously it's not going to hedge my 12 losers, but it might do 3 or 4 of them with how big those spikes in VIX can be when they come through. That's why I choose to buy the premium into VIX.
They're violent when they come, for sure.
Yes, absolutely. So something I commonly keep in my back pocket. At this moment, I have September 9th, 20 calls in VIX, which are just kind of my rainy day fund, if you will. If things go south and VIX goes to 30, I'll be sitting pretty. So I don't mind it at all.
Yeah, and things are getting pretty quiet right now. Maybe even if we don't get to 30 within the next 7 to 14 days, I mean, 20 is a far distant cousin, just right around the corner. So see what we get there. Other than gold, right now, I still am in IBIT. This has been the most, I would say, the most difficult position to manage right now. This is whenever IBIT started to catch more momentum to the upside from the press conference that Donald Trump had last week. We've been going back and forth about how the Clarity Act is the next thing to pass. That's kind of in motion right now, but we're wondering how this overall crypto market is going to respond if the Clarity Act doesn't go through, or maybe this is the market pricing in the potential for the Clarity Act to go through. So if it doesn't go through and we're pricing in something that should or potentially go through, and I know it's all speculation depending on what's getting priced in when we talk about these conversations, but what happens if it doesn't go through? Do we have to unwind everything that we just wound up?
Yeah, you make a great point. I actually think,
what are your thoughts?
I don't know. Typically, in any situation like this in the broader market where there is pending legislation and we see stocks running up, in a way that they would if that legislation were to pass.
Right.
I typically think this is fully pricing in the legislation and the expectation is in should it get passed. I don't think there's going to be too much more upside here. With Bitcoin, though, with the, esoteric, undefined nature of the valuation of crypto in general, and with the hype that can drive crypto and drive Bitcoin upward, I actually find myself in the opposite camp here. I think that if this gets passed, we will go much higher. And I think that if it does not get passed, nothing will happen. That's my thesis.
Okay.
I think that
a little bit of a twist on it.
Yeah, I think that all this was just, like I said, I think it was just a powder keg this whole time. It just took the one little spark to ignite Bitcoin, get people a little bit excited about crypto again. Because as I said yesterday on Risk and Reward, nothing has changed here. We knew Trump loved the Clarity Act. We know that Trump is the most crypto-friendly president that we've had in history.
He's already loaded up.
Yes. we know that he's levered up on crypto for sure. And so it's not like any new information has come here. All he said was, hey, Congress, pass this act that I like. We knew all that already. So really nothing has fundamentally changed here. And we see this type of move in Bitcoin, which is what leads me to say, I don't know that we necessarily see that much of a down move if the Clarity Act doesn't pass, just because I think that it was really just the spark that lit the fire is all that matters. And I don't know that there would be certainly I don't know that there would be a full scale correction back to the low 60 range. Maybe you see a little blip on the radar, but I do think that we'll at least hold over 70 or so off of this run, regardless of what happens with the Clarity Act. And I think if it does get passed, because again, it's just such a hype driven vehicle, we would see a leg higher in Bitcoin.
No, I think it's a good point, especially with how cyclical these markets could be. I would be surprised if the market gave another opportunity to get long at those prices. After seeing the run that we just went on over the last 3 to 4 days, I think a lot more people are aware and are a little bit more attentive now to this crypto market since it's been asleep all summer. This is a first pop, first sign of volatility. These are the first crumbs that any of the crypto bros have gone for the last 3 months. I mean, it's been quiet.
Oh yeah.
I mean, it was quiet down there for a long time.
Yeah, absolutely. And also, I don't even know. I don't know that I buy the thesis that the Clarity Act helps crypto all that much. I mean, yes, it would regulate it. That's the whole thing. I've gone into this on the show before, but it would all the Clarity Act aims to do is discern when a digital asset is a commodity and when a digital asset is a security. So the commodities would be under the CFTC, the securities would be under the SEC, and there would be regulation for both. And so the thesis there is that should that act get passed, there would be broader public trust in crypto because there's actually a regulatory body backing these things to prevent insider trading, artificial price inflation, rug pulls, all the things that everybody's scared of with crypto. Not that anyone could rug Bitcoin. Maybe Michael Saylor could rug us on Bitcoin if he wanted to. But does that, like, how much does that matter immediately? Are the people who are afraid of crypto right now going to all of a sudden be giant crypto bulls just because there's a regulatory body governing it? I don't know. I don't know.
It's a little bit more. Maybe it's a little bit more pointed towards institutional operation. Like maybe that gives the green light for or the institutional side to move forward on whatever it is that maybe they've been planning.
Yeah,
you're right. I don't think it would change much from a retail perspective.
It's certainly true. Yeah, retail. I don't know that it changes much, but yes, perhaps the institutions and particularly the really well-established institutions who are scared of trading a product, even one as established as Bitcoin, without a regulatory body behind it. Perhaps it swings them, and obviously institutional money is what ultimately moves markets. So yeah, maybe there is something to that.
Who was it that was whose name was attached to crypto? Was it Peter? It wasn't Peter Thiel. Who was? It was Michael Saylor.
Yeah.
Michael Saylor's been having the best 4 days of his life.
Yeah, that's what I was just saying. He could rug us on crypto if he wanted to. If there's anybody in the world who has the ability to rug pull Bitcoin, it would be him, provided that Satoshi is not a real person, which is the thesis that I've ultimately landed on. I think it's a group of people is my thesis. I won't do it right now, but Peter Thiel might be part of the Satoshi Nakamoto group, all right? This is deep stuff. Legit Trading. Howdy from Texas, says Legit Trading. Howdy, brother. Happy to see you.
What's the area code?
What
for you?
Oh, for me?
Yeah, what was the area?
I'm Houston, so 713. There's 3 area codes in Houston. Actually, there's 4 now.
Shout out to 713.
713 is the OG. Okay. Then they did 281, and then 832, which is what I have. Yeah. And then there's also, I think they just added 346.
Okay.
So it's just, they keep running out of phone numbers and have to roll out new ones. Yeah. Which is why I don't really understand either, because to my knowledge, we only have one zip code or one area code in Chicago, right?
I'm actually
it's just
can answer that.
312?
Is it 312? I wasn't even sure what the zip code was.
No, there's 3. Okay. There's 3. Yeah. 312-773-872 are the 3 in Chicago. So, okay. Yeah, that makes sense.
Yeah, Frankie's saying Michael Saylor likes surfing in a hurricane. Yeah, I guess some people like the stakes to be a little bit higher. Maybe
Michael Saylor is such a good Twitter follow, you guys. If you're not following him on Twitter, or at least checking his Twitter, he just posts like AI generated videos of himself doing stuff all the time.
He probably thinks those videos are so dope.
Bro, it's hilarious.
Like before he posts, he's like, "Oh, I'm eating."
It'll be like him with laser eyes, and he like rolls into a Bitcoin store with a baseball bat and starts beating up the cashier like to rob the place. He's like, "I want all the Bitcoin." I don't know. I think he's just messing around. I mean,
he's just having fun.
I think so. I
mean, when you get bored sitting behind a computer all day, like you gotta have fun on the socials.
Yeah, I would bet production is hard at work on finding a Michael Saylor AI video tweet right now. Mike Butler sends me these Michael Saylor AI video tweets like daily. Like every time one comes out, I get a message in my Twitter inbox.
Turn your post notifications on.
Oh goodness. Okay. What else we got going here?
What else we got?
SpaceX logging another green one here. Showing 138, pushing 139 now. Yeah, just closing that gap slowly but surely.
Yeah, not too much movements from the pop from last week, but we're consolidating, looking a lot better than we were at 105 for sure.
Yeah, and then IBM. IBM is the other one that's putting in a pretty, well, not sizable, but reasonable, nice day for me here. Starting to maybe catch a bounce. Looked like it was going to slide here. This could absolutely just be another small uptick in this. What are we looking for here? Rounding top that we're dealing with here. So yeah, definitely something that I'm monitoring, but that is finding itself towards the top of my portfolio today, the long IBM position.
Got to keep an eye on Old Faithful. Not much I did today so far. I know right now we're still short on semiconductors. We've been using the semiconductor ETF, SMH, to gain some exposure to that market. So far, it looks like a potential dead cat bounce has been forming on these semi names. It could completely reverse, but I mean, something that would confirm the dead cat bounce is if we end up making lower lows after rallying from 504 all the way to a high of 601, with the all-time high being at 672. So will we go back to all-time highs? Will we sell off lower? Time will tell. But we did sell an out-of-the-money call spread. So time's on our side. Today, we ended up selling a 0 DTE. We sold 3 0 DTE out-of-the-money call spreads at the 7-Eleven strike on QQQ. So I'm hoping so far, right? Like we've seen a lot of consolidation right now in the Qs and in the overall market. Right now, we've tried to rebound off these lows a bit. So since we're selling to 7-Eleven, we collected about 40 cents in credit. So our break even is going to be around 7-Eleven 40-ish, which is around this kind of an intermediary high that we had put in, around 10:30 today when we gotten started. So right now the position's doing pretty well, right? I mean, the market hasn't really moved anywhere so far, but we do capitalize on a little bit more consolidation or that sideways movement. This is a 0 DTE, so it expires by the end of the day. We won't take the max loss on it, but if we do reclaim some higher levels on NASDAQ or QQQ for the day, we'll look to manage that. But that's all the directional trades we've really had on the day in the portfolio. It seems as of lately, over the last couple of weeks, actually, that we get a lot of volatility in the first hour of market open. And then after that, it almost feels like the volatility just gets sucked out of the market. Like the market isn't doing anything else from after the first hour of market open. That's how it's felt and been the story over the last 14 days at least.
Yeah, this week I feel like is
odd, right?
Yeah, it's weird. I mean, we're kind of just in a holding pattern for Nvidia earnings. I think it's like everybody's just waiting for the big binary event. Doesn't want to put too much risk on before that happens. But yeah, I mean, obviously this is the Super Bowl of this week. Not to be confused with the Super Bowl, the trade that is often put on. Just to be clear,
it doesn't help.
What?
I'm still confused.
Yeah, so
I see people calling it the Super Bowl in chat. Like they'll call the trade the Super Bowl.
Yeah, I've seen that. I've seen that. Certainly interchangeable. I will say as well, Marvell reports on the same day as Nvidia, and can I just say that is so smart because if you're Marvell,
you're trying to hide. What's happening?
No, I just think if you're Marvell, let's say Marvell reports Monday instead, Monday after the close. If Marvell is going to report Monday after the close, they're just going to take a giant move on Nvidia's earnings anyway. So why? Let's just throw the baby out with the bathwater here. Put your earnings on the same day as Nvidia, and just let Nvidia move you. And your numbers literally don't matter. Like if Nvidia smashes earnings, Marvell is going to the moon, and it doesn't even matter. They could miss EPS and revenue and lower their guidance, and everybody's going to be like, well, Nvidia's growing and needs the plumbing that Marvell provides. So yeah, this is brilliant. I think everybody should be doing this. If you're a tech company out there, if Nvidia is going to move your company, just put your earnings on the same day as Nvidia. Who cares?
Write that down. No, it looks like earnings are going to be the 27th. I'm not sure if those are going to be before or after the bell, but the 27th. Today's the 24th. Today's Tuesday. What is that? Friday?
Thursday.
27th.
Thursday.
There you go.
Yeah.
Can't count.
It's hard sometimes.
And then Nvidia. Sometimes it is a little difficult. Look at numbers all day. But no, Nvidia is reporting. What is that on Wednesday tomorrow?
Are they Wednesday after the close?
I think they might be.
I thought Nvidia was Thursday also. Oh, I'm off.
So just a day off, but still
same day.
To an extent. Yeah. To an extent.
Actually, I take it all back about Marvell then. Idiots. If you're going to do this, go before and let Nvidia save you. Don't go after.
There you go. Now,
don't pop your own bubble.
Yeah.
Unless you're confident. Okay. Are we learning things here? Does Marvell have to smash earnings because they're so confident they go the day after Nvidia? Is that what's happening here?
That could be the play. And we will find out by the end of this week.
Maybe there's a trend. If next quarter all of a sudden Marvell is a day earlier than Nvidia, watch out. maybe we're catching on to something here. Very in-depth tech conversation going on about Ubuntu and Linux and the places that you can run it here.
Copper?
Love it, guys.
Yeah. I'm going to steal a little bit from that conversation. I know Frankie has brought up copper a couple of times. I think that was HZ or was it HG? I forget which one it was.
HG.
Was it HG?
Yeah.
There we go. /HG. Yeah, no, copper has been logging some really, consistent weeks in the market. Just steady higher highs and steady lower lows, or higher lows, I'm sorry. With the market looking to test another all-time high here really soon. If I look at the daily chart, it's lacking a little bit of volume, a little bit of liquidity on the daily chart, but it's still a really nice moving asset. It seems to be one that you could swing trade a little bit more comfortably than some of the other assets.
Yeah, copper is like copper is like its own entire thing. It will move with the metals sometimes, but it doesn't track gold and silver the way that like platinum does.
You see the difference in liquidity there? Like just looking at that daily chart, like how choppy this is and how slow moving. Like you have so many more dojis everywhere. Then we go to the same 1 minute chart on gold, and the liquidity and volatility is a lot cleaner there.
Because gold's cool, man. No explorers ever found a pot of copper.
Still cool.
No, there's no pot of copper at the end of the rainbow. No copper buried in a chest.
You said there's none?
I don't think so.
I'd be pretty sad if I got to the end of the rainbow and it was straight copper.
I don't know.
It'd be pretty sad.
You see that chart?
Yeah, actually, it's worth something. It's worth something.
What weighs more, a pound of copper or a pound of gold?
That's true. I'd probably go with the pound of feathers. Let's quickly check out our watch list, see what's been moving on the day. Let's look at our high options volume watch list. Take this from high to low, or do we want to start low to high? You want good news or bad news first?
Yeah, let's do the good first.
All right, we're gonna do the good. We got NDX at the highs.
NDX jumping
Light.
whole chip sector up today.
LITE still up there.
What is that?
Oh, I almost thought this was the small cap, that penny stock that you had on.
Oh yeah, that was.
Like, yo, this thing's
that's a light.
Oh, a light. I was like, yo, check your portfolio, bro.
Fair. No, fair confusion. ALIT is the one. A light. Yeah.
Light trading up $33 and some change on the day. SPX up on the day. AMD and Dell and Moderna up on the day. Let's check those out. I haven't been looking at the post action on Moderna after the cancer cure.
Moderna, yeah. Weird spot for Moderna. I mean,
it's
they're
a
just
tough trade.
Yeah, they're just trading in the middle of that range.
It's a tough trade.
Yeah, the 1 day chart looks so goofy, but it is catching some momentum out now. I mean, it looked like obviously we're still very much within the engulfing green that we saw after the melanoma news broke. But
that's a tough trade.
It is,
in my opinion.
And I'm not surprised to see it catching this type of bid. I mean, this means that there is a substantial number of people who decided to step in front of this thing at 142 this morning. After a red day yesterday, after this giant green candle that we saw, the bottom of which we have not retested. So yeah, shout out to everybody with the cojones to be stepping into front of Moderna and pushing this up to 156 today. This is one where I know there is somebody on Wall Street Bets who is 5 days late to this news who raced in and bought Moderna this morning, and their portfolio is doing better than mine today.
Oh, for sure.
And good on them. You know what? Everybody eats. As long as you're not an institution. I don't care.
Thanks. You guys get the bailouts. Y'all good. Y'all good. No, just getting a look at where most of this trading activity has taken place on Moderna after it had released that news. Right now, we're kind of consolidating within that swing high and that swing low off that initial move that we had put in. I think a lot of traders are going to be trying to figure out, are we going to pull back a little bit from here, or are we going to see some type of continuation to the upside? Either way, I think being on either side of the trade is a difficult one. So all you can do, I guess, is manage your risk no matter what the market throws at you.
Yeah. And this is actually just a pretty good exercise in general of, and it's obviously like the biggest catalyst you could possibly have, but a good exercise of how the volume profile can quickly move. We find a new range of value.
Yeah.
Quick.
Very quickly. Very, very much so. We'll see what we get there. Moderna trading at 156 right now. Another one we want to take a look at is Dell.
Novo Nordisk, please do something. If you can hear me, Novo Nordisk.
What was that ticker again? We'll look at that one right after this. Novo Nordisk.
NVO.
NVO.
We don't got to look at it.
I know we're
gonna
gonna
make me sad.
Oh really? Oh okay.
No, yeah, Novo. I mean,
I gotta bring up the
they are up 2.5% today. I mean, I guess I can't look a horse in the mouth. I just need them to log, I don't know, 20 more 2.5% days, and I'll be in a good spot.
Oh, that's not too bad.
No, it hasn't been bad lately, but it's so far off the highs. I just have a giant leap that I've just been getting thetaed on for ever now.
Just getting thetaed on.
Yeah, just getting thetaed, man. Theta just beating me down. But yeah, I was looking for, I mean, this is just another one. Novo Nordisk, and I will say, I mean, as much as I complain about this company, this is still totally a buy to me. And in fact, I might, I'm not gonna roll because my position is literally worthless. So it would just effectively be the same as just buying another leap. But this is one that I may look into another leap on. These big pharma companies, Novo Nordisk has their hand in the weight loss stuff like crazy. I mean, they're perhaps the biggest player in that space. Obviously, those things are going to do well for them. And these pharma companies, it just takes the one thing. I mean, like we just saw with Moderna, it just takes the one positive trial, the one pandemic. I mean, whatever winds up happening, these pharma companies can take big swings quick. And with a company like Novo Nordisk that we've seen over 150 in the past, trading at $48, it feels like another UNH type play to me. Where, and I don't know that we'll see those highs again. You can tell that was an unsustainable level, but could it not get back to 100? Could it not get back to 80? Absolutely, I think it could. And they have a very large market share in the medical space right now that just haven't done anything groundbreaking to send shares flying higher again. But really, really good gamma play to have in your back pocket. I think it's at some point it's got to catch the pop. It can't stay down here forever.
Yeah. And nothing has to happen, but it's shown that it can make these moves before, at least. And I know over here in 2023, I mean, we're trading at $46. A week later, we're trading near 100, over 100. Less than a week later. So I mean, these names have showed that they can move whenever they want to move if given the right catalyst. We'll keep an eye on it. Back to the quick watch list as we have a few minutes here left. I know Bloom Energy is up on the board today, up about $12 and some change, 6% on the day. Let's go to the daily chart. Nice gap up to the upside, near its highs right now. IB rank is sitting at about 1920. I'm not going to be doing anything in here, but I know we were talking about Bloom not too long ago. You doing anything in Bloom Energy by chance?
No. Nancy
Okay.
Pelosi sure is though.
Is she?
Yeah, I
That's on her
didn't
list.
have that info off the top of my head when
Nancy
when we were
watches.
talking about Bloom, but yeah, Nancy, she has 15,000 shares of Bloom, I think, and I believe that's right.
We just got to add the politician watch list directly into the platform.
Okay,
That'd be kind of funny. SMH logging a pretty good day on the day, which not looking good for me. I have short delta right now on an SMH, down a little bit on the day. Overall position is getting near break even. We'll continue to pay attention to that to manage. Robinhood doing pretty well today, up about 7.5 points. Let's go to this daily chart over here. Robinhood looking like it's wanting to go back to its highs. I know Vlad has been on a lot more podcasts lately. I know he was on Iced Coffee Hour, Graham Stephan. I think Vlad was also on a couple more that I can't recall right now, but he's been on tour, which makes me think that he's marketing right now and he's trying to push something. Whenever you see a CEO on multiple podcasts consecutively, there's some campaign going on right now. So I'm curious to know
politicians.
I'm curious to know what Robinhood is cooking up right now. I know they've been talking a lot about AI trading, all these kind of things, and I thought it was funny in the interview with Graham Stephan and Vlad. Vlad was trying to make it seem as if he was saying he got a lot of backlash because people were saying that he was pushing active investing, and he had a really great PR response to that. But I also think that if you just give your traders the tools and educations that they need to be able to be engaging with the market, I think they'll be fine because people are going to do whatever they want to do. I think you just equip them with the best tools and knowledge to be able to do said thing. But he was defending it fairly strongly. But he also touched on just individuals being able to manage their money a little bit better there. And I think that calls for money managers could be going extinct in the next 10 to 20 years.
Oh, yeah.
With all the tools that even brokerages are starting to offer to their clients. And then again, the education point, which is the most important. I mean, if you could do it yourself, people are really starting to see behind the curtain, right? Money managers are needed, especially when things get very complex. But some people might be, giving away certain fees that they might not have to if they had put in a little bit more time to do certain things, right?
Oh, I agree. And there's levels to it. I certainly don't think, being a CFA is going to go away entirely as a job, especially as it pertains to more complex things, especially retirement. It's very hard to juggle all those things, figure out your perfect retirement age, where all your distributions are going to come from, the best way to do all that, how to scale your retirement portfolio down into less risky assets as you grow, as you get older, all these things. But at the same time, I can't believe that there is still an entire industry of people charging AUM to put your money in SPX for you. It's so strange to me. And that's still
it's
a very
just profiting.
prominent job.
I think there's a lot of businesses that profit off of ignorance.
Yeah. I don't even know if it's ignorance. I think it's just lack of knowledge. It's I suppose it is.
Not in a bad way.
Yeah,
not with like a negative
it's not
stigma.
Willing ignorance. Yeah, it's just people lack the education.
You don't know what you don't know.
Yeah, but I do think as AI rises to prominence and can answer any questions and becomes more and more integrated into various brokerage platforms and you can ask things directly, I think that takes a lot of that away. And yeah, just in general, I think that there's just, and actually same is true for fitness to an extent, but there is certainly a push, especially among our generation of people wanting to handle their finances on their own, wanting to build for the future and understanding all these things a little bit better. Social media perhaps even helps with that a little bit. Lots of good financial personalities on social media given the right tips. Humphrey Yang, I love Humphrey Yang. He gives great, it's nothing super complex. He's never going to tell you about how to put on a calendar spread, but it's all very good, just safe baseline advice for somebody who doesn't know much about finance off the top. Rich people don't want to use AI. I think they will still have someone else do it that uses AI. LOL.
100%.
Yeah. That's a good point, Big Deal.
I agree. Yeah, they will still use AI. But yeah, I mean, if you're in the position, I mean, Americans still like convenience. So I mean, if you have the means to do so, you're still going to pay somebody to do X, Y, and Z, even if you can do it yourself. You have the knowledge.
Well, and I will say also, I mean, I think that there is something to be said about, I think that in the AI era, in the social media era, where everything is so digital, I think that there does start to be a price that you can put on human connection and and actually having a conversation with a real person in a room. Those things are getting more and more scarce. This is actually something that the Live Nation CEO talks about a lot, is that he believes ticket demand continues increasing and increasing and increasing because a growing number of the social things that people do with one another are happening online, are happening on Discord, are through social media, and people are beginning to crave human connection more and more and more. And I think as AI rises to prominence, as AI takes over customer service and all these other roles, and you're constantly just talking to AI left and right, I think that there will be a demand for real people.
I was just talking to AI customer service less than 48 hours ago, and I legitimately wanted to jump out of my window. I almost did. AI customer service is one of the worst applications for AI to any business. Customer service should never be AI or any other AI bot, any type of computer. Customer service should always be human-to-human connection.
Yes.
I mean, you're going to drive people crazy.
Yeah.
And I mean, you have such nuanced comments and concerns when it comes down to customer service. So nobody wants to speak to an AI.
Yes, absolutely. And especially these AI chatbots that can't do anything. It's like, you guys, port ChatGPT, please. Like, just port a Claude project in here and train it on all your company data and have it actually talk to me if we're going to do the AI. Do not have a customer service AI chatbot that says, I can't help you with that. Would you like me to connect you to a representative? What are you here for? You should know everything about everything and be able to at least give me a better answer than that. It's insane.
I got a fun one for everybody. Go on your ChatGPT when you have time and type in, if you had to warn somebody about me, what would the description be, or what would you say?
Interesting.
And it's going to give you a hilarious response, because you're going to be like, yep, that is me. That's so me. Now, as we come to a close here, anything else top of mind before we wrap?
No, nothing top of mind for me. I'm willing this stuff higher, and I think I am about to take a swing at Dick's, so we'll circle back on that. Might end up being the trade of the day. We'll see.
Omaha. With that being said, guys, be sure to stay tuned for more amazing content we have coming up. Next, we have more amazing trades of the day ideas coming up at the top of the hour too. So be sure to stay tuned for all amazing content coming on next. Everybody else, appreciate you guys taking the time to come hang out with us. We always appreciate it. We'll catch you guys here in a little bit. Peace.
You bring it, we match it. Get a 3% cash match on all qualifying deposits, up to $3,000. You can trade stocks, options, futures, and prediction markets. Tasty Trade. Trade with us.
Global markets never sleep. Explore them with Forex. Now available on Tasty Trade. Get in on over 80 Forex pairs. 24 hours a day, 5 days a week. With the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Every time he explains something to me, I ask him the same question.
He always asks me the same question.
What's the trade?
I'm not always sure that's the right question.
It's the only question. Retail traders don't have a thesis on in their portfolios. They have positions on.
And if you don't know why it's moving, the position is a good guess.
And if you never get to the trade, the reason has no meaning.
Same market.
Different question.
Tasty Trade has crypto, and you can trade with zero commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs. 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Investors Business Daily raves about us. Stockbrokers.com says we're best in class for futures trading, and Broker Chooser thinks we're pretty great too. So what else can we say other than Trade like a trader. Tasty Trade.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Well, that's not exactly what we're doing. We're doing some trades from the research team. We got Sahil here. What's going on, man?
Yeah, not much again.
Not much again. Yeah.
The market's still doing the same old thing.
Yeah. It's kind of what I would expect. It's kind of quiet a little bit heading into this couple of days of risk events. But I mean, to be fair, we are at 591,000, so we might make $1 million today. We'll see. What trades you got here?
Yeah, so trying to do 3 different strategies, see what we come up with.
All right.
One's the earnings trade for Nvidia tomorrow. So this might be something you want to put on tomorrow, because the earnings are market close tomorrow. So it's just an iron condor. This is probably the earnings that people are most looking forward to, seeing what happens. Last time the earnings happened in Nvidia, I don't know, it didn't really do too much. Everybody was like hyping up, the stock's going to go up to the moon, like 5% extra, whatever, and it didn't really do anything. So we're going to do an iron condor because obviously we don't know what direction it's going to go in. 200, 195 on the put side, and then 225, 230 on the call side. So just $5 wide, $1.58 credit. Yeah, see what we come up with. Nice earnings trade.
Okay, I see you. I would wait till tomorrow to put this one on. But I like the idea. I mean, look, the stock hasn't moved a whole lot over the last couple of earnings. And I actually was having this discussion with Jim Carzon yesterday, this idea of there's a lot of expectations around the stock. Most people are probably long calls heading into the earnings, and then for some reason it just kind of peters out, and then you sort of get this unwind, but it ends up being kind of like this, just a lot of movement vol-wise, but not a whole lot stock-wise. So I can get behind this one. I'm going to wait maybe till tomorrow to maybe do it.
Yeah.
If I do it at all. What I would really like is for the stock to go down. It was down yesterday. I wanted it to go down more below 200, and then I wanted to get long into earnings. But
so you can
now,
put some puts on there.
Yeah.
I got it. Yeah. Something you want to wait till tomorrow. It's kind of 11:30 period. Trying to put on some trades during this market lull, during this lunchtime. A little difficult. So I'm trying to see different strategies and stuff. But that's
makes
earnings.
sense.
Yeah.
I mean, look, it's a 79 implied volatility in this expiration cycle. That's pretty elevated when you look further out. You look at November. I mean, the real vol is around 42, 40, 43 or so. So this 79 vol is really high in the front for sure. It's a good idea. I like it.
Next one. So another one that I'm in a lot is SanDisk and Western Digital, a bunch of storage companies, and trying to figure out what to do exactly in here because it's been a little bit on a down move. Western Digital is like 17%, 18% down over the last month or whatever, which is kind of a little wild. But I don't know if it's going to go up too much because a lot of the investors, a lot of people are trying to get away a little bit from the AI stocks, from the storage companies, from tech stocks a little bit. But I still think it's going to come up. I think 17% is a big drop. So when something is moderately going to go up, but you're still moderately bullish on it, but you're not like all the way, that's why I like to pull out butterflies, stuff like that. So I have, so it's 450 on the call. Then you're selling two of the 500s and 550. And so what are we thinking about this?
I like the idea. On the one hand, I don't want it to happen now because I'm actually short vol in here for October.
Okay.
Just because it was kind of elevated and really hasn't been moving. And so it was just one of those places with a lot of premium in this thing. I am actually, it wouldn't bother me if it did. So my current trade is I'm short the 630 call and I'm short the 370 put. So a bit of ways. But I like this idea. And again, let me just pull this up. 450, short 2 of the 500s and long 1 of the 550s. So classic call butterfly. Got this glare on the screen, cracks me up. In this case, $9. I think Mike Butler was looking at this one this morning, actually, in this name. And again, you got to go a little wide on this type of name. I mean, this thing can move, and we've seen it move, even though it's calmed down. But I like the idea. Again, going to 500 really only gets you. It's not like it's a crazy move. It gets you right back to.
I'm thinking the move is not going to be too much. That's the idea with it. Because, but because these, I don't know, it's SanDisk and Western Digital. I'm even surprised that it moved this much right now because these stocks, you don't think they tend to move that much. But I don't know, everything is volatile right now. So,
I mean, again, I like this because it's depending on what you get it for, like it moves around a little bit, but let's just say it's let's call it 850. Let's say you buy this thing for 850. This is a $50 wide spread, so $41.50 is your max profit potential here. And again, I mean, assuming, whoops, I didn't mean to do that. Let's move this back to 50. There we go. Come on. Oh, whatever. Go in here.
Around
See,
there.
I know it sucks.
Trying to do it on the chart.
I can never get it right, man, the way I do it. I don't know why, but there we go. Around 500.
Yeah.
The reason why I like it is because this is regular step expiration. This is triple witching cycle. You see a lot of times names will gravitate to those big numbers at expiration, like those round numbers, something like 500 is possible on the order. Again, you're just taking a shot here. Nobody knows. These are like 27% pop ideas, but I don't really pay much attention to the pop. I pay attention to the time and how close we can get there.
Well,
and
when you're doing a debit trade, the pop is kind of a little bit.
and I don't really care about that. I just care about like how close can this thing get to the strike, and is it going to continually move up heading into expiration? I don't think about the max that I'm going to make on this, honestly. Like I think about how much money I can make before the trade gets to expiration. To be totally honest, that's how I look at these. So
take it off when it hits your profit target.
Exactly. Oh, I got my trade in here too. Sorry, that's really the real risk profile here. So. You can stand a chance of making 200 to 300 just because of the volatility in this name. You can stand to make 200 to 300 on an $800 name. Honestly, I've seen it go higher. I've been doing a lot of these. I've done them in SanDisk. I currently still have one on in SanDisk right now. Like this is the one I have on in SanDisk, and I got it really wide. I got 1850, 2000, 2150. So I went really wide in there because we've seen this name move like $150 on any given day. So I like that. I like that idea as well.
As long as it moves in the correct direction.
Yeah, exactly. That's all you want.
Always a thing.
That's all you want.
All right, and the last one is United. So, question for you: out of the big three, United, Delta, American Airlines, what do you like to fly the most? You think is the best?
I mean, I don't really have much of a choice here.
I mean, this being your United hub, but
yeah, it's always United for sure.
Yeah,
it's always United. Yeah.
I went to school in Atlanta, Georgia, right, at Emory, and there's a Delta all the way over there. So
as did I.
Yeah,
I went to school in Atlanta too. I don't know that.
Oh, I didn't know that. Actually.
Yeah, I went to Clark Atlanta University, if you ever heard of it.
Okay.
Yep. So, yeah, I hung out in Atlanta a lot. But you were in Decatur, basically.
Yeah.
I know exactly where you were.
Outside of Atlanta.
Yeah, I know exactly where you were.
The classic Chicago suburbs. You're not actually Chicagoan.
Yeah, for sure.
You get it?
For sure. Decatur is definitely that. Decatur is definitely that.
Yeah.
So
they drew, I think, with the school, with Emory, they like drew the city boundaries around the school or whatever, just to like bring it in a little bit, So it's a little, just so they can say on their address that they're, part of Atlanta.
Exactly. They want to. They want to claim that.
Of course. But anyways, poor man's covered call over here. Covered call is just a bit too expensive in my account. They've been down as well, just like all the other airline stocks with the oil and all that stuff that's been happening. But this is solely because United has announced that they're buying new planes, some nice fleet, and they've got approved for it. And then also they're going to launch 10 new airline destinations, international destinations or something like that for the next year, which is the most they've ever launched in 1 year. So I don't know, big plans, meaning that the company is thinking that they're going to be making a lot of money next year. So that's why I'm bullish on them. So trying to hold the stock a little bit and see what happens. Even though fake hold the stock because, the 70 Delta call is simulating the shares. But yeah.
Yep, long that Nove 105. This is a $15 wide spread. You're buying it for 13. I would say that's the only one thing. Like if this thing really rips from here to 120,
you can move it a little bit. This is
yeah. If I was to do it, I mean, and again, like you said, it's I get in your case why you did it because it's not a huge account, right? And so you got to take that into account. But even if you just go to the 125, I mean the 125 here, now you got a chance of a $20 difference. You got a chance of making $600 on this, right? Like, I mean, this is not a whole ton of premium, 170, 180. But again, I like that one a little bit more.
Yeah.
But it's a good idea, though. I like it.
All right. Okay.
Like it. Nice job, man.
Your speculations.
Yeah.
What these companies are doing.
Yeah. That's what we do here, right?
Sometimes you got to put a little bit of speculation on there.
Absolutely. Yeah. For sure. Good trades.
All right.
Fantastic, man. Appreciate you coming on. Great trades from the research team. Love it. 3 trades. We did UAL, we did WDC, and what was the first one we did?
Nvidia.
Nvidia. That's right. Earnings coming up. So a little.
You should probably do tomorrow. Yeah.
Yeah. We'll wait on that one for tomorrow.
Yeah.
Thanks for watching, guys. Appreciate it. We'll be back in a little bit with some content here. Actually, I'm going to be doing trades myself, trade of the day. We'll see what we get into, and I'll post it right now so you guys can see what we're about to talk about. Thanks for watching Tasty Live.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Investopedia says we're the best for options trading. Stockbrokers.com says we're #1, and Broker Chooser raves about us too. So what else can we say other than boom? Trade like a trader. Tasty Trade.
It's time to trade smart, post PDT rule elimination. And Tasty Trade has the tools traders need. The Active Trader tab's comprehensive market data is designed for rapid order placement in a single click, while bracket orders let traders set entry, profit target, and stop loss all in one ticket. From the Positions tab, you can monitor positions, roll trades, close positions, and create conditional orders. Now, traders of all account sizes have more flexibility than ever before to engage in the markets. Smart tools for smart traders. Tasty Trade.
Tasty Trade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
You bring it, we match it. Get a 3% cash match on all qualifying deposits, up to $3,000. You can trade stocks, options, futures, and prediction markets. Tasty Trade. Trade with us.
What's up, everybody? Trades of the day. As we sit here, markets are up 20. The S&P 500, we're knocking on the door of 7,700. Looking at my portfolio, trying to decide if there's anything that is worth doing. And honestly, it's kind of quiet on a day like today when you expect some big news coming down the pipeline. The last 2 days have been fairly quiet. There's not a whole lot going on. It seems as though there's been somewhat of a narrative shift. We don't see these AI-related names going absolutely crazy like we saw earlier this year. The not even Nvidia's, but like NBIS or WDC or Intel or AMD or whatever it may be. They've all kind of calmed down. As a matter of fact, if you want to, you can sell vol in some of them, but you don't want to get too carried away because, well, they can have big pops like this on any given day, 5%. That being the case, I'm still trying it. I have a name like WDC where I sold some vol in. I'm short a strangle in there. Just mentioned that a second ago when we were doing trades from the research team. But I also have long plays as well. You know, SanDisk is one where I am not selling vol because it's too expensive, but I have a call butterfly to the upside. And so every day when we talk about trades of the day, we try to figure out like, what's an idea? What do I want to do? And honestly, today's trade, I actually already had an idea for. I've been looking, I had an idea going back to yesterday. I was thinking about everything that's going on in the market that we're seeing, what's going on with this bond situation, right? And how interest rates are high and what can people afford and what can they not? And I did a trade yesterday centered around Walmart, thinking that a lot of people after a while will probably be utilizing their services more often than not, being they're a discount retailer. We've seen some of those names, Walmart, TJ Maxx, even though they probably didn't do as well on earnings, they still are strong names. And Walmart in particular has a lot of cash on hand. But what about names that are sort of dependent on consumers having money? What about stocks like that? How do we anticipate they're going to work out? How are people able to spend discretionary income? Well, if you look at Dick's today, that stock did not go well. Dick's Sporting Goods struggling big time. Stock's down 30%. I didn't even read what they said. I didn't even pay that much attention. I kind of know the narrative already. I mean, this is a store that obviously sells a lot of things that you might almost consider luxury, if you will, right? I mean, people don't need stuff from Dick's Sporting Goods. They go to get it because they want to have it, because they want to do a sport, or their kids want to do a sport. This is somewhat of a luxury, if you will. And so stock is down pretty big today. I mean, you'd have to go all the way back to January of 2024 to get close to, matter of fact, late 2023 to where stock was trading the last time around this level. So that to me is somewhat interesting in and of itself. But it just so happens that this goes in line with the idea I came up with yesterday for today's trade of the day. I was thinking about Disney in the same manner. Disney is a stock that has gone through a lot of iterations more recently. I mean, they've largely gone the content route. And for a second there, I was like, well, I'm interested in Disney, but you know what? What is the breakdown? And so I wanted to know. I looked it up real quick, and 46.8% is the experiences. Now, they've obviously boosted the entertainment part quite a bit, and I would say that's probably more than, you can see that's more than half of what they make their revenue on, but still 46.8% of their revenue being from experiences is not nothing, from the parks, et cetera. And so I thought for that reason alone, this would be an interesting play. And I needed some short delta in the book, to be quite honest with you. I got a lot of long delta. I've been looking for a couple of things where I can get some short deltas and get a play to the downside. So I looked at Disney, and then it becomes the question, I think, that is important to answer here every time we do trades of the day. It's funny. I have a title that's called Head of Option Strategy. I created that title because I feel like that's what I think about every day when I'm looking at a trade. How do I want to pursue this trade? Again, naturally, if you want to take short to the downside, you could sell 100 shares of Disney. And with the buying power effect on a margin account, you can see it's $5,500. Now, again, that would normally be $11,100 or $11,144. If the stock is $11.44. But we give you some margin requirement on that, getting it less than half to $5,500. But that's expensive. I mean, who wants to take that type of shot? And again, that's just kind of binary. Like, I don't really want to do that, right? And so then the question becomes, okay, at what term do you do this? Well, I think this is a theme that could last some time, honestly. And it really depends. I mean, maybe this whole thing changes as a result of what we hear out of Jackson Hole. I don't anticipate it. Chairman Kevin Warsh has not been somebody to give a lot of clues on what they're going to do with the bond market. As he's clearly stated, he's leaving it up to the bond market itself to determine what we're going to do. So that being the case, with 30-year yields at 5.3%, where does it stop? Does it really change with Besant coming in and buying bonds at $4 billion a clip, even though it's $1 trillion market? Like, that's not a whole lot. And so I don't know if that's going to change anytime soon. And bonds don't necessarily move quickly. Things do have a tendency to change in this administration fairly fast these days, but I don't know if this situation is going to change that quickly. And honestly, I mean, in real life, hell, I'd love to be wrong. I hope interest rates do come down more often than not. That makes life easier for all of us. But this is a play on interest rates not necessarily coming down anytime soon. And honestly, it's going to take some time. So that's why it immediately eliminates these near-term cycles for me. I'm not trading anything in August or SEP or even regular SEP with only 24 days to go. I mean, if I were selling vol, maybe in SEP, but even that is 24 days ago. It's pretty light. And so that gets us at least to October here, right? And so it's like, what kind of play do you want to do? I decided really I wanted to go to November because it just had earnings in August. Earnings are, I think they were like August 3rd. I looked this up earlier. I don't remember, but it was earlier in August, which means the next cycle for earnings will be November. Thus, it will be captured in the November cycle. So I want to position in here. And so then you start analyzing, do I want to do a diagonal? Do I want to do a short call spread? I want it to be a trade that lasts a little longer than just a short call spread, right? And so I decided to go with the zebra. Once again, I'm on the zebra kick right now, the zero extrinsic back ratio kick, right? Again, this is a trade where let's clear out this. We buy two of these and sell one at the money to the downside. Now, this is not really at the money, but we don't have an 11.5 strike. 110 is going to have to do. Actually, I'm looking here. I think stock has moved up a little bit higher today from when I did it, but that's fine. So we buy two of these, we sell one. And again, I want this to be a trade. Just looking at the stock, you you can see the stock has been a little bit on of a run recently, right? And so if I go back even just a month, I mean, stock was at below 100 more recently, right? So I'm looking as like a move like that because, what am I going to do? Am I going to sell a call spread? This is not really my type of trade in this type of situation. Just a $5 call spread to potentially make $122, but the vol isn't really high in here. It's 11 IVR. It's 29 implied vol. 29 implied vols, I'm buying those in this market, to be honest with you, with the idea that maybe those get up to 30. So this trade is not for me. And because the vol is low anyway, I don't really want to play that. This is not really selling vol to some degree. When you're selling this close sets of money, you're really just playing for direction. And I just, I don't want to do this trade. This is not the trade that I want to do. I just don't want to sell this call spread for $300. I want to make more than that. I want to make upwards of maybe $500 to $600 to $700 or even $1,000 on a trade like this that I'm playing, because I'm playing for something where Disney starts to really struggle because people aren't going to parks. They don't have the money to spend $300 or whatever it is to get inside the park these days. So I'm looking at doing the zebra. And again, why zebra over this put spread? I mean, I want to eliminate the amount of extrinsic. So in this case, if I could do a $15 wide spread, that's also possible. I could have definitely done that. $935 max profit on this thing for $565. I could have done that. And that's probably not a bad trade as well. Again, this is a closer to 46%. This is a higher pop. So I do like that part about it. But I was just in the kick of the zebra. I wanted to get a little heavier delta on it. And that's why I did this one. And so when you look at, again, going through all the possible trades, could sell stock, but that's expensive, and that's why we don't do it. You could sell a call spread, but that's kind of limited on what you could make. You could do that put spread. That's not bad. I mean, that works as well. The idea of $900 in profit, though, you're probably not going to make that 900. You might make about 450 of that 900 max profit on that 115, 100 call spread. So I wanted something where, again, I wanted to see how this thing would move to the downside, and maybe we could get a move below to around 95 again. Let's just say at 95, all of a sudden you're making $1,500 on that trade. That's the kind of trade that I like. Now, I put up a little bit more money to do it. I ended up paying, what did I pay on this? I paid $1,000 for that, right? But again, I paid that $1,000 with the idea that if we get down back to 95, or let's just say 97 where it was recently, all of a sudden I'm up $1,200 because this makes a sizable move. And it could happen prior to earnings. It could use earnings as a catalyst as well. I mean, maybe this is something that takes a couple of months, and that's the reason why I like going out to November for the trade. So again, a lot of the thesis is based on we have high interest rates, consumer discretionary money is not plentiful right now. And so people are going to start easing back on some things. And maybe the idea is long gone where these people take their family of 5 to Disney and spend thousands of dollars. Like that doesn't seem like something that is going to by and large be happening if we have high interest rate environment. So that's the reason why I like the trade here. And you could look across the landscape. And the way I found the trade, honestly, is I went to an app that I've pulled up on here pretty regularly, FinViz. I went there. I looked at consumer discretionary names, and I looked at the names with the most, the highest market cap, and then that's when I went to Disney. One, not only highest market cap, but kind of liquid. I mean, there were a couple of other names that popped up on the screen, but I didn't necessarily love them. And so that's the other way. That's kind of how you get to these ideas. Like I was thinking about interest rates. What's high? What is possibly interesting? And let's see here, discretionary. What's possibly interesting? And then you can, unfortunately, on this. Let's see. Where's the? Wish I could throw up my market cap. I don't see it. But if I could, yeah, on this web version we don't have market cap. On the platform, on the desktop version, we do have market cap, and that's kind of where I sorted from. But again, you can go to something like this. You can go to Screener. You can go to S&P 500. You can go by market cap here. And then you can go to sector if you want, consumer cyclical, right? And that's how you can get to, kind of a screen here and get an idea on what names you're looking at. And so that was kind of how I got to the idea, really. And it just took me looking through what names vol-wise work, what names are low vol. Again, I wanted to buy, so I didn't want a high vol. Probably not that hard to find low vol names right now, but that's kind of how we got here. So again, the thesis is based on interest rates and where they are. It's also based on, again, looking at consumer discretionary and where people might not have the room to spend money. But I like the zebra because I wanted a chance for making more than just a limited amount. And by limited, I mean like if I went with a short call spread or if a long put spread, which has short delta. And again, all these trades are short delta. But if I went with that short call spread or a long put spread, I just felt like it was limiting my potential profit. Whereas I could possibly see the stock going back below 100. And that's a situation where this zebra makes me upwards of $1,000. So let's pull up a P&L graph here to really break it down for the people. Put zebra in Disney, break even of 109.65. And again, you usually get nice break evens fairly close to where you are if you initially put this trade on. Again, I just put it on today. I bought 2 of the 115 puts, sold 1 of the 110s. Not a traditional zebra per se, because if it had the 111 strike, I would have used that. But in this case, we only have 115, 110, which works out just fine. I paid $1,035, for this, $10.35. And again, the break even is 109.65, which is like $2 from here to the downside. And I'm looking at a move below 100, say somewhere around 97, which was where the stock was literally just trading earlier this month. So it's not out of the realm of possibility. But we'll see if this high interest rate holds up, this high interest rate environment holds up. Now, again, I'm not expecting stock to go to zero. I'm just expecting maybe a $12 to $15 move to the downside. So that's the idea. Put zebra in Disney. Man, we are on a zebra kick right now. For those who forget, zebra stands for zero extrinsic back ratio spread. So that's what we're doing here. That's my trade of the day. Now, I'm going to get you over to whose trade of the day is next? Well, I guess you'll just have to wait and see. It's Gus. See you in a little bit.
hello everybody. How nice to see all of you. As soon as I got in here, I moved these armrests on this chair way up. So if the next person that you see streaming in this location complains about the armrests, just know that I did it. Tell him in chat that it was me. I will take full responsibility. I'm not sure who put them so low. I'd like to be able to rest my arms. Today, I have an exciting trade to talk about with all of you. If you were watching me on Risk and Reward moments ago, you may have an idea where I'm going here. I kind of spoiled the headline ahead of time. But I'm trading Dick's today, Dick's Sporting Goods. I'm putting my dicks on the table, if you will, with this one. We're jumping in. I have decided to trade this like an absolute maniac. And the good news is I'm already down $100, so you can get in way better than I did if you want to at these prices. But I still think that my thesis holds. I am trying to catch a falling knife here a little bit. I will say that for sure ahead of time. This is another one, much like what I said with Walmart, where you could totally wait a day or two before putting this on if you want. I saw mentions in chat shortly after I got off Risk and Reward of people saying wait until Thursday. I think that could be a smart call. I don't think that, I mean, obviously Nvidia and Dick's are not intimately tied companies, but Nvidia certainly does have the power to, shake up the entire market as well at Thursday's open or after Wednesday's close. So definitely something to keep in mind. This one you maybe could hold off of for a couple more days, but I decided I just wanted to go ahead and get involved. So all I have done here, also very similar to the Walmart trade. And also, again, this is very risky, okay? I am a maniac. I don't know that this is necessarily the best idea, but I have chosen to sell a put in Dick's, straight up. Put side premium, obviously very elevated amid this giant drawdown that we're getting today, now down almost 29% on the day. It was down about a flat 28 when I got involved with this trade myself. These put side premiums are insane. I've chosen the September 18th expiration cycle as the closest one that we have. I would actually love closer if I could get my hands on it. But you got to play the cards that you're dealt. So I've landed on the September 18th, and it's just a naked put at the 120 strike. I chose to go a couple strikes out of the money just to give this a little bit more room to fall. Again, it's a similar, though much more pronounced, much higher leverage, but it's a very similar situation to what we saw pan out with Walmart after their earnings report last week. Everything is just more exaggerated, okay? Allow me to explain. So first and foremost, just to see the setup here, this is what we're looking at on Dick's. I got filled, I believe, at 425 or 427. 225 or 227. So pretty much $100 better than what I got in at right now. $100 worse in terms of buying power effect. Again, it's parallels to the Walmart trade last week over and over again. Initial lean was to go for a put ratio, but on these $5 wide strikes, there's just not enough meat on the bone there to make that happen. As you can see, if I were to put on an additional put ratio right now, $2,000 in buying power for $95 in credit, I don't want to do that. And so I landed on the pure naked put as it awards $330 in credit for even less buying power, although your risk is obviously completely uncapped. Now, I'm managing this one very carefully. Like I said, the wiser call would probably be, if I were doing this not for a segment, I would wait until 1 minute before market close today to put this in, because I do think that Dick's will open a little bit higher tomorrow. That's just sort of the nature of the market in regard to these things. I could put in a slightly lower leg down tomorrow, but I highly doubt we're going to see any serious downside momentum continuing into tomorrow's market. And I've jumped in here not only to make innuendos, but just because I don't know, and as I just said on Risk and Reward, I don't know that I think that this earnings call is really that bad. When I sit here and look at this chart, I mean, we're down, 29% on the day now. To reiterate what I just talked about on Risk and Reward. The EPS, they expected $3.76 per share, came in at $3.53 a share. Revenue, expected $5.65 billion, came in at $5.59 billion. They lowered their net sales outlook from previously it was 22.1 to 22.4 billion, so that $300 million range. All they've done is move that $300 million range down $200 million. So now we're looking at a range of 21.9 to 22.2. So again, that's from 21. So many numbers. From 22.1 to 22.4, down to 21.9 to 22.2. So there is still overlap in those ranges. That's not a drastic decrease in net sales outlook by any stretch of the imagination. Same store sales grew at Dick's stores. Foot Locker stores saw same store sales shrink, comparable sales that is, which is why we're seeing, I mean, that's just another factor in this broader drawdown that we're seeing. But at least in a long-term context, Dick's has now put themselves in a position where if Foot Locker just breaks even next quarter, that's going to do great things for them. If they can put a plug in this bleeding that we're seeing quickly, that'll do great things for them. In the micro, in the context of this trade specifically,
I just don't know that those numbers justify a 29% sell-off. I think that we're seeing a compounding thing here. Some sell-off is absolutely justified. This is a horrible earnings report. Don't let that get lost. I'm not sitting here trying to be a Dick's apologist and say that, this isn't too bad. We should still believe in Dick's. None of that, okay? They deserve to get whacked for this earnings report. Do they deserve to lose 30% of their valuation, which is what we're getting close to talking about here? I don't believe that they do. I think that this is the market trying to price in, potential future bleakness, but because they lowered the guidance, but the CEO had good things to say outside of lowering the guidance. And like I said, the guidance isn't lowered by that much. We're talking about the lowered guidance by $300 million on a $22 billion target. That's not an insane amount. That's not a 30% amount. So I just don't, I think that this is a little bit over exaggerated at this point. I think that where we opened down about 15%, that might be a little more fair. I wouldn't be looking to step in front of that, and I didn't, and that's why I'm choosing to get involved right now. But I think that we're just seeing some compounding nature happening here of the initial sell-off, and then I think we're getting into panic selling territory here, and I love to buy in panic selling territory because the institutions, the big players, they know that there's no need to panic sell almost ever, especially if time is your friend, if you're outside of an options trading context. So I think that there is certainly a large subsect of people who are thinking the same way that I am here and just waiting for Dick's to look like it finds any sort of a bottom so that they can scoop up some shares. And I'm willing to ride with those people. And like I said, not trying to perfectly time this for two reasons. One, because I'm giving myself so much room down to 120. I could tolerate another 6% at this juncture. Two, about 5.5%. Two, because I've lost my train of thought. Where was I going? I don't know. Point is. Oh yes. Two, because I have to give the trade on this show. All right, that's part of the reason why I've chosen to just jump at this so early, because this is what I want. I would be putting this on at 2:59 p.m. under typical circumstances. So that's why I'm trying to catch the falling knife a little bit more than I usually would. Like I said, wait until the end of the day today. Wait until tomorrow. You could get a better entry than me right this moment, and you certainly can maybe even get a better entry than what we're seeing right now. But we are just starting to see, and another part of the reason I wasn't too afraid of entering at 11 a.m. today when I did, or shortly thereafter, I suppose more like 11:20, is because we are starting to see just the first little blips of buyers come through. I talked about Dick's first thing on risk and reward, and I kept it open, and that whole time we just sat it. We were down 27.8%, then 27.7, then 28.85, then 27.7. Like there is just a little bit of buying pressure coming in off the bottom right here. You see that same thing happening right now as I speak. We were just down 29.1. Oh, we're back up to 28.95. It's like we're starting to see the first semblance of some buyers being willing to step in front of Dick's here. And just that little bit is kind of enough to me. And I'm just not too afraid, perhaps irrationally not too afraid of getting another 6% of downside here from this point, in addition to this move that we've already seen. I think that it would just be a little bit, it would certainly be a little bit crazy, but it would be very irrational. Now, as we say all the time, the market can stay irrational longer than you can stay solvent. I understand that. So I am managing this very diligently. My fill, to be specific, was at 238. So at a full loss, I'm certainly looking to get out of this. Or if Dick's takes a confirmed break under, 125 or so, I would really start to panic. If we give back 2% from this level, that would start to panic me a little bit. But right now, like I said, horrible entry out of me. You can get in $92 better than I did right now, but I just don't. $92. I'm just not that afraid of it. I think I would just be so shocked if we get below 120. I really would. This just feels like we got to be at the bottom. Like I said, we can see it actually eking back up a little bit higher now only down 28.8. There has to be some buyers that are willing to step in front of this thing down here at the bottom somewhere, and I'm willing to put my chips in the basket that we don't break below 120. And if we do, that break below 120 does not last through 24 days from now, September 18th. So it's a scary trade. It's a poorly timed trade by me. I'm openly admitting that. But ultimately, I believe my thesis is still sound, and I think that we will see Dick's continue to hold above 120 in the coming days and weeks. It's your classic move, and like I said, it's incredibly similar to the Walmart trade, which we're doing okay on right now. It's hovering right around our levels, currently just over the 105 price point that we need it at. But it's the same thing. I mean, I'm attacking it the exact same way as well. Bad earnings, big sell-off, perhaps to the extent that the earnings no longer justify the sell-off. I step in front, I sell a put while put premiums are incredibly elevated due to that sell-off. And then what do we get the next day? Doji. Wham. The buyer's saying, no, this is enough. We don't need to go any lower. And the following day, we get the big move up, which we are obviously down inside of right now, currently trading just around our strike. But it's simply the nature of the market. Everybody that already has dicks is scared. They're liquidating like crazy. There's definitely some panic selling going on down here at the bottom. And eventually, all that dust clears, all the people that want out are out, and then all that's left is people that want in. And I'm not saying that we're going to close this gap. I don't know that this gap ever gets closed. I don't love Dick's fundamentally in the long term at all. Dick's is another Target-like company to me. I don't think that there's any one thing that Dick's does that there's not another store doing better than them. Not to mention how slow they have been to adjust to the e-commerce world. Still to this day, they're playing catch up, trying to get caught up to e-commerce. There's competitors entering the market, all those things. I don't love the long-term story for Dick's at all. However, I do think that in the next 24 days, and particularly in the next week, there's going to be at least a few interested buyers here to prop this up, to the 130, 135 sort of ballpark. You can see the trade on screen here again. I've sold the 120 put. These are my prices displayed on screen here. I got 238. 230 is very close. But as I've said, you could get a much better entry than that right now. It's about $100 better than that currently. And you may be able to get an even better entry sometime into the end of the day today. But it's anytime these situations arise, it's that equation that I was just talking about. There can only be so many people who want out, and at a point, just by nature, everyone who wants to sell has sold. Everybody who wants to hold is going to hold, and therefore there is only room for buyers to come sneaking in there. And those buyers are going to be buying at this level, at this 29, 28, 29, 30% depressed level that we're seeing Dick's at right now. And they're not going to want to sell to drive it lower. It's just the nature of these things. It's why, I'm really just largely explaining the psychology of dead cat bounces as a whole and why they happen. It's just because the buyers run themselves out. The buyers aren't racing back in to buy at a 30% loss. So all told, I just think that this will catch a little bit of momentum into the end of the week. And that's probably all we need to keep this propped up for above 120 until expiration here. Theta will really start to come into play at the beginning of next week. And I'm hoping that we can hold these levels. So that's going to be it for my trade of the day today. Monitoring this one very closely. As I said, not going to let this get beyond the credit that I received. Should this turn into a total loss, if I see minus 238 in my account, I'm looking to liquidate at that time. Otherwise, I'm holding strong and believing that Dick's can stay hard. I'm going to kick it over to Errol now. Errol, take it away.
I think VIX definitely has the ability to stay hard. Where is VIX trading at right now? What's going on, guys? VIX trading at 1546 right now. So let's quickly go through the portfolio, see what we're holding right now, and then also check out to see what our trade of the day wants to be. But with that being said, hope you guys are having a good day. I know the market is starting to pick up a little bit more here. We tried to rally off the lows. I'm short a couple NASDAQ contracts right now. We could take a quick look at that. We have our stops in just in case we make some new highs in the market right now. But it essentially is reflecting a very similar position to what we have on QQQ, right? We sold 3 out of the money call spreads on QQQ this morning. They were about $1 wide. We collected about 40 cents per spread. And this is just around the same range, right, that we're keeping an eye on over here in NASDAQ. So again, they're both going to reflect the same kind of trade thesis, the same kind of trade idea. I would just love for these midday highs to not reclaim and hold above those levels. If we can stay below that, I'm going to continue to be pretty bearish right now. But until then, we'll manage these positions accordingly, depending on whatever the market wants to give us. But with that being said, getting into the trade idea of the day, if you've been with us for the last few weeks, I think it was Thursday or Friday, we sold an out of the money call spread on Apple. It's been doing pretty well so far. We're up just a little bit on the position. We sold the 315 strike, bought the 320, so it was a $5 wide vertical spread, which we collected $1.98. And if I go to the daily chart on Apple, this is a 1-minute chart. I'm going to go to the daily chart now. So each candlestick right now is representing 1 day Apple had a pretty big gap down from 332 all the way down to 309 after earnings. And they reported earnings as they were trading at their all-time highs. So, I mean, it was going to be really difficult for them to log another new high, an extended high after earnings. So I'm hoping to see Apple peel off a little bit, seeing a little bit of a relief from the extended rally we've seen from Apple this year so far. So 24 days left to expiration. App 11 has been doing pretty well today. Again, these are wider markets like I've been pointing out. This has been one where we felt like we're catching a falling knife. You can kind of see over here, if I zoom in a little bit more, you can see it says the low is at 297.50. And this is something that I've been seeing on a daily basis, consecutive days now, right? We keep stair-stepping lower on App 11. Whenever we try to fade a move, right? Especially whenever there's no ground that we can see or no ground that we could walk on right here, we got to give ourselves a little bit extra cushion, a little bit extra time. So with that being said, this is a wider one. So we're going to widen those break-evens out a little bit more because we collected 335 on a $10 wide spread. So neither of the puts are being tested right now, which is looking really nice. We just need App 11 to hold these levels or have a little bit more of a reversal because you can just see how much it's up on the day-to-day. And look at this daily chart, right? We haven't gone anywhere. So if we catch a little bit of a bid, we may have an opportunity to manage this trade, maybe take it off the table, redeploy the capital elsewhere. I've just been going back and forth with App 11 just because it is the most volatile asset in terms of its options that I have on in the portfolio right now. Outside of IBIT, right? IBIT's another one that we had put on a skewed strangle to the downside because of that enormous move that we had seen out of the crypto market at the end of last week during Trump's press conference. I know he even name dropped Hyperliquid by name, which is just crazy to hear those type of name drops, not even just in the traditional finance, but in the new space of crypto. So our call side is being tested right now. We rolled that put side up a little bit more to collect an additional credit, trying to manage the position as best as we can. We are also short a contract. We bought a put yesterday, which is at the $44 strike. We're down like 15 to 20 bucks, so it hasn't really moved anywhere so far. And that's really the story over the last 24 to 48 hours, or at least for this week in crypto, right? Like, at the end of last week, we closed near its highs. If I can get crypto up here, there we go. Right on IBIT, we closed near its highs, right, at around 45. So now we're kind of just trading inside Monday's range, and we're just barely trading over the high that we had set on Friday for crypto. So I think crypto's trying to figure out if it wants to put in another leg to the upside. Maybe we want to pull back a little bit. Maybe we get a little bit of consolidation right here. Maybe we don't get another leg to the upside. Maybe we don't get an aggressive pullback. Maybe we stay range bound for a little bit. All I know is we're hoping for a little bit of a pullback. So even if we start to consolidate, it would be nice to at least pull back within this gap that we have on IBIT from about 41 to 43. So that's going to be the window of opportunity that we're looking for there. And again, today we sold 3 out of the money call spreads on QQQ. These are going to expire by the end of the day. And then we also have some short delta on in the semiconductor space. It's down on the day, but the overall position is up a few bucks. Which is nice, but that same kind of sentiment remains right now in semiconductors. Is momentum out of these memory names right now? Right, we got Micron, we have SanDisk. All those names, they're moving so close to one another. They almost look like highly correlated products, right? But the chart's pretty much telling the same story. Is that momentum slowing down for a little bit? Maybe we get some consolidation at these highs. Maybe we don't put in continuous highs, or maybe we get a little bit of a deeper pullback. Maybe we go to lower levels than we had seen from when Leopold was liquidated at the bottom of this move. Who knows? We'll be patient. We'll set ourselves up for success, or try to. I think you can set yourself up for success even if a trade doesn't work out. I think setting yourself up for success as a trader is being able to manage your positions effectively regardless of the outcome. So we'll keep an eye on it. It's looking like our micro position on NASDAQ is working out a little bit better right now. Let's go to the 1-minute chart. We're getting more of a sell-off here. If we can sell off down to these lows, even on NASDAQ at around 29,221, the day lows would be amazing, but look at this massive wick. This is a 1-minute chart that I have on right now, and look at this massive wick at the low of day at 29,145. So if we take out this initial swing low at 29,229, maybe we take off one contract. That'll also make us a little bit more comfortable in understanding that we might be able to profit off of the 0DTE QQQ call spreads that we put on earlier today. And then we're going to let one contract ride. That's only if we get the continued sell-off, right? Like, we can talk about how we're going to manage this trade, but if it reverses against us, we got to stop out of our position. We have to manage our risk. So it's always nice to plan out the potential scenarios ahead of time so you know how you would manage the position if the market did X, Y, or Z. So we don't have to think about it too much in the moment because, right, when emotions are higher, you have a little bit more of an impulsive nature. So it's always nice to map out the scenarios when your emotional level is pretty much at equilibrium. So we'll see what the market gives us right here. Maybe we sell off. Maybe we got to manage our risk. Maybe we manage our risk together while we're live right now. Who knows? But with that being said, I want to take a look. I want to take a look at Google today. I know we were touching on it. I know. I'm sorry. I think it was Dick's. Like, I know we were talking about it earlier today. Yes. I know we were talking about it earlier today. I know Dick's had seen a massive gap down after its earnings. And I mean, this really is a massive move, right? We're giving back about a quarter of what Dick's Sporting Goods is worth after that earnings call. Not only that, we're continuing to slide to the downside. And with Dick's down almost 30% on the day, that's almost 60 points. That's 52 points down on the day. I think you can make a conversation for doing something on in Dick's. So I want to get on a little bit of long delta. I want to see what we can do in here. Even if we just get a little bit of a pop to the upside, right? Kind of similar to how we were trading Walmart, where Walmart reported earnings. Walmart had a massive gap down to the downside. We had a little bit of a continuation to the downside. We got long via a zebra, and then we got out for about $150 once we got the little pop that we were looking for, right? We weren't looking for a massive reversal in the market. We weren't even necessarily looking for the whole gap fill. We were just looking for a pop back to the upside. So it's going to be a similar sentiment that we have over here on Dick's Sporting Goods. Let's go to the options chain. Let's see what we can get for it. How much time we have left? There we go. We got a couple minutes. Go to the options chains. Let's go. 24 days to expiration. Do I have all these on? Yeah. Dick's Sporting Goods isn't very. They don't have all the expirations like something like QQQ or another asset would. But I'll take whatever it gives us. Let's see what we can get for these spreads. If not, we'll debate or go back and forth on potentially buying a call, an out of the money call. But let's see what we can get for these spreads first. Looking at selling the at the money put spread, this is going to give us about $2.10 of credit. It is a $5 wide, so our max loss is going to be sitting at $2.90. Overall buying power for the position, $2.90. Max profit, right, $2.10, the credit we receive on order entry. Pop sitting just below 60% right now. P50 sitting just below 70. It just went from 69 to 65 to now 67 to 66. So this is fluctuating all over the place a little bit here. But I'm comfortable with selling it at the money just because we have 24 days left to expiration. We're collecting more than a third of the width on order entry if we were to send this through. Also, we're trading at 126 right now, right? Like even if we continue to stair step lower, maybe we consolidate at these lows. You know, if we're selling a premium position, we'll be able to take advantage of that type of behavior. But I think this is a little bit more attractive because of the fact that we have some more extra time. And it's so funny, right? Like whenever I first started hopping on here, I'm mostly putting on positions that are 45 days to expiration. I'm over here talking about 24 days to expiration as if that's a longer time hold for me now. Like we didn't used to put on 2-month long positions. Now 24 days is quote unquote a long position. But let's sell this at the money. See if we can get filled here. There we go. We got an instant fill at 218. We tried to get filled at 210. We got filled at 218. So price improved by 8 cents. But that also tells me, you know, these markets are a little bit wide. You know, maybe we got to give up a little change to be able to get out of this position. We were able to capitalize on the wider markets here, right? We got an extra almost 10 cents just on order entry. So shout out to the price improvement, but we are filled there on Dick's Sporting Goods. It's looking like NASDAQ is still selling off to the lows, doing a little bit better. Maybe we take off one of these contracts. Let's go to the 1 minute chart. We're almost down there. We can take one off at 29,223. So we're not there yet. We have to get our extra 3 points. So let's see what we can do right here. Let's go over to the active tab. There we go. We're gonna go over here to the active tab, right? We got our stops in. You can see both stop losses sitting up there at the highs, one at 294, the other at 300. We can sell off to the swing low. That'll be amazing. If we reverse before taking off this swing low, we're going to have some issues. We're going to have some issues if we do that. But let's see if we can start managing this one. I know we just barely have a couple minutes left, but it'd be nice to at least take off one of the contracts. So I'm going to turn on one-click trading. Okay, I'm going to turn it back on now. There we go. It's going to give you that warning sign, right? If you accidentally hit buy or sell, if you have the buying power for it, it's going to initiate that trade for you. So whenever you have one-click trading on, just be mindful of that. If you have kids, you have pets, watch your desk sitting on, or watch your monitors sitting on your desk with one-click trading on. If you got kids, you got pets, be sure to click that off before you leave your seat. I don't have kids, nor do I have pets, but I could imagine that has happened to somebody. But let's see if we can get down to these lows. Again, turn that on real quick. We'll market order out of this if we can take these lows, but we haven't taken them yet, right? That low sitting at 29,222. I'm not going to be greedy here, right? Like that's the worst whenever you're just a couple pennies away and the market reverses on you. But we happen to look at it as the market was selling off. So let's see if we get down to this low. We start to scale out. We start to do a little bit of position management together. Right? Just because we scale out of one contract doesn't mean, we're off the hook or we're done with the entire trade there either. But let's be patient, see what the market gives us. We got about 1 minute left. So if we can get a sell off to the downside in the next 45 seconds, that'd be awesome. I'm going to come down here to the 15-second chart just to give us a little bit more of an in-depth view of what's going on with the price behind the candles. See if we can load this up. There we go. So we briefly got down here to the lows, right? We're popping to the upside. And that pop from the lows is already 10 to 15 points. So that's a testament to how volatile this market can be. But we're going to be emotionless, right? We're emotionless. We have to trade without taking our emotions into account. But if you are just joining us, we have a handful of positions on in the portfolio. We still got a little bit of short delta on in Apple. We have some long delta on in App 11. We're short a couple contracts in the micro NASDAQ right now. We have our stops in just in case it reverses on us while we're talking. Today, we got on a little bit of long delta on Dick's Sporting Goods. We're up about $8. So let me know where you guys want to eat. Gold, we have some short delta on in gold. We bought a put that expires in about 9 days. So we're just looking for a quick downside move. We're not looking for a continuation of the downside. We're not betting on gold going back to zero. We're not holding this for 3 months. We're just looking for a pop to the downside. That's it. Nothing too serious. And then IBIT, we sold a strangle. And then yesterday, I purchased an additional put. The put hasn't really moved anywhere. The call side on the strangle was getting tested, needed to roll the put side up, collected an additional 50 cents of credit, widen those break evens a little bit, hoping for the stock to drop right back within our bread basket. We're going to use that as a window of opportunity to get out of the position if we do get that. QQQ, we sold 3 out of the money call spreads, 7-11 strike on QQQ. Those expire by the end of the day. We have some out of the money call spreads that expire in 24 days till expiration. We have an iron condor in the Qs at the same time. So if we stay within that range, it's going to work out pretty well. But we want to stay down near the lows so we can profit off of those vertical spreads. And then the semiconductors, we still got some short delta on in the semis. That position's doing pretty well so far. We're sitting at about $0 break even on the dot. But with that being said, I appreciate you guys taking the time. We'll go ahead and continue to manage this trade over here. As you can see, we're trying to pop a little bit off of the lows, but if we continue this downtrend, we'll be managing these. With that being said, guys, I appreciate you taking the time to hang out with us. Be sure to stay tuned for more amazing trade ideas we have coming on next. We got Chris on the other side of this call. Let's throw it over to him, see what he's got for us today. But appreciate you guys taking the time. Peace.
We're back. Time for trade of the day. I'm Chris Vecchio. What are we going to do here today ahead of Nvidia earnings around a bunch of these software names that are coming out this week? I say nothing new. Well, there was an Nvidia trade that was put on this morning, which I think we should walk through here real quick. Looking at the structure, because one of the questions that we had come in from Confirm and Send was, is this an earnings report that's worth trading around? It's a 5.4% implied move through the end of this week. Earnings are coming out tomorrow. I already had an existing position on here, a super bull trade, which not doing so hot right now because whatever double bottom was coming together ultimately did not come together here in this month of August, or at least the last second half of August so far. But when we look at the options pricing, okay, going out to 10 days, for example, I was brought to my attention looking through the data on the recent earnings reports, past 6 quarters, which doesn't seem like an important time frame, but it is. Past 6 quarters here, going back to the start of last year, we've seen NVIDIA beat on both revenue and EPS. It's had the double beat. It's done really, really well. Here's the problem, though. NVIDIA has fallen the day after its earnings 5 of those 6 quarters. So good numbers, great numbers. It hasn't been enough. And moreover, if you take a look at the 1-week reaction in the stock price, it's down about 4.6% or so in those past 6 quarters, despite, again, both the double beat on EPS and revenue. So what can we do with this information? is a 5.4% move big enough to trade around Nvidia? Maybe it goes outside that range in the next few days here, but if history is any guide, then maybe 5.4% is actually a reasonable amount of pricing to work around with. So taking a look at how the market was behaving earlier today, I jumped into the 195, 190, 225, 230 short iron condor here, which right now is in at $1.59 of credit. So not close, I mean, it's pretty close, $1.67 is the ideal level to work with here in terms of risk. So $1.59, $1.60, okay, close enough. This does sit, though, outside of the expected range, at least when this trade was put on. Right now, it's sitting at the edge of it with the 225s. But a 5% move, 4.6% move through the end of next week would mean that we wouldn't touch the short strike here at 225 or at 195 right now. And so, yes, could you play to the expected move here? You could if we were to do this on again right now, just going on the edges of it, 227.5. 197.5 as the short strikes there, you'd get around $1.60. And so at 212, looking at a $13 move, that's bringing you down to 199, 198, and you're looking at your short strike at 197.5. So if it's, again, $13 move, you're looking at a $212 stock. That's a little bit more than 5%, but the market on average 4.6% lower. So if you're going to give this a little bit of room, maybe to the downside here, as opposed to the upside, but there are places to do this is the point. And there are strikes with which you can operate around here, even doing it again the way I'm doing this, pulling it in up a little bit more, giving yourself a little bit more downside room if that's your concern. You can call it maybe unbalanced, if you will, because the distance from, at money price to current stock price, it's not the same. We're going, $5 up to one side and $15, $20 down to the other, or excuse me, $25 down to the other. Okay. Play with it though. So yes, in this particular case, Nvidia, it's a big print. It's going to be a big number. It's probably going to filter into everything else in the market, but maybe not playing with the 3 days is the way to go because again, past 6 quarters, 4.6% lower on average. Give yourself a little bit of breathing room. You can fight about a third of the width of the strikes. There's obviously something to do there. What else is there, though, to do here today? Oil is the biggest mover on the chart so far, down 3.2% right now. And there have been a few ways that I've been playing this over the past several weeks, including a longer dated 84 days to expiration short put spread here, which it's still trading at 59 cents right now. When this was put on, it was, I believe, around 81 cents or so. So there's been a little bit of decay here. And quite frankly, looking for $2 or $3 in decay per day for the next 84 days, I mean, that's not really, that's terrible. So if there is a little bit of a stability or bounce, I plan on getting that off here. But the more interesting one would be the 23 days to expiration, because right now on the charts, oil is effectively sitting at its 1 month average, which comes in here around $81.94. And we see that this is the midpoint of the recent trading range, getting pretty close to the midpoint of the recent trading range here. One way we can just check that real quick, we can use the Fibonacci retracement tool here on the platform. We can go to the recent high and down to the low, and the halfway mark is going to be closer to $79 or so. Why bring that up here? When you're in one trade, right? Even though it's two legs, so to speak, the short put spread, the short call spread side, it's trading in at 12 cents right now if I wanted to get rid of it. If I wanted to get rid of the short call spread side, okay, all of a sudden that's 35 cents coming back my way here. The question is 93.92. Okay, the 93.92 leg of this little guy. Was this something that we would put on ourselves now? It's a dollar-wide strike, and it's only worth 11 cents here. No, that's not something that we would put on at this level. And quite frankly, it's in a place where we wouldn't buy this back. I mean, this is not a good risk to reward here. So net, the position itself with 23 days to go, it's up about 6 cents. You could flip it for 24 cents right now, got in at 29. I'd like to see a little bit more decay here, but there could be a tinkering or so, right? If we have another big down day for oil tomorrow, I may just take off the short call spread side here and see if we can get a little bit of time decay to work with us to help the short put spread side do some work now. 72.73, it does bring us down to here, right? That low on August 5th is $73.10. So what we would effectively saying is that we're not going to clear out the high right now or the highs that we had back here in May. We're not clearing out the recent swing low. This zigzag consolidation continues. So crude here, it could be worth putting back on. You'd have to go over into the X expiry though to get this done, because that's just where the probably the better time horizon is, either going out to 27 or 51 days right now. But even so, around those levels, 72 up to about 88, and you're currently sitting at $80. There's something to play with right now. So even given the other iron condor right now, 70, 71, that's only 20 cents credit. We can go 91, 92, and now we're taking in 38 cents credit here. In the CLX6 contract, that would be blowing through the highs. And here would mean moving down through the lows as well. So that is something that we can do. While the one that's sitting at 23 days to expiration may need another day or two or three to squeeze a little bit more juice out, and perhaps an adjustment and clipping one of the wings off is necessary. One of the legs off is necessary. At 51 days, 37 cents of credit on dollar-wide strikes that are sitting just at or beyond the expected move, which coincides with major swing lows and swing highs in the market. That works for me. So why not another oil position here? Let's get that going. If it gets filled, it joins NVIDIA on the follow page here today. I'm going to work down a list of some of the positions that we had put on recently, however, including the double bear in Qualcomm. At 52 days to expiration, the rationale here was, at least going to the chart, that on a day where we had a pretty significant move higher in semis, Qualcomm was falling apart. And when you have a weak duckling in your group, or as the expression goes, like, you don't need to be the fastest guy in your group, you just can't be the slowest when the bear's chasing you, right? The slowest runner obviously looks injured weak. It hasn't had any downside acceleration here, to be clear. But in terms of the double bear, it is working because if this position were to be taken off, it could be taken off for a minor gain right now. And that's something to work with, okay? So 52 days, there's a lot of time left to go. There's no reason to change positioning just yet. The fact that it hasn't made a move lower substantially, despite volatility across the semi space, does intrigue me, because it wasn't going up when everything else was, but now it's not really going down when some of these other names have had a more meaningful pullback here past week or two, which then does beg the question, the names that did have these big up and then down, was that related to Citadel liquidating their situational awareness holdings? Or was it something else? So looking around the space, obviously Micron, STX, Western Digital, all of these names are highly tied into the NVIDIA earnings, even the Marvell earnings that are coming out later this week, which if you're trading them, this is a market, at least Marvell for me. I was not here yesterday when this was triggered on my scan, but there was never a brief instant where it dipped below its 1 month and sat above its 50, where they still all had a positive rate of change. So for the Marvell earnings this week, which are at 3 days to expiration here, I'm keenly interested in playing this from the bull side only, because it looks like this is something that's starting to get a little bit of lift here to the upside. A nice little turn through that moving on average envelope right now. You have MACD trending higher through its signal line. Stochastics are holding up near overbought, and vol continues to come in. Positive technical drift, low volatility. Check, check. Nice. So 210, 215. Okay, we may have to work around this a little bit here. What do we see as the most recent swing low from 220? 220 is something to work with. Now, 220, 215, it's only $1.12. So maybe we can get some improvement on there. We actually can push this a little bit back, and we can look and explore the other side of a short iron condor. And sure enough, $1.73 on $5 wide strikes just outside the expected move. And at 265 here, you'd be calling effectively for a break into the highest levels that we've seen since early July. Feasible, possible. More than 10% to the upside, not something the market has priced in right now. But is it worth the risk? I think so. $1.73 of credit, 3 days expiration. We can see if that gets filled. Likewise, as we look for more opportunity here. But we do have software names coming up. And while I don't have any particular desire to trade necessarily any of the things that are coming out today, tomorrow, I'm keenly interested in looking again for some of these dip buying opportunities in the market. And Palo Alto Networks does fit that criteria. If we do see a nice little bounce from Intuit, Zoom, what have you, the names that are coming up here at the start of this week, then Palo Alto Networks probably enjoys something of a bounce itself. At least that's how I'm conceptualizing things here in my head right now. It does have a 64 IVR, and the volatility you can see is fairly high, in part because its earnings are coming out next week, next Tuesday. So it has some time to run down here. But that does mean at 10 days to expiration, that's where really you're going to find the proper cycle to capture that earnings if you're looking to trade around it right now. And which at a $36 move, that's going to bring you down to about 305. So 305, 300, 80 cents a credit, not enough on a $5 wide strike. So you go out the other way, and now you're getting $1.73 of credit here. So Palo Alto Networks, I find this is more of a buy the dip opportunity than a simple short iron condor here. I'd like to give it a little bit of room here to the downside to run. And quite frankly, 305 or so. Most recent swing low on July 28th is at 308. 308? 306. I can't see that. 308.54. Got to get these eyes checked out. So 308.54, the 305, 300, it sits just below there. Gives plenty of room for this market to absorb and get back to a level of support. On the flip side, north of 395, that's where you're going to start to see new all-time highs come in. And so if you wanted to kick it out to there, you're looking about $1.48 in credit. But this is the whole market's in an uptrend. Earnings could catalyze it to move to the upside. How does that look on our screen? This is what that pricing looks like. As for me, I'm only in buy the dip mode. I don't want to play this off of this, we'll call it the short call spread side. I like the 300, 305. It's only 80 cents a credit. So if we pull it up a little bit here to work with $1.15, I'd much rather stay on the outside of the expect move and only take 80 cents and see what we can work with. And perhaps we have some things to do here now. So Palo Alto Networks, okay, earnings are coming up next week, 10 days to expiration. Can it stabilize in the midst of an uptrend? We also have our Nvidia. We have some perhaps things going on in crude. And then lastly, because I wasn't in here yesterday, filming some things in the city, very much like Palo Alto Networks, pull back below its 1 month, still above the 50. The 50 is grinding through a former area of support and resistance right now. So want to play that here, not necessarily an extension back to highs, but could we see some stability in the range? 60, 59, 66, 67, short condor here in Bank of America. Right now it's in at 26 cents of credit. Okay, still could do it. Not exactly 33, but it's close enough. Banks usually don't jump around a whole bunch, so seeing slow, steady movements one way or the other would kind of fit the bill. And granted, keep an eye on your treasury yields, because if those keep rocketing up, the banks have been the ones wearing it on the chin more than most. We're done here, though. Up next, we have more live trading coming up next. Ilya Spivak is here with his trade ideas of the day.
You bring it, we match it. Get a 3% cash match on all qualifying deposits, up to $3,000. You can trade stocks, options, futures, and prediction markets all on one platform. Plus, get advanced tools built for active traders. Visualize potential profit and loss with risk analysis tools. And place trades in a single click. All on the best platform for options trading, according to Investopedia. Tasty Trade. Trade with us. We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
And we are back to looking at some trades on the macro side as they are developing. Here, this is Ilya Spivak, head of global macro here at Tasty Live, and we are finally seeing a bit of life in this bonds trade that we've been nursing here. Let's put it right on the screen here and take a look at the charts. Obviously, lots and lots of headlines badgering this market, but we can see right over here is where we had that intervention jointly from the Treasury and the officialdom of Japan. Typically, this is the BOJ as directed by the Ministry of Finance. And we had a interesting sort of setup here where there was a jump in yields. We established a kind of floor that then sets the stage for this range. And of course, the shot heard round the world now, this spike to the highest 30-year yield, of course, in terms of bonds, lowest price since 2007. And we sort of pointedly held this level even on an intraday basis, while momentum studies were suggesting, okay, we're setting lower lows on the price, but we're not on the oscillator, in this case RSI, but really you can use whichever one you wish. They're all going to show about the same thing. And you see then, okay, we're holding the bottom of this range. And so, and we have this sense that downside momentum may be ebbing. Let's see if we can't get into something like a reaction higher and see if it has legs. And so we got into a TLT call vertical right here. And through last week's shenanigans with the introduction of the new Treasury long-term bond buyback that created all of this consternation and the hangover after, as the markets tried to figure out, is this QE, is this yield curve control, are these precursors to these things, is the Treasury going to be able to pull this off? What we see now for a second consecutive day, and it didn't hold yesterday, but it seems to maybe have a little bit more legs today. It's a little bit more resilient here over the course of the day, an attempt by the bonds to make good on some sort of bottoming. Now, this is obviously early days yet. There's still lots of progress that needs to get made here. We have a ton of event risk on this score in front of us. There's, of course, the PCE inflation data, and that's the lesser of the risks. It is the Fed's preferred inflation gauge. It is expected to give us data that's a little bit of a pickup on the inflation side, but CPI would suggest that it's probably heading the other way. There's sort of the usual disparity between core and headline because the Iran war is getting washed out of the numbers. But at least from CPI and PPI, what we saw was that about half of the cooling there, which was larger than anticipated, was coming from this washout of the Iran war's impact initially on oil. And the second bit was coming from cooler core services. And that's perhaps the more worrying part, and the part that speaks to ebbing demand under the surface. What's interesting about all of this is, of course, the markets have been reacting to that sequence of data basically since the beginning of August, where first we got the soft jobs report, then soft CPI and PPI, then soft retail sales, then soft consumer confidence, on and on it's gone, housing data likewise. And so what that's seen as a kind of diluting of Fed rate hike odds. Now, that's happening in parallel with everything that's going on in the kind of fiscal management attempt with first, as we just said, the yen intervention, and then with this announcement last week of the doubling of the Treasury's purchases or buybacks of long-term bonds from 2 billion to 4. Not big numbers, but even in Scott Bessent's, the Treasury Secretary's subsequent telling, it wasn't so much about the numbers as it was about the signaling. And the idea that the Treasury really thinks that yields don't need to go any higher, ostensibly. Is that yield curve control? There's not a fixed target, but at the same time, you look at this chart and you see, okay, well, maybe there's a level here now that is trying to be defended. And for now, the markets seem to be following along, which is, of course, the critical bit. If the markets didn't take these attempts as at least somewhat credible, then we would not be seeing any kind of holding here at all. But to be sure, the markets will likely test again. And so where this goes in the next day or two should be decisive, it seems. We, of course, have the Jackson Hole speech from Fed Chair Warsh coming up after the CPI or the PCE rather data. That might dilute that PCE data's immediate effect because, of course, the markets may not want to have conviction ahead of Warsh's speech. What he says should be interesting, considering Jackson Hole is basically a forward guidance exercise, and Warsh is pointedly anti-forward guidance. So how this might get read should be very interesting, because what might very well be the order of the day is sort of the typical now Warsh song and dance, general principles, general aspirations, but practical vagueness and tactical vagueness at that, vagueness on purpose to obfuscate. And it seems like a kind of attempt at a return to Alan Greenspan's style of policymaking, where the idea is to confuse and obfuscate on purpose so that markets then find their own normal. And so if that's how this goes, then in the wake of all of that economic data we just rattled off, the trend has been toward diminishing Fed rate hike expectations. Well, vagueness would not ostensibly prevent that. It would remove an obstacle to the markets elaborating on that view further. And with that, we might get the rally in the bonds that we're looking for here. Of course, this is by no means the only expression we have of that view, and the one that's been working and the one that's been the most telling has been gold. Of course, this was kind of the genesis of the idea when gold would not sell off in July, despite at the time surging real rates. That seemed like a tell. It seemed like the market was sniffing out something that perhaps wasn't yet apparent elsewhere, but was starting to signal, okay, wait, maybe the market is starting to come to the idea that these rate hike expectations are overdone, and that actually things are not going to quite work out that way. Of course, everybody's been tempted to chalk that up to Bessent's adventurism last week, but that's here. And we had this whole gold rally ahead of that by quite a while. And so at this point here, it looks like we're trying to hold around this kind of inflection area here. We can see it's acted as support, as resistance, depending on where we look. But even if we take a look at it on a 4-hour basis, we can see there's a pretty impressive respect for somewhere around this area. There's a friction for whatever reason. And the market seems to be at this point still holding. So it doesn't feel like there's any urgency to add to this position. We've already added to it 3 times along the way, initiated here, then added here, and then added again here. So for now, it seems the thing to do to just wait and let this find its way. It's a similar story with silver, where we have exposure through a SLV call vertical. And as we can see here, again, digestion. Still very much in the move higher that we've been looking for, but for the moment, digesting against this level, it would seem here, right around 71.30 or so. If we can get a close back into here, it might be time to look to upsize this position and add in the next leg. But for now, we wait. The similar story shows up in a lot of the currency bets that we have on. So euro, we're long that. It's idling. Then Aussie, we're long that. That's idling, but very much still within the trend. Dollar, the Canadian dollar, we have that on as a futures contract here on the break, and that is holding. And similarly, the British pound, that's still holding. So not really a whole lot that's changing immediately on the dollar side of the equation. But whereas the bonds might be starting to make some headway, the concerning part of kind of this basket of exposure that we've built here around the idea that the Fed is not going to be as hawkish as perhaps expected, we look at Bitcoin. And here we've got a call vertical expressed in IBIT, the ETF. And what's interesting here is how these near-term dynamics are starting to develop. So we're setting higher highs and we're nominally holding the former sort of friction level here, former resistance as support. But this divergence in momentum studies is getting a little bit worrying, not because it necessarily means reversal, but because it has me on the lookout to maybe start to think about where a take profit level is here. And as I say, we have this exposure through IBIT. We were sitting in this thing in a call vertical once it stopped falling over here and seemed to attempt a breakout higher for almost a month and a half until finally we got this move. And of course, we've since rolled out in time. And we can see here, we have still quite a bit of time left, still sitting in this position. But if it becomes time that we need to close it out here because this momentum is starting to fade, then we got to be quick on the hair trigger. So this will be something I'm watching very closely as we get into that PCE data, and of course Friday into the Warsh commentary. Now, at this point, the markets may well be somewhat sideways because they're again reluctant to commit, but nevertheless, we may at any given point apparently now be one headline from the Treasury Department away from another jolt. So it behooves us to be careful and to, as ever, mind our size. This is becoming a bit of a concentrated idea, a kind of singular idea across a variety of assets. But so far, so good. And we'll update again tomorrow.
You bring it, we match it. Get a 3% cash match on all qualifying deposits, up to $3,000. You can trade stocks, options, futures, and prediction markets. Tasty Trade. Trade with us.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Every time he explains something to me, I ask him the same question.
He always asks me the same question.
What's the trade?
I'm not always sure that's the right question.
It's the only question. Retail traders don't have a thesis on in their portfolios. They have positions on.
And if you don't know why it's moving, the position is a good guess.
And if you never get to the trade, the reason has no meaning.
Same market.
Different question.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Investors Business Daily raves about us. Stockbrokers.com says we're best in class for futures trading, and Broker Chooser thinks we're pretty great too. So what else can we say other than trade like a trader? Tasty Trade.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
What is going on, everybody? Welcome back to Live from the Trade Desk. We're over here with Marty today. Today's Tuesday, Taco Tuesday. How we doing?
All right, what's going on, Errol? Everything's good.
Yeah.
Busy today at the desk, shockingly.
Okay.
For a market, as we were discussing early, that just seems like and this is S&P, SPOOs or whatever, it just gets to a point, like today, I think that 76.87 was halfway back from last night to when it opened up towards the high.
Right.
And then it just trades, like we were saying, in a channel like for the rest of the day. Obviously, they're waiting for Fed stuff too. Busy, a lot of calls today coming in, some assignments and stuff, and like AMD. MU's been like a little bit of a problem child for a lot of the guys I talk to trading. I'm in a long distance relationship with my MU trade. I consider it to be like a girlfriend that I don't know if I like her, but I can't break up. So I got to keep rolling.
Marty's got an avoidant attachment style.
I'm in a bad relationship. It's a one-way relationship, by the way.
No.
So I'm kind of battling that a little bit. When I look at these chip makers, they've been taking it.
Yeah.
They've been getting a little bit hammered. So I thought I saw MU. I think it was up like $30 earlier, but it's still kind of dragging a little bit.
Yeah.
This is an interesting market. Obviously, summer markets, as you know, usually a little slower and everything. We were kind of busy, I would think, in the summer for like a normal summer. See what happens, as we round out the end of the month. An enormous amount of call in today, which is okay. I like.
Primarily after the first hour. So it's felt like we've had a lot of volatility the first hour of market open, and it feels like the volatility just dies or gets sucked out of the market for the rest of the day.
It's like they're waiting for something.
Yeah.
They're waiting for some event or news or whatever. But I mean, if I walk back in there and you told me that, the SPOOs were up 8, I wouldn't be shocked. But they just get in that range, and then it's like, okay, they're just going to go back and forth with it. So if you're like a technical guy and you like halfway back numbers or you like picking some tops out, you probably have some room in there. Maybe not so much for individual, stocks and ETFs and assets like that. But if you're trading XSP or you're trading NASI like you or micros or minis, there's probably some opportunity if you're able to, manipulate in and out at a nice clip. Right. As far as the rest of some of the asset bases, it's getting to now where I think that people are trying to, at this juncture of the season, maybe they're trying to consolidate a little bit. Maybe they're trying to get ready to do like whatever the next step's going to be with interest rates and things of that nature. The only other thing that I see a lot of towards the end of the summer, I don't know if you guys get this from callers, is the overmanagement of positions.
Okay.
Like, I don't know what your advice would be. Like, I'm always interested. I was going to ask Kristen, what do you think is like a nice position size for someone? Let's say they have a $30,000 account. Right. How much can you manage and pay attention to everything that needs to get done in that account if you're holding 40 positions or something? That's where I see a lot of, it's something that, obviously you're only going to put on what you think you can manage, but I'm just curious to what you think about it.
Yeah.
Like,
I mean, 30,000, I guess it's going to depend on your risk tolerance.
Correct.
Right? And I'm curious, do some traders call in with the position size that's optimal for their portfolio? Maybe certain things go south.
Right.
And now they're sweating a little bit. Now they want a little bit of advice on how they might want to manage this. Maybe they're getting margin called. Do you deal with a lot of those type of conversations? It starts out as a manageable position.
Right. And then they become, like me, you get involved in a you gotta learn how to cut it off. But I think that it's also, just like you said, it's relative to risk. But you could have a bunch of not real risky positions on and maybe just have too many positions on to manage appropriately, because you have to be on point with it.
the whole methodology of trading, small and often makes a lot of sense. Like if you can do it.
Not the law of large numbers.
Not the vast majority of our clients aren't doing this full time, but they're spending full time trying to manage.
Right.
So when I see that, I'll see maybe unnecessary assignments because you're not paying attention to extrinsic on some of your in the money spread.
When you got 40 symbols in the portfolio sometimes.
Right, it's difficult.
One or two might slip your mind.
Right. They might, but it's interesting. I like the idea of helping them, through observation, manage what they're doing and then get it into a situation where they're able to, conduct their business and then look at their positions and go, okay, this needs adjusting, this doesn't, I'm fine here. And then it gets to the whole point of maybe you're not closing something out when you should. If you're letting something go a little long, because if you can't, if you're spending 15 seconds every 3 minutes looking at 35 different positions, you're going to have there's going to be a lot to manage.
Yeah.
Let's leave it at that, right?
100%. Before we get to top 20 symbols, you experience the most active phone lines being in the morning session, midday, afternoon? Does it depend on the day? Does it depend on what
mornings
are going on?
Usually it can be a little quiet up to, let's say, 7:30 Chicago time, and then it'll pick up. And then once the bell rings, you're going to get a massive calls in from clients that need one thing or the other. Again, you might get. It depends on what's going on with basically assignments and things of that nature. If you get a lot of it in the morning, you're going to get a lot of calls from people that just want to get their covered stock trades in so that they can cover whatever positions they were assigned. But it fluctuates. We'll see and then after 2:30, it's obviously going to get busy. Okay. And then you get a lot of stuff from, 3 to 3:30. So it goes in ebbs and flows like anything else. But it's been busy today, to be candid with you. Probably still is out there. Feel bad coming out and talking. Right, because we don't want that queue going. But yeah, it's interesting. Today, Mondays are, like I've said before, that's the new Friday. Now.
Right.
It's interesting.
Yeah.
It is interesting on a Monday because it's basically nonstop. With probably people getting their stuff back in the order that they think that they need it in or want it in from the weekend. But Mondays have become, Fridays you expect it.
Yeah.
I know, but Monday's
a new one. There you go.
Yeah, maybe some relationships like I'm in right now out there for Mondays, right?
Yeah, we'll circle back around to that.
Yeah.
You ready for top 20 symbols of the day?
Yep, let's do it. Let's do this.
What do we got?
Okay, at number 20, we're going to have Amazon at a 15, 19 Palantir at a 16%, 18 SLV. I'd like to see the, gold and silver are coming back. That's another interesting one, gold now. I bid at 17, a 33%, 16T triple Q at a 42, Microsoft at number 15 at a 24. We have BE at 19 at 14, Moderna at 66 at 13, Netflix at a 12 at number 12, 24%, MSTR at 11 at a 29. Rounding out the top 10, we have Intel at number 10 at a 28, AMD, which has been... that one's under a little bit of pressure right now at number 9 at 25. Robin Hood.
You got that on the screen. We got Robin Hood.
God bless him at a 46.
Yeah.
Number 7, Apple at a 41.
Okay.
6, Meta, 33. GLD at number 5 in the top 5 at a 36. We have MU at a 30 at number 4. At number 3, SpaceX at -2. Oh, look at that. Must be rallying still.
Yep.
Number 3, Tesla, his sister company, 2 at number 12. And Nvidia. Nice to see Nvidia back on top of the 36.
You know what's been a beast lately?
What?
iBit in the crypto.
Yeah.
I've been getting some calls about that. I've been ripping.
I got guys that are in it. You know, it's interesting.
Not a
because
ton of
they're getting a rally back in.
It was quiet the last
gold. I had a couple of guys calling up there thinking about
I missed the move.
It's I have a guy that trades and he's like, well, what are you going to put a strangle on? And I'm like, I don't know, 5,400 and 4,000 or something.
A wide one.
Yeah. I mean, you got to be, but you know what happens? You get one move in it, the other side's going to blow up, and then you're managing one side of it, the other one.
Yeah.
And they're getting a little bit. I think that gold's going to be an interesting trade going forward.
You think so? It's been volatile the last about 7. It's been alive.
Yeah, I mean, it's quietly at 46, or was it when I looked last? What's it trading at? It's like at 4,600 or something, or a little more.
Not to mention the silver futures product. That's a massive product.
Yeah.
That's a big one.
Yeah. Gold futures are not for the
faint-hearted.
Big boy pants. Put that on, baby.
That's a big boy trade.
That's a big one.
That's a big boy trade. No, anything else top of mind before we wrap for the day, Marty?
No, I'm good right now. Everything, get back in there and get you people handled. Okay? Get everybody handled.
Hey, come say what's up to Marty. With that being said,
all right,
that's gonna do it for today. Trade live from the trade desk. Thanks for hanging out for a little bit.
You got it,
nice to chop it up with
anytime.
You, Marty. But with that being said, guys, be sure to stay tuned for more amazing content that we have coming on next. We're going to take a quick 90-second break. We'll catch you guys here in a quick second.
You bring it, we match it. Get a 3% cash match on all qualifying deposits. Up to $3,000. You can trade stocks, options, futures, and prediction markets. Tasty Trade. Trade with us.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Mike, what does it mean to be assigned?
When you are assigned, you are ultimately short an option that's in the money, and the counterparty has the ability to exercise that option. So if you are assigned, it means your option, against your will, ultimately, has turned into 100 shares of long or short stock.
What does a green scratch mean?
Ooh, a green scratch refers to stubbornness getting the best of you. And when I say you, I mean me. Green scratch refers to rolling a position, defending a position, and instead of just closing it for less than loss that you're seeing, or maybe a $100 loss, $50 loss, a green scratch is when you close it for maybe a 5-cent winner, 10-cent winner, 15-cent winner. Just the ability to see that green number on your screen and get out in a profitable way as opposed to a loss.
Tasty Trade has crypto, and you can trade with 0 commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Investors Business Daily raves about us. Stockbrokers.com says we're best in class for futures trading, and Broker Chooser thinks we're pretty great too. So what else can we say other than trade like a trader? Tasty Trade.
Good afternoon. It's time to get back to trading. I'm Tom Preston, and let's take a look at them. Let's see what the market's doing here. S&Ps, SPX is up 15 points. And, going to that Dire Straits song from 1984, whatever it is, Money for Nothing. So just to let you know, I bought... If you see it in the follow, let's go to the follow page and go to SPX, and you'll see what I did in there. So I sold this Iron Condor for $3.10, and I told you about that fill when I was on with Chris Vecchio this morning. It took me a while. I was at 285. No, at 285. I was trying to sell it for 285. Nothing done. And then went downstairs, pet the dogs, came back upstairs, and I get filled 25 cents better. I'll take it. Done. And then I put an order in immediately to cover it half that credit. So pay $1.50 for it to close it out for a 50% of its max potential profit. So it took me about 50 minutes to get that P&L. That's how I manage those SPX trades. They're not winners all the time. They are absolutely not. And I've taken a few big losses in them. It's true. But, I try to string together some winners. I'm keeping my position size small in these things right now. With volatility this low, the VIX, it's down 1557. That's pretty cheap. And it makes all the SPX options very relatively inexpensive. Or should I've got that relationship backwards. The SPX options are used to create the VIX. So that's the direction of the data. Whatever the bid-ask spread or the bid-ask prices of the out-of-the-money SPX options are, those get distilled down into the VIX. And that is that's how that relationship works. So the point is, the reason the VIX is so low is that it's, there's nobody's buying these SPX options. They're selling them. So it's all us. It's all us selling our iron condors and keeping our fingers crossed. But the bottom line is, you just don't get rewarded that much. So I'm keeping my position size small for now. VIX goes back up to 1920. The premiums get a little bit richer. Keep in mind that it is a non-linear relationship between option premiums and volatility. As volatility doubles, for example, you get a bigger increase. You get more than 2x on your options and on your option values. And then it starts to change as you get higher and higher in volatility. So it's a lot of moving parts. But the bottom line is 20% or 20 VIX is a lot easier for me to trade than 15 VIX. That said, I have the YouTube chat open. If you have any symbols you want me to take a look at, either to trade or that you're wondering about, post them up there. Any questions you might have that I can answer. Can't answer them all. I don't know the answer to everything. The meaning of life I can answer. The meaning of life is to trade. That's pretty much it. It really is. You climb up in some Himalayan mountain, talk to a guru. You say, what is the meaning of life, oh yogi? Trading options specifically. So I'll save you the trip to the Himalayas. So I just did a video for our YouTube channel, and sent the slide over to our development, to our production team to spiff up. And I said, please make this a little bit easier for people to understand what I was talking about. And I talked about this last week or 2 weeks ago, talking about butterflies. And somebody pushed it out there. Yeah, it's talk about the butterflies. Do a video on the butterflies. And this is kind of an options 201 or 301 topic, kind of. And I know that we like to keep things really simple here on Tasty so everybody can play along. But sometimes I like to let folks know that there are different levels to this. And when you've been doing this for as long as I have, you've seen a lot of levels of option trading. So I would just want to go over this really quickly with you, because you're people tuning into the show. Yeah, it's been around the block a few times. You know this stuff. You can handle this. So index is trading at 76.66. Okay, and this is when you might do it on index that's moving around a lot volatile. I used to do this on the floor. This is the way we used to trade, or I used to trade sometimes bond butterflies in bond options. So it's what I want you to focus on is let's do crap. I lost it. So let's buy one of these, sell 2 of these, and buy one of these 660s. And you say, okay, that's a 40, 45, 40, 50, 60 put butterfly. What I am telling you is that inside, you see how there's 10 points between the long and the short strikes? Consider these as steps. So 1 step, 2 step. In other words, between strikes. Maybe it's single point strikes, then a single point would be a step. Here in the SPX, it's 5 points for each step. But it's about the steps. So 1 step, 2 step between this one, the 40s and the 50s. Same thing with the 50s, 60s. So it's a regular plain old put butterfly. What I'm telling you is that there are 4 butterflies embedded in it. There is one of these, a 40, 45, 50, 40, 45, 50. You've got one of those. You have two of these, the 45, 50, 55 put butterflies. You get two of those, and you have one of these butterflies, the 50, 55, 60. Okay. Do that on a spreadsheet, do that on a piece of paper. And what you do is you do 1, 2, 1, 2, 2, 4, 2, 1, 2, 1, add up the rows, and you'll get this, the 40, 50, 60 put butterfly. Why would you ever bother to know this? Because the way sometimes I will look to do this, that this butterfly has 4 butterflies embedded in it. As the index moves around to this different strike prices, okay? Remember, butterflies maximize their value when the index is at the center strike. So wherever if this thing's moving around from 76.66 to 77.70 down to 76.75 down to 76.70, then back up to 75, then to 80, if it's bouncing around like that, as it can do, the value of the butterflies, that center butterfly is getting richer compared to the ones surrounding it. So if I know what the embedded butterflies are, I'm selling them as the index gets closer to their strikes. So if I'm long this butterfly, rather than sell it at 80, if I can manage those butterflies and sell them out a little bit better, I might be able to close this effectively for, $1 or $1.05 or something like that. You're not going to make 10 times as much money. That's not what I'm doing. But what I'll do is I'll say, okay, if the index, let's say I buy this one, the 70, 60, 50. Did I do that right? Yeah, here it is. So is the index is at 76, 66? Okay. If it goes down to 60, it's going to maximize that. So I'll sell this butterfly here. Okay. I'll sell the 2 of these. Okay. So notice that this butterfly, let's go back to quantity 1. This butterfly at 75 is worth a little bit more, or no, a little bit less than this one here, $1.25, which is worth a little bit more than this butterfly here at 15. Do you see what I'm getting at? See what I'm getting at? And why would I end up with one of these wide butterflies? It's because I have some unbalanced butterfly like this. I do a 10-point butterfly and then stretch it out like that to get a debit or get a credit for it. And I close the embedded vertical, then I'm left with a wide butterfly. That's how I end up with this stuff. Anyway, I want to kick that out there. Did a video on it. If you have questions about it, let me know. Let's see. What about GZ? Yeah, all right. Oh no, Dolly Parton died? Oh no. Love Dolly Parton. Oh no, Dolly Parton. I gotta check. I'm sorry, folks. I gotta check this. It's gotta be on CNN, right? Or is this one of those breaking news? One moment, please. Oh, Dolly Parton dead at 80. Oh, that stinks. I always liked Dolly Parton. She was fun. Drove past Dollywood years ago on our way to, is it called Sevierville or Sevierville? I think it's Sevierville in Tennessee. Beautiful area. Love that area. All right, first up, let's see. I like that. Too Much Delta's CrowdStrike. Hey, let's check it out. Let's talk more trading. Coming out on earnings. When is that? Tomorrow. Is it after the close? Let's give it a try. Bullish? Why not? Let's see what the skew is looking at. $1.80 to 182.50 right here. So down $2.50, up $2.50. Yeah, the skew's pointing to the upside. Let's do it. So I'm going to buy the 85. I'm going to buy the 85, $2.48, generating $1.65, $1.67 in theta. I like it. Let's fire away. So the reason I like this, again, it's a defined risk trade. I've lost money on CrowdStrike. This could be one of my winners, hopefully, if we rally up here. I'm generating positive theta because the debit of the spread is less than the intrinsic value of the 180 call. All right, so let's ship this at, I wonder if I can get 248. I don't know if they trade in yeah, they trade in pennies. Filled at 248. All right, let's keep our fingers crossed. Too much delta. All right, bullish on Avgo. All right, well, 1038 came in first with a GZ. I like to do these in orders. And by the way, folks, a lot of the trades that you have suggested have turned out to be winners. I do this with my own money, and hey, I don't care where the idea comes from. Green is green. Profits is profits. Gold futures. I'm bullish on gold. We could do a 1 day just to get paid. Just to get paid. About this one. Yeah, and so I know Errol and Marty were talking earlier about, gold being an expensive product. It is. You don't want to be, you can, sure. I mean, you can sell a naked put at GLD or at gold futures, $26,000 of buying power. Okay. Yeah, I mean, okay, if you get the money, you can do it. Personally, I'll just verticalize it off. Risking 400 to make a buck, I'll do it. Let's pull it up one strike and get a little bit more. Yeah, let's do that. Let's do it for 1 day. Let's do it for 1 day. I can withstand about a 46.30. About a $77 loss. Let's do it. Oh no, where are the futures at 68? Yeah, let's do these. Fire away. Boom, done. Come on. Trade. Pending. Working. Come on, give me a fill. Give me a fill. Next, Avgo. Why not? Let's see. The only Catan says bullish on Avgo, possibly a short-term 6-day trade before earnings. I like the way you think. Yeah, is it down? I guess, yeah. Broadcom is Broadcom considered a software company, or is it a chip company? Because the chips have been getting whacked today, with the exception of Nvidia. So yeah, let's check out a bullish trade. 33% IV rank. Vol's pretty steady in this. 50% overall vol. Let's see what the 1 day is. Let's just see what the 1 day is. Yeah, for $355 stock. Yeah, I don't think I'm going to get the credit for these. Let's go to 8 days. Oh, there are very few strikes with 8 days. So let's do 6 days. Let's see here. Which way is the skew pointing? Down 5, up 5. Skew's pointing north. Skew is pointing to the upside. If I do this, 2.5 point strikes, I'm looking to try to get about 80 cents for that. Let's drag it up here. 75. Let's drag it up one more. Drag it up one more. There we go, 95 cents. I like that. So yeah, if you're bullish on Avgo, you could either do, this one for 75, maybe this one. Give myself a little bit more room in the downside. Let's try to 75. Let's do it. Phil, I like to collect a little bit more than that, but we'll go for it. Let's see. Oh, hope is so yeah, unfortunately, Ranch, I saw on CNN. CNN, you could say CNN is whatever. Well, I'm not saying CNN is a hoax, but half the stories I see on CNN are advertisements for like camping gear or cooking gear. It's like, what is this stuff? Semi company. Thank you, Brandon. SoFi, Iron Condor. Let's check out SoFi. Thank you, Donut. Okay. No, Avgo's basically chips. Thank you very much for that explanation. Yeah, Ranch, the embedded butterflies, you can create that with a spreadsheet pretty easily. Let's check SoFi. Yeah, I think it's real. So legit trading coming in with SoFi. I've had bad luck with SoFi. 12% IV rate, but a 50% volatility. Yeah, let's Let's just see what it is. It's very cheap. 1884. If I do, I'm gonna have to go out a little further with this. I'm not because here's the issue. SoFi at $18 because option prices are linearly related to the equity price, the stock price. Low price stock means cheaper, low priced options. Go to here, 17, 4, 16, and do 28. Let's do this. Let's do this one. Let's do a 1 point. Let's do a one. That's not enough. Drag it out for 2. I don't love this. I'll do it anyway. You know what? It's for $1.50 a theta for $141 of buying power. Why not? And I like a guy's suggestions. What shit? That filled to 59 cents. Let's do it. TP, what about Dal for Anwar? Yeah, so I have my TP killer love. I'm short the 45 puts in there. They stink. DAL's probably in the same situation. So actually, DAL is love up. Yeah, love's up. How about Jets? Jets is up. Jets is the ETF that tracks airline stocks. So Delta, I know a pilot flew for Delta, love Delta. Let's see. I don't know, Anwar, what do you think? Bullish or bearish on Delta? Let's check the skew. $83 right there. Nice. And okay, when you elect me as president of the United States, hope maybe in 2028 or 30, whenever, I'm going to mandate that all stocks and indexes have single point strikes. Okay, none of this 5, 2.5. Forget it. Give me single points. It makes it 100 times easier and plays to the flexibility of option trading. So stocks at 83, down 3, up 3, 168 in the 80 puts, 204. Yeah, they're bullish in here, Anwar. Let's just see what a naked short put would cost. $1,000, $73. See, that's too expensive. So let's pull this up to the 80, 78, collecting 57 cents. I'm going to have to pull this up one more strike. Yeah, so I like this trade. Here's what I like about this trade. If I'm bullish on Delta, this has a 72%, and this is where, folks, and I've explained this before, when you're looking at this P50 number, because it is a simulation, it is not a closed form solution, it is an analytic solution. It works best when there's an actual days to expiration. So 0 DTE, I don't think it works. Anything with like 2, 3, 4, it's less reliable. Go up to 24. P50 works like a charm. So the point is, this trade has a 70% probability of making half of $63, about $31. I'll take it. $31 versus $132 or $137 of risk. That's not bad. Let me get my calculator out just to prove the point. If I can make $31 over 24 days versus $137 worth of risk, that's like 25%. That's like 1/4 of it. Did I do that right? Yeah, let me see. $31 divided by 137. Yeah, it's like 23%. And the point of this is most of that 50% profit is going to come in probably in the first 12 or 15 days of this cycle. It tends to be bunched up towards towards the first half of the expiration cycle. So I'm going to ship this off. Let's trade at 64. Let's see if we get filled. Filled at 64. Let's keep our fingers crossed. Let's see. The short put spread and deal. Yeah, so Ranch. Yeah, you could do one day. Yeah, so GLD. I was looking at did I get filled on that gold trade? No, I'm not filled. No way. Let's try gold. Let's just try gold or GLD. GLD. It's first of all, it's a lot cheaper to trade. What'd you do? 1 day, Ranch? The 2025? That's aggressive. Ranch has got a little bit more risk appetite than I do. Let's tighten that up a little bit. Right here. Let's do the 23.25 with 1 day. I'm gonna do that and see this P53%. It's because it's got 1 day. It doesn't work, but $13 a theta because it's all premium in this thing. Let's ship it. Go. Done. You got to trade. You got to make decisions fast. You have to know the numbers you're looking at. And the more you do this, if you're new to this, if you're new to Tasty, and you're watching me for the first time and say, geez, he spends like 2 seconds looking at a trade. So I've been doing this for a long time. And I basically designed the approach of how we do trading. And the point is, if you do it enough times, those probability numbers, the risk numbers, the theta numbers, they all start to, oh yeah, okay, bing, 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 that's where I see them, that's how I use them, and you do it, okay? So yes, I go through these things quickly. If you want me to explain something more, send me an email, tp@tastylive.com. I think it is tp@tastylive, or thomas.preston@tastylive.com, something like that. So let's see, Dr. Onan, or Dronin says, are you saying buying out of the money, same day butterfly, expecting the underlying trade up or down towards the body or the center of the butterfly to sell the butterfly? Yes. So basically, the idea is that when the index, at least very, very short term, sorry, screwed up the video because I had to see it. When you're seeing that index go to the center strike, the short strike, it maximizes its value. Okay? It maximizes its value. And if I can sell that expensive butterfly that's maximizing its value and be left with the remaining butterflies that are the component butterflies, then I can try to maximize them too. So it's all about trying to squeeze, an extra few pennies out of a long butterfly trade. That's what it is. All right. Don't worry about it, Dronin. You can watch the video, and it's an old sort of floor trader trick. Let's take a look at some other symbols. I have 5 minutes. Let's go into my watch list. So I was looking at, and I create a watch list of the stuff that I want to take a look at. Microsoft had tried to do an iron condor in my cherry bomb last night. If you saw that, I'm thinking Microsoft is going to be kind of range bound. The thing's gone nowhere, really. It had this massive rally up. Let's see if we can do an iron in this with 3 days. I was going to do, let's see if we get this one. Yeah, 88 cents. I was looking at the 75, 77. Now that the stock's up, I have to tighten up the put side. But 91 cents, let's ship it. Come on, give me a fill. I don't know if I'm going to get it. I might have to give him a penny. Let's see. I want to get filled. on that. Do we have any opinion on SPX, bullish, bearish going into the close? Because I know you guys have been betting on bearish over the past few sessions and have been, those have actually worked out, but I don't want to influence you. I'm not necessarily bearish going into the close. I could go long, short, I don't really care. One of the things looking at is target. I took a bearish trade, a bearish target trade off earlier today, made 60%, I think, of the max profit. Nice. I think that might have come from the viewers. Love you guys. I was looking at Macy's. Macy's is a nice, inexpensive stock. If you are dipping your toe into naked short options, if you're mostly used to doing defined risk trades, which I am 100% in favor for from just about everybody, but you say, gee, I see traders doing naked short options all the time. How do I get comfortable with it? One way to get comfortable is with relatively low price stocks. Okay, these things, because why? Because their capital requirements are typically lower. So I was looking at Macy's. Macy's is down, I guess, because retail got whacked. It's down towards the bottom of its range. Maybe if I could sell the 22 put in there with 10 days. I mean, the skew, it's in between here. So let's say down half a point, up half a point. Yeah, so the 22 put is at 30, the 23 half call is at 38. So the skews point a little bit. That for me is enough reason to get bullish on it. And here, so I could make a max profit of $28 versus $372 of capital. Not a bad return on capital. If an 83% probability of making $5 or $14, again, not a bad return on capital. People wonder, gee, how can option trades generate these returns? This is how it's done. And yes, you're going to have losers. I don't know if you guys are going to have winners or not, but I will guarantee you're going to have losers. So be prepared to lose some money on some trades. But if you keep doing it long enough, hopefully those probabilities start working out in your favor. That's the goal. That's how it works, for people who've been around in this business for a while. So I'm going to ship this off at 28. See how we get filled. Bullish on Macy's. Macy's. Anything else? Sitting out the closer butterflies. Yeah, had a bad experience Friday. Yeah, it's Bears have been owning Jared Kramer. The Bears have been owning the momentum into the close fan plan. Then butterflies. I haven't gotten my fills the last couple of days. I have too. Sometimes I've been having a little bit of like this Microsoft. They're not now. See, it's 84 cents. All right, fine. You know what? Screw you. I don't want to play. I'm taking my ball and going somewhere else. So Delta filled, SoFi filled, Avgo filled, CrowdStrike filled. Are there any other trades? Go to the watch list. Adobe, I was also looking at that. I know is a software company. Now is a software company. CRM has earnings coming out tomorrow. Yeah, I think tomorrow after the close. So maybe we can look at on tomorrow's show. So tomorrow, Wednesday after the close, we have Nvidia coming out. So let's take a look at trading Nvidia tomorrow, maybe CRM. With that, I have to hop. I'm going to send this over to Chris and Ilya, who have, I love those guys. Very different perspective from what I have for trading options. And it's a nice balance. They're great guys to listen to. So with that, I will see you tomorrow and good luck trading.
You bring it, we match it. Get a 3% cash match on all qualifying deposits, up to $3,000. You can trade stocks, options, futures, and prediction markets all on one platform. Plus, get advanced tools built for active traders. Visualize potential profit and loss with risk analysis tools. And place trades in a single click. All on the best platform for options trading, according to Investopedia. Tasty Trade. Trade with us.
Coming up on Bad Money with Jim Blamer. Blamer's hot stock tip of the day.
Trade ideas? Trade ideas? You're coming to me for trade ideas? I'll give you a trade idea. Trade me for tastytrade.com. Those guys are great. I love those guys.
Investopedia says we're the best for options trading, period. Investors Business Daily raves about us. With stockbrokers.com, we're #1 for options trading and best in class for futures too. The Motley Fool really likes us, and so does Broker Chooser. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
We're back. You're watching Tasty Live. Welcome back to the futures. I'm Chris Vecchio. He's Ilya Spivak. We're here to talk futures markets for the next 30 minutes. Well, a little bit less than that here as we get to the top of the hour before Tim Knight, the slope of hope himself, comes on. Ilya, it's a bit of a meandering day here. If you were like so many, Mike Jermal, like to play that short SPX Iron Condor at the open, it's been a pretty good day because we're only up by 0.2%, 16 points off the highs, back below 7,700 here. Not much higher from when TP and I were on together this morning for Confirm and Send when it was at 76, 79. So when I say a meander, Ilya, the past 3 hours has produced 7 points net.
Yeah.
Okay. So that's not really much of anything so far. There's been a lot of headlines today. There's been a little bit of relief in the bond market side of things. I can't wait to talk to you about Druckenmiller using AI, which is delightful.
I mean, you saw I reposted friend of the show, Claudia Sam's analysis.
We're going to get there because there's so much good drama around this because we're going to get there. Okay. So crude oil is back in by around 3% today, giving bonds a little bit of breathing room, right? Those are up by about 0.7. And, first touch of the 50 here, by the way, since July.
This is
7th.
the most interesting thing in my mind in the markets today, that amid otherwise quiet, the bonds said, oh, let's go to the top for this range. Maybe we're fighting the wrong war.
Well, it doesn't hurt, right? And, the Besant doing his thing with the Treasury curve, Besant doing his thing with the Iran sanctions.
Besant's doing his thing.
All leading into this decline in oil prices right before Kevin Warsh speaks at Jackson Hole, right? So there's a fundamentally different backdrop if oil's trading at 95 versus 85 or even 75. Doubt that it gets down there because certainly I'm not prepared for that position-wise if it gets down to 75 by Friday. But it's the market perceives the way that it's talked about, Warsh's speech, it's totally different if oil's at 95 versus 85 versus 75. And he's saying that we can still be patient and look through inflation. So with that in our back pocket here, Ilya, rate hike odds are a little bit lower today. Gold, silver prices a little bit softer from where they were at the highs.
But only just.
In fact,
take a look at gold for a second. There's an interesting thing going on here. Take a look at a 4-hour chart. It's really interesting, the technical adherence here. I mean, we're down on the day, but look to the extent that we're able to make a lower low. We stop at the last most recent friction point and then just grind as though the market's just paused and said, okay, big event risk tomorrow. Let's see. But even with bonds doing what they're doing, no lasting impact, seemingly. Not here, not silver, not the dollar.
Not Bitcoin either, which crossed 80,000 today. 80,000 today for the first time in several months. It's a little bit lower here as well.
Holding
but again,
too.
81,620. It's holding.
I'm a little bit less, shall we say, sanguine about Bitcoin because I see the higher highs here are coming with divergence on momentum. And these wicks on the daily chart are getting a little hairy. And so I'm looking at this and saying, okay, well, I've been long. I've been long for months, waiting for things to happen. But they finally did. I'm going to be quick on the trigger to get out if this thing starts to get any kind of meaningful backfill. Not yet, but it could get a little soggy if this momentum fade is going to be a real thing. Or it could just be digesting. So I'm not prepared to get out yet, but I got my finger on the button.
So let's keep with equities here for a little bit. S&P 500, 16.5 points higher than NASDAQ, up a little bit more, about 0.5% here, stabilizing ahead of Nvidia.
This, I think, is the other thing.
Well, and this really, the chart still hasn't recovered cleanly here just yet. I'm going to go down to that 4-hour time frame, Ilya. I had marked off some swing highs around here that we had back in the middle of July.
That's what I was looking at as well.
We pinned the low here. We bounced off of it here on August 19th, and we're struggling. And then you have the Russell, which had a nice little day today up until the last few hours, and it's starting to sag against that 3,000. So, here's what's remarkable. You say that oil's down 3%.
Yes.
And bond yields have come off, and ZN is near the top of its range again. I'm like, Preston's efforts are working. Okay,
maybe.
But they're not working. It's only because oil's down.
Well, and this whole thing predates Besant.
This whole reaction in stocks today, like this is all we get on these tires for a 3% decline in oil and bonds backing away from the brink.
That's
the market's
really
sitting on edge.
That's fascinating. It's fascinating that when you look at this whole thing and you go, okay, well, which market do I take at face value here? Because if you look, the one sort of set of markets that seemed early on all of this, gold and the dollar, and to some extent silver also, but really gold and the dollar were the benchmark assets that already in July said, listen, you guys are overcooking it on these rate hike odds. That's not what's going on. And even though you still had one more leg of real rates going up, and that, of course, was the driving force behind what was happening with nominal bonds, because to the point that you've made, term premium hasn't really expanded very much. The break-evens, they're pinned near where they started the year. They've done the full round term. So inflation expectations as far as 5-year break-evens, 10-year break-evens, back to where they were before the war started, frankly, back to where they were in January. And so we're in a situation then where already in July, gold and the dollar were saying, we're not rallying on this. If you're the dollar, we're not selling off on this. If you're gold, we're not doing it. And what have we seen since August? Fed rate hike odds have faded. Bonds have stabilized. The tone in U.S. economic data has softened. And it's almost as if the markets are going, yeah, well, that's what gold was talking about. That's what the dollar was talking about.
Yeah, it's, what's interesting about all this action is that the debasement trade, so to speak, is still alive. Yeah. Right. So even though bonds notes are back near their range highs, bonds are back up into the 109 range or so. Gold is not giving it up. Neither is Bitcoin. Neither is silver. They're like, no, this is the new world. This is the new regime. Which I suppose
this is where you live now.
What do we do with the S&P 500 here at 76.86 or so? I'm still nursing. I have several positions here. Short call spread right now, 77.25, 77.50. There's 6 days to go. We're below the short strike. This was a $600 loser at max loss. I have that longer term ESH7. So I said, you know what, Elliot, let's see if we can pull back in. I don't need to take this off at max loss after I liquidated the short put spread side of it. And so now it's not a $600 loser. It's about $200 out, 187. A few more days of theta decay. We'll see what happens. Nvidia tomorrow could change this. So if this market's down to like 76.50 or so before Nvidia, I'm probably just going to take this off at a scratch or close to it. No reason to ride it out and deal with, maybe a market that gets jumpy here. But
I'm with you.
That's one of the reasons why, and you've been queuing this up on Overtime for many years now about Nvidia's fading market reaction. If we're thinking about Nvidia, last six quarters for Nvidia, they've beat on both EPS and revenue 5 of the 6 quarters, the stock's been down immediately the next day. The average 1 week return for those 6 quarters is minus 4.6%. So,
and the size of the beats has, as we've been talking about for a long time, the actual margin of EPS and revenue beat has been shrinking and shrinking and shrinking, and is now sub 2%. Whereas
it's going to be nigh impossible now. The EPS expectation is 99%.
It's out of this
growth.
world. It's out of this world.
It's 99% growth. So if they come in at like 103, like, oh my gosh, their EPS doubled over the past year. If you're in that neighborhood, that's where the consensus was already.
Right.
So maybe this is a turning point. Maybe EPS beats and revenue beats, they calm everyone down saying, oh, the money's still there. Well, we know the hyperscalers are still spending a ton of money. So shouldn't that show up in NVIDIA's results?
Well,
like, don't we know that?
Considering NVIDIA is subsidizing the hyperscaler spending, it gets a little funny.
Okay. So, one of the things noticing in the NASDAQ here today, right near 29,350 or so, whatever pin high this should have been a Morningstar cluster here, Ilya, and it never materialized. Right. And so I point that as a meaningful reference point. The high there, like 29,364, clearly something there. And then on the way back up, punch through, pull back as support. We're struggling below there today again. And now you have your 1 week below your 1 month, which is starting to leak below the 50. The NASDAQ looks in pretty bad shape, which for me, heading over to M&Q, where I've been
some
doing
calls yesterday. Once we got the punch down, I sold some calls yesterday, and I've been sitting on a little baby thing selling calls in S&P as it's meandered, very much in line with the logic you've just outlined. I'm selling calls. I'm not buying puts. So again, it's one of these things where I want to have a bearish bias, but if it goes nowhere, that's fine. I'll take theta decay. That's okay.
And I kind of had that going for me too here. And this is in M&Q because the way the market's shaping up, I'm doing ES long M&Q a little bit less. Yes, we're still above the short strike here, but at 6 days to expiration, this is now at 62.50. This was put on 58.25. So I could take this off for an $8.50 loss. Okay. That's nothing. Ilya.
Yeah.
That's perfect. And that's part of, in M&Q, this is going to be a little bit bigger, but either way, 6 days left heading into NVIDIA where it's tended to disappoint. I want to get out of this.
Yeah. There's no need. Why?
I want to get out of it. The other thing that I'm looking at here in the Russell with 17 days to go, yes, it's had a little bit of a bounce back right now, and 3,000 is holding up as a shelf, but this 29.75, 29.50, this short put spread here, it was working a few days better. It went back down. I got in at 680. It went back up to $8. It was down at 480. Maybe not managed properly. Okay. But now I can take it off at a scratch. And we're on the other side of that decay curve, 45 and 21 out, so to speak.
Yeah.
I don't need to have this position on here either. So take that out. Just the chart looks like it's tilting over, and the way that these wicks are forming below the moving averages, it makes me feel uneasy. And listen, if it turned higher,
even the past 4 days are starting to look like a little bit of a triangle. If you went down to a 4 hour, you could see it, and it would be a triangle in a downward direction. It would be bearish continuation that you'd surmise it's coiling up for.
Right. And so I'm just kind of treating this now as a rectangle here. Maybe this is a head and shoulders pattern. It does fit the bill. Left shoulder, head, lower right shoulder. And so 3,000 to 3,080, that gives you like a 29.20 target. And Ilya, at the end of July, the market started finding a bottom in the 29.20 area. So we know there's ample demand down there. It all kind of fits together like a neat little puzzle. So, listen, if the Russell starts accelerating below 3K, I may flip the script here and go out, kind of having a game plan, so to speak, out to the end of September 30th. And at least the Russell's gone, and looking down towards the 29.25, 2900, which if this decays a little bit more, 10 more points, it's not going to be this exact 475. It may be a little bit more expensive, a little bit bigger loss, less reward, but probably close to risking 1 to make 3. And I'd rather put something like that on than something, because the charts just don't look good, and we have to respect the patterns and which way the market's leaning.
Well, certainly in this environment, I was making this point on Macro Money yesterday. If you look at the aggregated Fed probabilities, everything looks very clear. You got about a toss up between September and October, That's 60-40 for a hold September, 35-65 for a hike in October. None of that looks very convincing. But by December, you have an aggregated rate hike probability of 95%. But those are aggregated probabilities. If you look at the actual breakdown, meeting by meeting, level by level, the degree of confusion is overwhelming. There is nothing that carries better than even odds from October onward. So the market is sure-ish, about 60%, that it's not going to get a rate hike in September. So at least there you have slightly better than even odds of something. Otherwise, it is a broad dispersion all the way to the end of next year. Nothing is likelier than maybe 30, 40%.
Can we take a step back? Can we take a step back? And I just want to illustrate what this looks like on the CME FedWatch tool here and why this is so interesting. And I think this is why
the market
we have
is confused.
But this is why there's a lot of opportunity around bonds, around what the Fed's doing here. Because typically, okay, if we were to look at a distribution, the current rate is 3.5 to 3.75. In normal times, if the current month was 27.3%, you would see the rest of the odds sitting at just one notch higher at 45.1. Okay. Typically going into meetings, if you were like, oh, the market's leading into a hike, you'd have like an 80% chance for one up and maybe like a 20% chance for two, but zero for a hold. Okay. Yes. So what Ilya's saying when he says there's a wide distribution here, there's like 27% of the market that thinks there's going to be a hold. There's a pocket of the market, 4% think that by the time we get to, this is the December contract expiration, that we're going to have not one, two, but three hikes. There's 24% of people think it's going to be at least two. And then there's 45% that there's going to be one. So it's not like a step function where the market is basically in a binary state. We're either hiking or not hiking. The market is scattered and saying like, we have
hike. No idea what's going on.
It's not just hike versus not hike. It's like when we hike, there is a wide debate within that camp as well. So there's a lot of folks who are off sides, which is the point. So there's going to be a lot of positioning reshuffling across the hike odds coming up. And that could mean knock-on effects, Ilya, into gold, silver,
very much so.
And that's why this is.
Just take a look at the actual probabilities table. If you scroll up there, right there, just take a look at these numbers. So for September, 60% hold, 60-40, and then everything else is zeroed out, right? The market is coalesced around a view.
That's normal.
That's what normal looks like. Now look at what happens from October onward. It's chaos. Nothing looks like the market knows anything at all. Like, well, maybe we'll get three hikes, maybe two, maybe none. Who knows? Dealer's choice.
But this is by design. Kevin Warsh doesn't want forward guidance. So the market has to then go out to December 27 and price in tails in both directions.
That's right.
Does it not? So, I mean, this is, for me, it's not whether or not, I think the market right now out of Warsh is going to want a reaction function. Like it wants to know a little bit more clearly what his reaction function is for doing things.
Which is why Friday is so fascinating, because you just nailed it. You hit it right on the head. Warsh doesn't want to tell what his reaction function is. He is fundamentally sort of Greenspan-esque. He wants to obfuscate. And he wants to obfuscate as a point. Yes, that's right. It looks exactly like that.
Kind of like a distribution.
He wants to obfuscate as a point of policy, as a point of tactics. And because he wants to obfuscate as a point of tactics, we're in a situation where likely he's going to be vague on purpose. But the market has been in a direction. It's been reducing rate hike odds. And so if he's vague and says nothing, the market is going to go, right, okay, back to our previously scheduled programming here. We're going to go back to reducing Fed rate hike odds. And then
can we talk about
more gold gains, more Bitcoin gains, lower dollar? Maybe the long end finally runs.
Can we talk about Druckenmiller?
Oh, please. Take me.
Okay, so Stanley Druckenmiller released an op-ed yesterday in the Wall Street Journal criticizing Treasury Secretary Bessent, one of his proteges, so to speak, about his yield curve control. If you didn't read the Bessent criticism in the Wall Street Journal, you could go watch any number of things that Ilya and I said. I was a little on tilt last week about this.
Because he said all the things we said.
Said all the things that we said, which makes sense because he's someone who's...
They're the right things, and they're the right things, and both of us, I think, would consider Druckenmiller something of a spirit animal.
Yeah, he's someone who I paid attention to my entire professional life. When he's given speeches, released notes, I've read them. He's talked about his process. I've referenced him how many times here?
He's a huge influence, I think, in both of the ways that you and I both approach markets. I think that's fair to say.
It wasn't surprising, to say the least, when it's like, oh, Druckenmiller came out and that's what he had to say. Like, yeah, duh. Of course, that would be his opinion.
Sure.
But here's what makes this funny. When Druckenmiller's op-ed in the Wall Street Journal was produced, there were some people in media and FinTwit, fellow traders who you might see on X, who were saying, like, I can't believe Stanley Druckenmiller used AI to write this post. And so, of course, there was like a 12-hour window where people are accusing each other, like, your brain's so cooked. You're so stupid. Just because he's an old man using M dashes. Like, of course he isn't keeping up with what the kids are using and the 6 and the 7s and all that jazz. Right, Elliot? He's just okay. This is the conversation. Accusing people of being intellectually disingenuous. Like, how dare you accuse someone like Stanley Druckenmiller for using AI to write an op-ed?
How dare you think Stanley Druckenmiller doesn't know how to use AI?
Oh, that's where this takes a twist, because this morning Stanley Druckenmiller came out and said, oh, yeah, no, I had Claude write this for me, which is pretty damn funny.
It is pretty funny.
So all the people who were, defending him blindly yesterday, okay, but all the people who were...
Stanley Druckenmiller is not Stanley Druckenmiller because he's not forward thinking. Stanley Druckenmiller has been calling kind of layer next AI names like 2 years ago. Like, okay, so I learned about perplexity from Stanley Druckenmiller.
From a 70-something, 80-year-old something man, right?
Yeah.
So what I find so interesting about this conversation is not that should he have used this to write his op-ed? Maybe, maybe not. He pointed out, he's like, my time's valuable. Of course I had AI write it for me. But it brings me to like the bigger perspective here, right? Which maybe it's not like a futures power hour topic. Maybe this is, back to the futures topic, but maybe more suited for overtime. And we'll pick this up later, perhaps. I think we should. But yes. Joe Weisenthal over at Bloomberg had tweeted out several months ago that there's going to be a point in time in the future where, if like you go for directions in the city, and I'm paraphrasing what he said here, I don't remember it word for word, but paraphrasing, it's like if you go look for directions in the city and someone doesn't take out Google Maps, you kind of look at them crazy, like, just look at your phone, open up the Maps app on your phone. Why are you walking around with a paper map, right? How can you possibly be lost? And so people are going to view writing with AI the same in the future. Like, you wrote that yourself. You didn't like prompt the system to give you a script that you can then edit and ultimately then say, okay, this is what I believe because I've trained it on my thoughts and my processes. But this is an interesting moment that we're seeing here, Ilya, where
yes,
even Stanley Druckenmiller's outsourcing his thinking to AI. But again, he said so many public things, he could probably prompt it, say, in my voice.
Oh, sure.
In my voice, criticize Treasury Secretary Bessent.
I mean, if you and I could do it, if you and I could do it, and you and I can do it, because I know I can prompt Claude to use my voice, and it's not perfect, but it's close enough to where I could edit it and work from it to some extent. I have to go in there and tell Claude, based on a list of here's obvious AI slop, don't do these things. And there's a wonderful Wikipedia repository you can just dump into Claude and go, you see this? Don't do any of these things. But it's pretty solid. And if it can pick up you and I, granted, you and I have written a lot of content in the past 20 years.
Publicly.
Tons and tons.
Well, that's why AI using M dashes bothers me so much, because for like a bloviating, long-winded Italian American like myself, The M dash is the perfect rambler in the middle of a sentence.
I
can
love an
talk
M dash.
forever with an M dash in my writing, but no.
I've had
It's
to stop.
AI, Ilya. Okay, so we have what's the move then? Bonds are up because of oil. Maybe they keep going because of oil. It's certainly not because of Besant. And
no,
listen, Warsh now has an excuse to even be more non-committal to hikes now that oil's coming.
That's right.
In,
That's right.
The market.
That's what I'm looking for.
The market hates
Let him come out and be vague. Let him come out and go, let me tell you about what my task forces are going to do.
Yeah.
I'll see you at the end of the year.
Most recent swing high is July 14th at 109 and 10 ticks here. So I'm looking at 109 and a half, which is 109.16, 109 and a half, 110. It's 9 ticks wide. I am more than willing to do that, to put on another short delta trade here in notes and bonds. Ilya, call me crazy, but
it's interesting.
I'm
what
with the truck on
today.
this.
I mean, it's interesting what happens today, right? Because gold stops, Bitcoin stops, dollar stops, bonds rally. It's almost as if the market is getting ready for maybe Warsh to be a little bit more hawkish and thereby to pull rate hikes forward by some amount. And so the long end starts to go, I can unclench a little because there's going to be higher rates sooner, to the logic that you've described poignantly before. I don't know. Let's see.
Ilya, I want to just point, Besant's program runs until right after Election Day. And then this week they announce measures to bring down oil prices ahead of Warsh's speaking. They're foaming the runway so Warsh doesn't have to be hawkish on Friday.
I believe that to be the case, sir. I believe he's going to be less hawkish than markets think.
There we go. Futures Power Hour. Oh gosh. Back to the Futures is done. Missed that name. At least we kept the intro music. My producers love that. Tim Knight's coming up next year on the show. Stick around after the break. And then we're getting into last call. Today, we have Shea Ballor coming on to discuss markets, and then we'll take you into, of course, maybe we'll dig deeper on that topic of AI writing. We'll see you after a quick break.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
You bring it, we match it. Get a 3% cash match on all qualifying deposits, up to $3,000. You can trade stocks, options, futures, and prediction markets all on one platform. Plus, get advanced tools built for active traders. Visualize potential profit and loss with risk analysis tools. And place trades in a single click. All on the best platform for options trading, according to Investopedia. Tasty Trade. Trade with us.
Mike, what does it mean to be assigned?
When you are assigned, you are ultimately short an option that's in the money, and the counterparty has the ability to exercise that option. So if you are assigned, it means your option, against your will, ultimately, has turned into 100 shares of long or short stock.
What does a green scratch mean?
Ooh, a green scratch refers to stubbornness getting the best of you. And when I say you, I mean me. Green scratch refers to rolling a position, defending a position, and instead of just closing it for less than loss that you're seeing, or maybe a $100 loss, $50 loss, a green scratch is when you close it for maybe a 5-cent winner, 10-cent winner, 15-cent winner. Just the ability to see that green number on your screen and get out in a profitable way as opposed to a loss.
Hello, everybody. Happy NVIDIA Eve, I guess. Tim Knight here. We're going to look at some charts together. As I suspected, it's pretty dull out there with Jackson Hole and Nvidia pending. Everybody's just sitting on their hands, looking at Thursday, Friday, Sunday, Monday, Tuesday. We've just been in this tight little range on the ES. People are starting to fall asleep on their keyboards. I guess it's going to change soon. Sure hope so. We are slightly green across the board. ES is up about 0.25 percentage point. RTY up about 0.25 percentage point. Pretty drab, but there's just not anything moving the market right now. There's no new geopolitical news. There's no earnings of consequence. Everyone's just staring at one another. But these things aren't internal, so hang in there. I've got dozens of charts ready to go, so if you don't mind, we'll just sashay into that zone. And here we have our old buddy, the spider, which, as I said, is up about 0.25%. We are in the neighborhood of lifetime highs, which we got back, well, on an intraday basis back here on the 13th. And we started this slow plodding job of getting lower, and we have now our 8th day in a row of a red candlestick. It remains to be seen if the days will be red. We're obviously still got about, almost an hour of trading left. And it's not that important anyway what color the candlestick is, but it's just a mild FYI. It really doesn't matter much at all until we can cross below this 758.58 gap, which would create a failed bullish breakout. But so far, the breakout is fully intact, and the bulls are in control, as they have been more or less for the past 18 years. And even getting below here won't change all that, of course, but it'll be a small step in the right direction. In fact, going beyond just those 8 days, if we dial it back to say this portion, there's been only brief exceptions, 3 brief exceptions to this red bar rule. The power of this explosion higher really stopped on the 4th of August. And since then, at this very moment, we're trading where we were on the 4th of August, which was that last tremendous rise. And I think the day Besant announced that the Iran situation would be resolved in a day or so. What else is cooking out there? Well, we've got the cubes. Those are up about 0.5%. They were weaker than the spiders yesterday. They're stronger than the spiders today. As I noticed, and I actually kind of noticed on the show here yesterday, we were in a short-term bullish mode because we had just about sealed this price gap. That green dashed line there represents support. And breaking below that would basically correlate to a failure of the ES that I was, or to the spider that I was mentioning. It would create a failed bullish breakout. Here too, we've got 8 red bars in a row, and we have been, ever since August 14, been drifting down. The only meaningful drop was really this big price gap here, and that kind of changed the texture of the tech stock market. And since then, it's been just, slow leak from the balloon. If I had one here, I would make that horrible sound, but I don't. Anyway, so that's what the cubes are up to. And in a similar fashion, XLK is up a little bit more strongly, about 0.75%. Same deal. We had our price gap there. Lifetime highs were months ago, and we've been slowly working our way lower. And yesterday, almost to the penny, it looks like, we just got a few pennies sealed up on that price gap, and we've got a bit of a bounce going right now. Tomorrow may be even more dull than today, but that will stop after Nvidia, for better or for worse, depending on which side you're on. But that'll be an important marker. There is also an economic report coming out of note that I hadn't mentioned, which is the PCE, an hour before the open tomorrow, and that'll be the last meaningful data point before Jackson Hole. Not that I think it would really inform what the man's going to say, but PCE, ceaselessly mentioned as the Fed's favorite inflation indicator, is worth noting. Still in tech stocks here, the FNGS fund is up just the littlest bit, 0.25%. You can see here that we've spent 6 days doing absolutely nothing. And these represent trillions and trillions and trillions of dollars worth of stock, and that's what it's doing. It has just fallen asleep in the bench at the bus stop, and people are poking as they pass to see if it's alive or not, but it is just a whole lot of nothing going on. Lastly, domestically, there's the small caps, IWM, which is up about 0.25%. And we're below this price gap from last week, past 4 days, and its own lifetime high was much more recent than tech stocks. Tech stocks peaked early in June, whereas this one peaked just on the 14th. So that was just last week, I guess. So that's a 90,000-foot view of U.S. stocks. Overseas, EFA, right near lifetime highs. In fact, might even be a lifetime high close or very, very close to it. This is the official highest closing price. I'm not sure exactly which one of these it is, but we're awfully close. And this may well, as I said, be a new record today, which is extraordinary for EFA. EWY, which is South Korea, is not at lifetime highs like everything else. It has its own price gap. And even though this is South Korea, and even though Nvidia is an American company, if, just saying, Nvidia took a tumble on Thursday, this would almost assuredly go down. I think you'd see the South Korean market follow that straight lower or higher if it burst higher based on some kind of good news or a more huge circular financing deals. I always like to show this one too, KORU, the leveraged bullish on South Korea, same price gap with respect to dates, of course, a much cleaner pattern. And if we can stay below that shooting star there, we've got every good chance of resuming that tough bear plunge that we were enjoying for a while with South Korea. Near and dear to my heart, of course, remains China. FXI is down just a little bit, which, considering everything else is green today, that's fine. 200 and something days left on my puts here. I have moved this horizontal down. It used to be anchored to this bar here. I'm going to tighten things up, get more conservative. I dragged that bar lower in terms of a stop out point for that put position. But yeah, March 2027, FXI $37 puts with that. And it has spent, it had a nice tumble yesterday. It's just kind of hanging out here today. Clearly, the what's going on with Operation, what's it called? Economic Outcast, I think, is part of this because China is the biggest trading partner, I believe, with Iran. And the United States has made clear that they're going to punish anybody who dares trade with Iran. And no names have been named, but anybody can look at a table and see what the data says. And so the countries that are relevant to that are plainly known by empirical data. So we'll see what happens there. It's a big unknown. You know, what does that really mean? What if China says, none of your business, we're dealing with Iran, bugger off? What does the U.S. do? They're rattling their sword, not militarily, but economically. Does the U.S. do something about that? Do they punish China economically for continuing to consort with the devil? That remains to be seen. I imagine yesterday's small tumble was predicated on that prospect. You can see a different flavor of this on a much longer term basis by way of the Hang Seng index. And this is down just a little bitty bit yesterday. This is the chart going back for over half a century. And I haven't drawn it, but I can just kind of just gently arc. You can see here the huge sweep of, giant bull market kind of easing into these inflection points, getting milder and milder. And we basically had like a double top here from here way back in 2007, which feels like about 500 years ago, and right here, which is about 11 years later. So explosive moves higher for good obvious reasons, a peak here, and then of course the financial crisis happened, and then a recovery up into 2018. And since then, since that peak, which I think nominally was a lifetime high, We've had a major lower high and another major lower high, and shorter term, a failure of this uptrend. And we zoom in here and we can see that once this trend line broke, it finally just plunged and then set about starting late in June on this multi-thousand point recovery, which, God willing, pooped out early this month. And we're gently moving lower here. So it's going to take time. But given the fact that I've deliberately chosen March puts, which is over half a year from now, we've got a good shot at a meaningful percentage gain on those puts. One ETF, which is at lifetime highs, no doubt about it, is biotech, IBB. And it's kind of funny here in the San Francisco Bay Area, for some reason, all the biotech companies, and they're all competitors, are within like 9 square blocks of one another. North of the airport, it's like the AstraZeneca, and I don't know all the names, but there's like 9 giant biotech firms, basically where Genentech was formed. So in the 80s, when Genentech was born, they grew up around the Oyster Point area, and for whatever reason, to this day, kind of like why all the tech companies here in the Silicon Valley, all the biotech companies are clustered in that zone. Maybe there's some aura there they want to be part of. I'm not sure. But IBB doing very well. It has moved since April of last year up about 100%. So can't be bad for those long biotech. Dix is getting hurt bad today, and I am sorry to say that I have nothing to do with this on the short side. As I mentioned this morning, it's something I followed with great interest, and I tried from time to time to do something with it, but prior to today's delicious plunge, boy, it was dull. It was just grinding away, not for weeks, not for months, but for years. It was basically a $200 stock, plus or minus about $30 for years, and very vexing. So I basically just lost interest in it and stopped following it. It did have a bit of a tell not too long ago. We did have a nice price gap here that took place, which is where I've anchored that horizontal. And so it kind of hung out there for 3 days, and today just a full-on collapse, about a 30% drop in the market cap in a single day. Long term, like 20 years long term, 25, it's done very, very well. But this is a real smackdown. And this has happened from time to time. And we can see tops here, and this produced almost nothing. This produced something. This produced something even bigger, and this was the big one here, but that really had more to do with COVID than anything else. Because quite naturally, once COVID hit, it's like, well, not gonna be selling many tether balls now. After that collapse, then it became a superstar. And this thing went from way, way down here as a, how low did it go? Like the mid-teens up into hundreds of dollars. But it has peaked, it seems. So yeah, sad to say I have nothing to do with this. If we rally for whatever reason on this, and I can't imagine what, over the long haul, anything approaching that massive top would be an intriguing short setup. But we have seen some retail giants, really take it on the chin. Why did I enter that manually? I didn't have to do that, excuse me. Before the show, I enter all these symbols so you don't have to wait for the data to load. And so let me get back to where I was. Walmart, here we are, WMT. Also something I don't really trade. And this is an interesting one because it peaked back on May 19, quite a while ago. And this is obviously a huge, huge company. And this has gone from 134 to about 105. So that's somewhere between 20 and 25%, hundreds of billions of dollars, I imagine. And it had a big gap down here, and it had a big gap down here. Both of those I can see predicated upon earnings release. So there's the E in slope charts for earnings. So this E here and this E here were the reasons that it really took it on the chin. So retail getting bashed in more than one place. Bitcoin is still strong. And as we zoom in here, you can see that we've had this explosive move higher. The drama of the move has slowed way down Huge bar, huge bar, huge bar. But the past 4 days, things have simmered down quite a bit as we're approaching the bottom of this broken trend line. Yesterday I did, because I'm a glutton for punishment, I did short IBIT. I covered today for a small profit because it's too dangerous, it seems to me. Crypto's crazy these days, but I got to tell you, as a chartist, objectively speaking, it seems a really cool place to be shorting around 80,000. As a person who doesn't like to see Bitcoin spike in the evenings and I can't do anything about it, no thanks. I'm going to stay out. So I have no crypto position at all. But I think it's a great time to short crypto right now, Bitcoin, because it's moved so far so fast. How far could it fall if it does fall? I'm thinking about 68,000, something like that, the high 60s. And as I shocked Jermal this morning, because I said, and then I think you should go buy it because, from a charting perspective, it has established a good base around that 67,000-ish area. So when I said, I'd be bullish on Bitcoin, there's just a stunned silence on the other end of the line. Here's BITI, which is the inverse Bitcoin. Obviously, it's gotten completely smacked. Contemporaneous with that plunge. It's just a -1 correlate on that. So this has taken a hard tumble, basically matching the kind of area we were at early in May. So this could be a great bounce point for this. It could well be. It's not as Bitcoin and gold have been kind of holding hands together lately. And as I said this morning, my interest in crypto is really based upon the desire to get more gold. But I don't want to at these prices, although it seems completely robust right now. Gold was a little weak earlier today, and now it's just like striding higher. So we'll look at that in a sec. But in the crypto world, you are seeing continued strength with these smaller issues. Strive, ASST having another good day, up almost 10%. Bullish, up over 6%. These some big old fat green bars coming down. Bitmine Immersion Technologies, BMNR, up over 3%. And of course, the giant of them all, Strategy, MSTR, up over 4%. And its next important level of resistance, I would say, is right there at 136.25. You can see here we've got a bullish, a very substantial bullish engulfing pattern. It opened quite weak today and it's trading quite strong right now. So big old bullish engulfing pattern there. Once again, I have no crypto positions. I'm not going near this bad boy. I suspect after Jackson Hole has been digested, it'll be a lot more clear what crypto is going to be doing. We could well be plunging after the speech. Who knows? But in anticipation of it, and with all that's going around, gold and Bitcoin companies and crypto companies, I should say more broadly, are thriving. Even the likes of STRC, which is the high yield instrument, a lifetime high on this. That's something you can't say for the other strategy. They should get these better names because MSTR is strategy and STRC is also strategy. I'm sure the long name and the CUSIP are different, but as they show up here, they're both strategy, although they're both Michael Saylor's creations. But this is at lifetime highs. It was way down here, bottomed at $69.68. And now it's just about to par, so to speak. It's just about to $100 again. So really a tremendous recovery there, almost 50% in a pretty short amount of time. As far as actual gold, GLD here, I mean, percentage-wise, pretty unimpressive, 0.27%. And this resistance is just all it is. It's just anchored to yesterday's high. It really is not meaningful from a charting perspective. The next really potent resistance is way up here at this price gap. If by chance we do start to sell off, as I've said, what I want to see is us to get down to this zone here, where this green rectangle is. I kind of doubt it's going to get that low. It may well not get past 400. Going to have to wait and see on that. I'm not interested in buying at these levels. It's just gone so far so fast. I just don't want to buy any more at these levels. I'd rather wait post-Jackson Hole to see, and none of us may get a chance. It may just keep roaring higher. Bitcoin could be back into the 6 digits before the year's out at this rate. So I'm just kind of holding back and doing nothing. Silver SLV is also up a little bit. It's got a closer resistance point right here. This is a major price gap, getting pretty close to this. So that's a little more clear in terms of when it could exhaust itself. You can see the drama of gold by way of the XAU index. This has been, it had been just like sloppily breaking down. And here was that consolidation where it broke this range, but it refused to go any lower. And then starting just a couple of weeks back, it went from 300 to about 420 now, 35, almost 40% gain in just a few weeks' time. So those who own mining stocks are just high-fiving, and rightly so. What else is cooking out there? Just a brief mention of energy. We're near lifetime highs on Friday. We're in that vicinity now. This too has gone very far, very fast. Seems to be kind of exhausted around here, around the 3,000 level. At this distance, which goes back to the prior millennium, you can see that just sticks out like a toothpick, that straight line up. It seems more likely than not that this is going to ease back to consolidate those gains as opposed to just charging ever higher. I took a peek at a couple of Forex charts. They're usually not that interesting, but just a quick hello here. This is the euro. Euro divided by USD, and there's a lot of fake outs going on out there because as of late June, this had completed this quite substantial distribution top, and it looked like it was going to sink lower. Nothing doing. Up it goes. So contemporaneous with gold and Bitcoin's rise, the euro has been zipping higher as the US dollar gets chilly. And here is a different angle of that. This is the US dollar versus the Chinese currency, the yuan, I suppose it would be. I'm not a Forex trader, so forgive me if I didn't nail that, but I think that's what we're talking about. This distribution top definitely preceded what should have happened, which is a big tumble. We broke here, and it's been kind of sliding ever since, really not looking back hardly at all. And so this shows that the dollar relative to the Chinese currency has been getting weaker and weaker and weaker. And it's been a wild ride for decades here, as you can see, just tremendous dynamism going on. This could well keep slogging lower until if you sort of imagine this zone here, around 6.4, something like that would seem reasonable for a target. A couple of bullish charts still kicking around out there. One of them I think I mentioned the other day, Bending Spoons BSP. This has been slowly moving higher. It's still a good looking pattern. I would remind you of the chart I'm going to look at in a minute, which is Cerberus, which also looked nice for a while, and then it started getting spoiled. So it's important to note that if it got below this bar, for example, forget about it, because this entire bullish setup is predicated upon the successful completion of that base. It can't sink below it. You don't want to get back into that rectangle. Bull, B-U-L-L, which is a Webull, is kind of an interesting chart too. We zoom in here, and what's cool about this is that we burst above here, had a nice little rally, sank, and yet we have not violated this support zone at 835. So that's kind of an interesting setup as well on the bull side. Semiconductors, of course, loom large in my mind, and of course in everybody's mind with Nvidia tomorrow. SMH is up decently right now, up more than 1.25%. A couple of things going on here. This is the diamond reversal, and we fell, retraced, pushed against that pattern, fell harder, and pushed higher again. This was not cool with respect to what should have happened, because in a perfect world, we would have resumed that fall, but instead we pushed higher. And then over the past week or so, maybe 6-7 trading days, we've started slipping. So this was the recovery peak back on the 17th, and we've been slipping since then. The hard stop on this, the sort of like, hey bears, give up, there's no hope, would be a push above this 591.5 level on the SMH if it conquered that price gap. That is the key price gap. Shorter term, I've anchored this to Friday's high, that other dashed line, but it's not a significant a marker as this one right here. If we were to fall, if Nvidia did, I don't even want to use the word disappoint because it's so interpretive, but if the market sold off based upon whatever Nvidia said or did, a logical support zone would be the ascending trend line here, which is the lower line of that price channel. The only position I have here, and I've shrunk it today just to reduce risk, is just a simple SMH short, which I will happily cover if I need to tomorrow afternoon. AMD is up today over 5%, so recovering from the recent weakness. It's got its own price gap, as you can see in the dashed line. Micron is up not quite as much, not nearly as much actually. It's up not even 2%, and it's got its own price gap like so. As I just made mention, Cerberus is just a mess, and the breakout has completely failed, and we're just kind of grinding our way down to what could be new lifetime lows before long. But it's all going to be about this sucker tomorrow, Nvidia, and its own price gap right here is key resistance. So all eyes will be on that tomorrow. Just to wrap things up here, here's the Nasdaq Composite back to the late 70s, and lately it has been just about as messy as Nvidia. But once again, this price gap from last week is absolutely crucial as a barrier to the bulls. The Russell 2000 RUT clung to its trend line for a while and then finally gave up the ghost. It had its own lifetime high here, but it has its own important price gap like so, which again is the key resistance for the bears to have any prayer. And the SOX, SOX, and this does not incorporate today's price action, but there's the top, there's the drop, there was the push higher, there was the naughty business that unfortunately did happen, but we're below the pattern again. And this is the zone we're thinking about with respect to the maximum bearish potential for an Nvidia disappointment. And finally, VIX is ground down to just about nothing. We're still in the mid-teens right now. This is about as low as it goes year after year after year. And it would be awfully nice if something would light a fuse under this, but it hasn't happened yet. So I'll see you here tomorrow. When I do, we'll be just minutes away from the big news. So I look forward to that. See you then. Bye-bye.
Mike, what does it mean to be assigned?
When you are assigned, you are ultimately short an option that's in the money, and the counterparty has the ability to exercise that option. So if you are assigned, it means your option, against your will, ultimately, has turned into 100 shares of long or short stuff.
What does a green scratch mean?
Ooh, a green scratch refers to stubbornness getting the best of you. And when I say you, I mean me. Green scratch refers to rolling a position, defending a position, and instead of just closing it for less than loss that you're seeing, or maybe a $100 loss, $50 loss, a green scratch is when you close it for maybe a 5-cent winner, 10-cent winner, 15-cent winner. Just the ability to see that green number on your screen and get out in a profitable way as opposed to a loss.
Investopedia says we're the best for options trading, period. Investors Business Daily raves about us. With stockbrokers.com, we're #1 for options trading and best in class for futures too. The Motley Fool really likes us, and so does Broker Chooser. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
You bring it, we match it. Get a 3% cash match on all qualifying deposits. Up to $3,000. You can trade stocks, options, futures, and prediction markets. Tasty Trade. Trade with us.
Ring the alarm, hey, ring the alarm, boys. Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
We're back. You're watching Tasty Live. This is Last Call. I'm your host, Chris Vecchio. Final 30 minutes of the trading day here, folks. And it's been pretty quiet for the past few hours. 76.84 here on the S&P 500. When I was on with TP this morning, we were trading at 76.79. So not really much doing right now, but maybe for good reason, right? Nvidia earnings are coming up tomorrow. Oil's off a little bit here, so not much of a reason to be so upset or panicked in today's market. Bond yields are a touch lower. But we have a guest here today to walk us through some of Last Call with us here. His name is Sahil. He's the chief market strategist at Futurum Equities. He's the co-host of the Futurum Equities podcast. Has some interesting comments along the way. Him and I are in agreement on some things, which we're going to discuss here in a little bit. But he's a growth investor at heart. Started in 2012 after getting exposure to private equity and financial modeling. So a little bit of a different cut of the jib than we usually have for a trading or investing perspective here on the show. But he was early on names like Palantir and DigitalOcean, which were and have been big recipients and beneficiaries of this AI build out. So Shai, great time to have you on because we have Nvidia here. This is really at the heart of the conversation.
Yeah, I appreciate you having me on. And yeah, the Super Bowl of earnings is this week. So it's Nvidia.
So let's just get into it, right? This is the gravity point for the entirety of the AI trade, and it has been for so long right now. But it's in the midst of a 7-day losing streak, and the market has not rewarded Nvidia in recent weeks and months for really any of these good reports. It's beaten 6 of the 6 past earnings reports on both EPS and revenue, but it's down 5 of the 6 the next day and off close to 5% a week later here. So what does the stock actually need to see and hear when the bar is already for like 99% EPS growth?
Yeah, so I think, like you mentioned, Nvidia has been somewhat of a disappointment if you're like a trader because the stock move has just faded 5 of the last 6 times. I actually think that Nvidia doesn't report for Nvidia anymore. They report for the whole AI infrastructure complex. So I think that tomorrow's report is going to say a lot more about the whole ecosystem than what Nvidia's themselves, especially because the last several weeks we've been trading around the fear that OpenAI's growth is kind of slowing down. You're seeing more chatter that hyperscalers are becoming more conscious on the amount of capital that they're going to spend. And are we at peak infrastructure growth? Because Nvidia right now entering this print is trading probably just under the market multiple, like 19 or 20 times earnings. I don't know exact numbers. So that's essentially the market telling us this is going to be peak infrastructure growth, when we've heard a lot of evidence this cycle alone from ASML, TSM, even Micron, that this is not going to be the peak. We have another 1, 2, maybe even 3 years of this. So I think that this is going to be one of the more, I know like I feel like a broken record saying this every 3 months that this is a big report for Jensen, but it kind of is because we are getting a little more chatter on, is this the potential top of this infrastructure growth, especially when Anthropic and OpenAI going public and they're doing their kind of roadshow showmanship on saying a lot of crazy statements to help themselves, but also weakens others. Either way, I think there's a lot that we can get into on the NVIDIA report.
Yeah, I mean, I'm just curious. I love buzzwords. So what's the number or comment or buzzword that you need to hear from Jensen tomorrow? I think the press conference is really going to determine the guidance here. So what are you looking for from him to make you feel good about this thing turning to the upside?
Yeah. I mean, I think that Jensen has been pretty public on that 1 trillion of cumulative Blackwell and Rubin number through calendar year 2027. I think that there's opportunity for him to kind of update that a bit with additional opportunity that's kind of been revealed the past couple of weeks, even couple months. Like, I don't know, adding the standalone Vera CPU racks on top of it, which would tell me that Rubin is expanding opportunity rather than just simply replacing Blackwell. So I think that there is room for commentary on Jensen, some buzzwords on agentic AI. CPUs are expanding the pie. It's not taking away from anything. I also think that the most vulnerable part of the report is going to be the financing. That's obviously been the most controversial. You're seeing like the Burries of the world saying it's all circular, it's just left brain or right brain, it's not real demand. So I think that $500 billion deal that they just announced like a week ago with BlackRock, Blackstone, that's going to probably have to be talked about a little more than just a press release. I think that you're seeing more evidence that Nvidia is trying to become more of a less of the burden on their own shoulders on putting together this land power data center capacity just through third party capital that's required to build these AI factories. Like they don't want to be the ones to have to do them themselves. So I think that obviously if you're a bull, you are bullish because you think that the demand pool is widening out. Now AI labs and neoclouds can participate in this AI build out rather than just the big four, because they originally didn't have the balance sheet in order to do themselves, but now they have these big backings with Nvidia kind of cementing 25% of the collateral that they can actually participate. So I think that there's a lot of nuance in this report, but the buzzword, agentic AI, and it's probably going to be something about the AI factories, $500 billion build out.
So before we move on to memory here, just for tomorrow, options are pricing about a 5.5% move here. Is that high or low relative to the importance of the report? Because I know you just joked, every NVIDIA report's important, but this one actually does feel a little bit more important than some of the others.
Yeah, so I think NVIDIA is also a little tricky because the hyperscaler earnings matter more than the actual NVIDIA earnings. We already know it's going to be a beat and a raise. I think that for you to believe, or the listeners to believe it's going to be more than a 6% move, there needs to be somewhat of a surprise factor. For the downside, it would be gross margin compression due to the Rubin build-outs. If there is any kind of hint that the gross margins are actually going to be trending towards low 70s, that would be a pretty big deflate on the narrative of their pricing power. But the upside also could be, like I mentioned, that $1 trillion number. Like, what if it's a $1.2 trillion updated number because the CPU craze is just ton of momentum, or if the ramp up for Rubin is actually a lot closer than anticipated. So I think that it's going to be a dud. I don't think it's going to move at all. I would be an option seller if you wanted to do something for NVIDIA's earnings, but I really just don't think it's going to move the needle at all.
Yeah, you know what? I'm with you. Instead of just playing it for this week, what I went ahead and did here, and it's up on our tastylive follow page here for the listeners, the 190, 195, 225, 230 short iron condor, which sits just beyond the expected move and the average move that we've seen over these past 6 quarters, where the 1 week return has been down by about 4.8% or so. There's decent vol there. Our rule of thumb around these parts is usually look to collect the credit for a third of the width of the strike, and we could do that and some here. So taking it, looking for, as you said, everything that NVIDIA is going to tell us about their business, how much money they made, you can kind of piece that together, mosaic theory it a little bit, based on Meta and all their other customers. So, they're right. There has to be a surprise at this point in the cycle, which NVIDIA really perhaps lacks the capacity for now.
Yeah, I mean, a lot of large numbers. That's the unfortunate thing for Jensen. Like, I think that a lot of people view earnings season as like beats and raise should get rewarded. No, it's not. It's actually the surprise factor, like what isn't being priced in. And I think that unfortunately on NVIDIA's case, like the market's saying that this is going to be peak growth year this year for CapEx. One quarterly earnings report isn't going to prove that. It's going to be a couple of them in a row. So that's why I think that maybe NVIDIA is more of a 2027 story. But if they keep executing, like, just be patient. This is going to be a $300 stock, in my opinion. It's just a matter of when, not if.
So I want to turn our attention to memory here, because I recall having conversations here on the network, and like it was with coworkers in April and May when memory was exploding. Maybe we've broken out of the commodity super cycle that it typically trades in, right? If you see it on the same level as national defense or energy from an administration perspective, then because of that constant demand for the compute build out, perhaps memory is no longer going to experience the boom bust as we typically see, and as we most recently saw with like the crypto build out right around Bitcoin. You have a similar perspective here. Why should we as traders be focused or confident, I should say? Maybe I'm telling myself these things to continue to buy dips, but why should we paying attention to the fact that maybe HBM and even DRAM, they're breaking out of their super cycle type of behavior?
Because the latest and greatest architectures are using HBM at the beginning. Like what I mean, like they're orchestrating these new architectures for the latest and greatest with HBM in mind. That's showing it's not just gonna be a fleeting moment. You're seeing like Apple alone, for example, like they raise the prices across the board because memory prices are going to be more elevated for longer. They were kind of one of the more adamant customers of saying like, we're not going to pass these costs to the customers. We're going to eat it because it's going to be a fleeting moment like it's been in past tech cycles. But obviously this isn't smartphones. This isn't traditional PCs. This is a character change in society as a whole, which is essentially providing intelligence. And HBM and DRAM is a necessary component of that. So it's going to be a lot more prolonged. So as soon as Apple waved the white flag that they're going to raise prices and they were wrong, I think that should have indicated to everyone that this is going to be a lot longer pricing power for these suppliers. And I think that right now you're seeing SK Hynix, you're seeing Micron, they're all trading at a low multiple already. I think they're all under 8 times earnings. So they are being priced like a cyclical company at peak demand and at peak margins that's going to get lower next year. But for what I'm hearing from all the customers and what I'm hearing from the 5-year contracts that they're signing, that there is somewhat of a new environment now for memory where it isn't going to be these suppliers selling into the spot market. It's becoming a lot more of a predictable revenue stream because they're signing these 5-year contracts. And in my opinion, when you price a company under 10 times earnings, you're putting a cyclical label attached to it because you just don't know what the predictable revenue is going to be down the line. These contracts solve that. So now there is going to be a cyclicality to memory. I'm not saying there's not going to be, but the floor is going to be substantially higher. And this is also not even factoring in that every maturity of AI, like right now it's generative AI to now it's agentic AI, is going to be physical AI. There's going to be orbital compute. Like there's going to be so many different versions of AI that's going to need HBM and DRAM that it's going to be much more of a prolonged demand pool for that product than previously anticipated. I will say, I don't know if it ever deserves to be trading at like a 15 times earnings or maybe even 20 times earnings, but at 6 to 7 times earnings, I do think the risk and reward is there for memory, especially when you're getting a lot of evidence from the suppliers themselves, the customers themselves, that this is a end of the decade type of pricing power moment, not peak this year. And I think that is kind of one of my favorite trades. But I will say, devil's advocate as well, every company creating their own accelerator is working overtime to find ways to not require as much HBM as they require today. So like I think the biggest AI brains know this is an issue, know that these suppliers have massive pricing power where the bill of materials just essentially going straight to their pockets, that they are trying to find new architectures that don't require as much. Hasn't come up to a solution, but again, it's going to take at least 2 years. Like once that solution gets created, it's going to be at least 2 years before it hits the pricing power. So even then, like there's years ahead.
Yeah, I mean, you have to think any company that has 80% plus margins in the market has a target on its back for customers are saying, surely we can get a cheaper option out there. These people are getting fat and rich off of us. And there's also folks who come into the market and say, we could probably make a ton of money by doing this a little bit cheaper and undercutting them on competition. We know that some Chinese firms have just recently IPO'd in Beijing and, or I should say Shanghai, and the demand's been through the roof, and Apple's been negotiating with them. The State Department's been leaning on Apple. So, okay, let's tie this to Nvidia then. What's the second order effect for Nvidia tomorrow? Like what does Nvidia need to say to keep the memory names alive, like your Micron, like your SanDisk, like your Western Digital, which, you bring up the long-term agreements, those LTAs are really important. I've raised this with our folks here as well. You go from a business where you can say at spot, just selling whatever the market is, to 25, 30, 50% of your revenue is now locked in for the next 3 years, 5 years. That changes your business model, fundamentally speaking. So what's the second order effect are we looking for here in NVIDIA tomorrow? Or should we care more about Marvell on Thursday?
No, I think NVIDIA, there's a lot of read-through on NVIDIA. Like I keep coming back to gross margins for NVIDIA. I think that matters as much as the revenue, to be honest, and the report, because they're obviously dealing with higher HBM costs, like a lot more complicated rack scale systems, stronger competition from AMD, et cetera. But I think for memory, I think they're going to say a lot about like more commentary on Rubin, like how the Rubin ramp up is going to be and how like the architecture is naturally coming with higher costs and lower initial yields. But like the higher cost component is where you're going to focus on for Rubin. Like, what does that mean for memory? Because memory is the reason that they just had to increase their prices 15%. Rumored. I actually don't know if it was official, but it was some rumor last weekend about that. So I think that if margins fall faster than expected, that could be a read through that memory is just not budging at all, and that they're just like maintaining their line, and they're going to have some pricing power. So I think there's a world where like maybe Nvidia's weakness could be memory's gain.
I was about to
like
say. In that world, then, you know, if Nvidia's like, oh, we only have 75% gross margins now, Micron's like, yeah, that's because we're still selling to you for an arm and a leg, and we're going to keep selling you for an arm and a leg, by the way.
Absolutely. And also, I do want to call out like the transitions from like chip to chip. Like there is always somewhat of a margin compression. So like if there is a 73% gross margin, for example, like I think the street estimates are 74% for the next quarter. That is, I wouldn't scream like hair's on fire right now for that, because every transition is really difficult because you don't just sell GPUs in isolation anymore. Every generation requires more networking, memory, interconnect, CPUs, etc. So I think that if there is somewhat of a margin miss on their guide, I think that's maybe a temporary moment, but that temporary moment could be just the memory suppliers just scooping in more and more of the latest and greatest.
Latest and greatest. Okay, so before we get you out the door, going through some of your stuff recently, you've been searching for and have successfully found some longer-term AI winners. One of those names is DigitalOcean, DOCN here. And like Palantir, this one from being single digits, double digits, triple digits now, and yeah, it's come off the highs a bit. But given your investing time horizon and trading time horizon, if you've been chasing this up over the past year, you've had a pretty damn good year, as it were. So I'm curious, you know, people around these parts are usually option sellers, but as, you know, Dave Chappelle says, sometimes you got to race chip. So if folks are looking for the next bottleneck in AI where they could see a name like a Palantir, DigitalOcean, where's the place that people are missing right now? Is it robotics, power storage? Is there a sector that you're looking into? And, you know, don't give away too much alpha, of course.
Well, I think that, DigitalOcean, like I felt like I was going crazy with DigitalOcean a bit because it was a top 5 position for me when it was in the 30s. I was uber bullish on that name because every analyst on the street was just like guiding for like a 15% CAGR for the business for the next 3 or 4 years. I was just like, that doesn't make sense to me at all. Like they are perfectly positioned to kind of become that inference engine for not just SMBs or developers, but like potentially larger companies who don't want to pay for the highest performance with the big cloud service providers. So like as soon as agentic AI happened, I was like, this is going to be a massive acceleration of the story for DigitalOcean. And now we have 50% growth for 2027. So like, I think that going forward, to find those kind of dislocations, you really need to figure out which companies kind of are working towards maximizing useful intelligence per dollar rather than maximizing the raw token per consumption, which has kind of been the trend for the past 2 years. So a perfect way of finding those next winners is just the open weight models is going to be a continued trend. It's just not going to be just a blimp in the agentic AI build out. Like this is going to be continuing. Most of the token economics will live in the frontier models, but I think there's going to be a lot of winners in the open weight model era. And right, like for DigitalOcean, just to stay on them, like they just talked about how 15% open weight models increased from 15% of DigitalOcean's tokens, I think it was in April, to now 75% of their whole business. So that's an example of like minority to majority. So now DigitalOcean, you can ride that trend. So I think for open weight models, power is not going anywhere. I think right now you're seeing like data center build out is going through some political fudgery. But what I mean by that is like actually a future, and we called it out 3 months ago, where this is not going to be a great summer trade for data centers because if you are a politician or even the Trump administration, what is the lever you're going to pull to win the public favor in the most immediate amount of time? AI has a PR issue. So you're going to probably say some crazy statements. Yeah, they're going to say some crazy statements of like data centers, no, like we need to be regulated more. We need to pause, like whatever you have to say to get the public favor in the short amount of time. Like, oh, this politician cares about me because he's saying no to all this money. because our electricity bill might go up.
I saw a study last week that right now, most Americans would prefer to have a new coal plant built in their town than a data center. Coal plants.
It's
all
ridiculous.
That pollution in the air, all that wastewater, all the water actually being used, far more than data centers, far more pollution. Yet, I mean, that's just where the public sentiment is right now, just to go put an underline underneath it.
Well, no, it's like the devil that you know. That's what the citizens like rather do, even though there's no evidence at all about the data center FUD. Like I saw another like study that golf resorts use 3 times as much water than data centers. So like it's not as drastic as people anticipate, but also like there is a national sovereignty angle towards data centers. Like if we do prohibit the growth of data centers in the US, like you think the rest of the world's going to do that? No, China's going full blast. So like I do think that this is one of those revolutions where the big weights of the world could potentially change if someone solves AGI first. Either way, I digress. What I meant by this whole theme is right now there's a political fudgery due to the midterms. I think once that gets over in November, I do think the reality sets back in that power is going nowhere. And this data center build out, you can't put the genie back in the bottle at all. It's going to continue. And that's why I think the 800V movement's happening. Vertiv and On Semi is kind of my 2 favorite opportunities a bit on in that space. But also Navitas, like MVTS, that's one of the names I've owned since $3. It's very speculative, but again, like this power theme to 800V, like it's a 2028 story. So you have some wiggle room of like building a position before you really see the fundamentals hit the stocks and the market rewards it.
You know, looking at some of these neocloud companies, I know we actually just covered NBIS today. Folks, head over to our YouTube channel later for signal versus noise on NBIS. There's been a bit of a pullback in the stock here. But yeah, these neocloud companies, CoreWeave, Lambda, Crusoe, they have been taking a little bit on the chin here. So maybe this is the next opportunity here. GPU, AAS, SAS, it's whatever the acronym is now. Either way, Shai Labor, this has been great. I appreciate having someone else come on who talks about the data center stuff and actually knows what they're talking about, because I talk to some of my macro friends around here and then they look at me with like, I have 10 heads.
Yeah, I will say I appreciate. I love talking about AI. I talk about it every single day. My wife hates it, but I always say yes to any opportunity I can do to talk about it.
Shai Valor over from Futurum Equities. Go check him out. He has a great podcast, the Futurum Equities podcast. But not while you're watching Last Call. Shai, maybe again sometime soon.
Thanks for having me.
Folks, we are in the final 6 minutes or so of this trading day here right now. S&P 500 still 76.92, so a bit more of a bump here going into this close. Going into a close before the week really begins. Yeah, there are some earnings out here today. Do we really care about them? The Zooms of the world. Maybe they're worth looking at. Zoom right now is trading at $100.34, looking at a $9.64 implied move. So when it's at 100, this is pretty easy, about 9.6%, we'll call it. What does that bring us to? 90.89 on one side for 19 cents. We can go 111, 112 on the other to collect a little bit more here. So on a dollar wide, we're going for something in the neighborhood, maybe 55 cents credit or so. Zoom Communications reporting after hours here. Among a few stocks that are reporting after hours here, really it's a software kind of day. Intuit and Zoom are really the two places that you'd be paying attention to. Both are reporting here this afternoon. Zoom here with that 9.6% move. You're looking at Intuit, a $356 stock with a 322.66 cents implied move. So that brings you down right above 322.5. So we'll just go $5 wide here. Check this out to see what we can work with. And about $1.10 in credit. So that is a bit of, we'll call it a discrepancy between these two names right now. You can sit just outside the expected move in Zoom. You do it in Intuit, and you're not getting compensated in the same form or fashion. $1.67 is the target there on a $5 wide strike, just like it'd be 33% of the width of the strike here. So when you're looking at $1.10, this is not in the neighborhood. It's down the street, a little wise down the street, but really not worth it in my view. Zoom, on the other hand, off by 3.4% already. Look, collecting 35 cents of credit on dollar wide strikes. The stock doesn't look fantastic, but it's been largely range bound for the past several months here. And there's a bit of shelf of a price action right near 94.95. I could take this. 89.90, 111, 112. I can take this. We could put a few of these on. Let's see here. Let's see if we can get filled for 36 cents so we can get in. And we'll put on 3 contracts here. And let's see if we can get filled before the close. That'd be nice. But liquidity here, not great. Open interest, small. Volume, mediocre. Spreads around 10 cents wide. Maybe not going to get filled on that right now. I did some tree trimming here today, though, at least around the equity parts, because the Russell's kind of meandering at 3,000, and there's only a few days left to go until expiration, sitting in that 29.75. Let's just go here. Activity. Filled. Okay. The 29.75, 29.50 short put spread here, 17 days to go to expiration, I should say. It got back to break even. It was down a little bit. It was up a little bit. This thing looks like it's teetering. There's no reason to hold on to a position if it's not something you would put on again yourself. So maybe if we get a stronger close, I could put it back on because you do have that 1 month creeping up. You do have your 50-day creeping up. Otherwise, a drop below 4,000 to me looks a little bit more like a head and shoulders pattern here, targeting your 29.20, in which case we get that daily close below 3,000. I'm reaching out to the September 30th expiration and looking at that 29.25, 2,900 long put spread here, which should pay out close to the 3-to-1 neighborhood by the time we decline another 15 or 20 points or so. As it were, though, oil just got triggered here, which is going into the close, something that I'm happy with to see. At 51 days to expiration, 71.70, the 91.92 short iron condor. Why? Oil is getting close to the midpoint of its trading range. Not quite, but we're close enough to it where vol is sticking around enough, 46, 47% raw volatility. We're going $1 wide and looking for 38 cents a credit. Reasonable enough. This is not a huge trade. We have time on our side, 51 days. It's a little bit longer perhaps than an immediate type of theta decay situation if you're more of a zero DTE or shorter term trader. But trading off that rapid theta decay for less gamma risk up front. And let's see if oil can move around on some of these headlines. Otherwise, the shorter dated position here up at 23 days, this had a nice reset here today. Had a nice little reset here today where we backed off the 93.92 short call spread side, kind of recentering to the midpoint of the range, and the midpoint of the range gets in closer to about 79.35 in the CLV6 contract. So my little game plan here is if we can get another day of weakness or so, absolutely use it as an opportunity to get out of the shorter dated short iron condor, pick up that profit. We'll be at a 50% decay, and we move on to the next thing here. I did see a question come in earlier. Am I still holding the Bitcoin position that was put on last week? Yes, of course. Long call spreads are managed differently than short call spreads, any short premium trades. The short premium trades, this study shows that once you get to 50% profit threshold, even if you still have a boatload of time left, right? You get in at 21 days, now it's 19 and you're already at 50% profit, just move on. It's not worth sitting around and taking the risk of what can happen over the remainder of that cycle. When you're long calls and long call spreads, you're kind of strapped in for a little bit of a ride here. So last week it was getting along the 45.50 call spread because Besant did that thing with the treasury curve and Bitcoin started to break its downtrend. So, hey, own scarce assets idea, something that I've been saying, something that Jim Kersan's been saying, Ilya has been trading it. And here you go, 45.50. I could take it off today for a little bit. We're going to stick with it though, because we have 24 days to expiration and the problems with the long end of the curve haven't gone anywhere. S&P 500, 7691, NASDAQ, 29,277, Russell at 3,014. Bond yields are down. Oil's off over 3% right now. And no one's really excited for it. We're going to talk to Ilya next on Overtime to figure out why. Maybe it's just Nvidia. See you in 90 seconds.
Clip thy waxen wings, thou economic Icarus. Discard these feathery adornments, thy flight's too vigorous. Rather, garb thyself with the soft fur of the bear, and dwell in low burrows of the valley fair. Forsake thy previous highs and perilous summit. For lo, I am short, so I must needs thee plummet. O market, I implore thee, make no high. Like some comic Fozzie, unclip thy bow tie. If thou dost tumble, I shall offer thee up a succulent hoagie. So, ye markets, remain as bearish as beloved Yogi. Follow thee the lead of Kipling's Baloo, and may the move be sweet as honey to Winnie the Pooh. With joy I watch descending chart lines straighten, run down with quickness and sweetness, like Lord Walter of Peyton. Let curious traders admire thy Berenstein way, and joyfully stealing some porridge, let us now say, sweet bearish market, never would I cage her, but admire her drop like some terrestrial Ursa Major. Come down, ye markets, to this sylvan glade, and let the bears have their day at Tasty Trade.
Oh, we're in a holding pattern here, and oil can't get this market running higher. You're watching Overtime here on Tasty Live. We're here for the next 28 minutes as we wind down this trading day. I'm your host, Chris Vecchio in New York, Ilya Spivak in San Francisco. Ilya, encourage people to go over to the chat, join the conversation, tell us what they're trading today, what they think of this market action or lack thereof for at least the second half of the session. Stocks do get a little bit of a lift here going into the close. The S&P 500, 76.91. So we do get some upward movement there right as the day comes to a finish. But other than that, Ilya, it was a meander. You can really see it from once the market opened, 10 a.m. Eastern onwards. I mean, we can go into the nines here. 9:30 a.m., we had a low of 76.92, and we're here at 76.91.5. So if you played the short iron condor today, congrats on picking the right lotto ticket, as it were. Ilya, I don't know if this is much of a surprise, so to speak. Nvidia itself carries so much weight for this market, although we know by now how much of this is probably priced in, because this is a company that has a lot of customers that have already reported their earnings, buying their GPUs. And so you can kind of piece together, okay, if company A and B and C spent this, and they told us it's, you know, all that money went to Nvidia, then odds are that Nvidia made X dollars this quarter. So where do we stand right now? Oil was down 4.7% now. I'm hard pressed. I have yet to see a headline here. I'm looking to see a headline right now. There has to be. We don't go from 3% down to 4.7 in the blink of an eye. Tanker Trackers is saying 25 million barrels of crude were transferred in the Gulf of Oman with 15 ship-to-ship oil transfer sessions observed. That's the only thing that I see here, and that's a headline from about 50 minutes ago right now. So we're going to keep an eye on the oil market, as it were, Ilya. But hey, this is the best we got. Oil's down 5% today, and stocks can only give us 0.3% higher. Ugh.
I mean, you look at all of this, and the thing that sort of really stands out for me is just how soggy NASDAQ is heading into all of this, and the extent to which sentiment really can't find a neutral that isn't negative. And you look at sort of the way that the market leaked lower yesterday. We can see even just on this very short-term 5-minute chart, there was a kind of shelf yesterday. We moved to a lower shelf, and now we're holding and consolidating at that lower shelf. If you look on the daily chart, you can see what this decline represents is a rejection of a level that was broken 2 days ago and is now holding as a break. And so that's an interesting thing, of course, because tech in particular, NASDAQ in general, has really been the driver. This is the story. This is what's holding up the market. Not unlike GDP in the first quarter, where consumers essentially didn't come out to play barely at all. The entire thing was just, we're building data centers, baby, let's go. It's only 14% of the economy, but we're going to run this thing up 10.1% annualized. So that has been the story of the stock market for a long time now. The distance in performance between tech and virtually any other sector over the past 2-3 years is, they talk about a K-shaped economy. It's a K-shaped market. And so as far as contributions of sectors to overall S&P performance, say. And so you look at this and you go, the thing that cannot afford to be soggy, worse sentiment to hold up, is the thing that's soggy. This is not good news for overall market structure, especially with event risk still ahead.
There's still event risk ahead. That's really clear for the end of the week. Ilya, one of my favorite conspiracies I've seen online today to continue the conversation about Scott Bessent and Stanley Druckenmiller from earlier is that this is obviously coordinated posturing by the Treasury Secretary and Warsh and Druckenmiller all together, because these guys all work together. They're all friends. And so naturally, Druckenmiller doesn't say what he says yesterday unless he does it without Bessent's prodding or approval. Bonds are up here today. They're up almost a full point. I can't really say that's anything to do with anything other than what's happening in oil, given how bonds have moved alongside oil throughout the course of the session. Is this the fade opportunity? The market loves, as Druckenmiller pointed out, the market loves testing levels, and each test becomes more costly to defend until the market gets tired. This thing just started.
That's
why
right.
Why would the market give up on testing what luminaries of the financial market, like Stanley Druckenmiller, are calling a clear step towards price management in the yield curve, which again, Ilya, if you're managing prices in bonds, it means you're fixing yields. So it's an awfully long way to say yield curve control.
Just because Stanley Druckenmiller is probably right does not mean he's probably right now, and does not mean he's probably right in any kind of a near-term trading sense, as Stanley Druckenmiller would tell you. Because what Stanley Druckenmiller would tell you in almost any interview he's ever given to anyone is here, because he's invariably asked, well, what are you buying? What are you selling? Like, well, my opinion on this is today. I reserve the right to completely change my mind tomorrow and be in the opposite position, not because this or that thing is wrong, but because I'm a trader and that's what traders do. So loose convictions or strong convictions loosely held, rather. And so
convictions held strongly.
I look at this, loose convictions held strongly is how you get in trouble. And we're going to find out which convictions are being, which convictions are being held strongly here based on what we hear from Warsh and Bessent in the coming days.
Let's head over to some earnings here. Intuit earnings are out. EPS comes in at $4.03 versus $3.59 a share. Revs are also up $4.354 billion.
No wonder NASDAQ was soggy.
Expected. So EPS is up 47% year over year. Revs are up 14% year over year. But EPS is down 69% quarter over quarter, and revenues are down 49% quarter over quarter. So that's a fun little twist. In any event, Ilya, the expected
not great for software names.
No,
but
but
not a good IGV input.
No. So the expected move was basically out to 395 down to 320. I did not want to play this because I was looking at $1.10 in credit on a $5 wide strike. So that's working out to 22% of the width. Listen, if it's 30%, if it's 29, if it's 31, if you feel convicted, okay, you bend the rules. But when you're a third less than your targeted credit before you factor in fees, slippage, anything, not really worth it for that little amount of money. Now, listen, if that was if we're talking about collecting $7 instead of $8.25, there's still a lot of credit to be wrung out of it, but that wasn't the case here. So I avoided it. Happy that I avoided it. Trading at 340 now, so still inside the expected move for what it's worth. The one that
you're risking 2 to make 1, and the probability of profit is 53%. I mean, you might as well just go, okay, well, the market is priced correctly. I have no edge here.
The one I was trying to get filled in here at the end of the day was Zoom, but unfortunately that did not get filled at 36 cents. The 89.90, 111, 112. Just putting that here, 89.90, 111, 112. That might be working because it's 27 cents as it were at the close, and it's trading at $98 down from 100.93. So about 2.5-3% loss there, but still inside the expected move. So Zoom, it beats 155 versus 148 expected, 1.277 billion versus 1.27 billion anticipated, up year over year, slightly unchanged quarter over quarter. Okay, and then final one, SMTC, Semtech. Not that we covered this before, but Semtech's earnings are out. They beat as well, 71 cents versus 61. Share price is closed at 127.47, now up to 130.5 here after hours. But the headline that may be driving this market, which now comes across the screen because of oil now down 5.25% here, which really slid there in the final few minutes of trading. Iran has formally requested through channels that it returns to the June Memorandum of Understanding with the United States. There you go. That's your.
I mean, if this is the well, we were talking about this earlier on Back to the Futures. I've been practicing, by the way, saying that name, new show name. When you look at some interesting coincidences, right? So we get this interjection from the Treasury. In fact, we get two of them because we get the yen interjection, and shortly on its heels, we get this buyback. And Besant comes out and goes, I know it's $1 trillion plus a day market. What's 2 to 4 billion? We're not trying to strong arm anybody. This is a signal. And by the way, this is where, after he explained this, you start to go, wait, didn't sound like yield curve control before, but it sure does seem to start to sound like that as a spiritual thing now, when you want to say, oh, well, we're trying to signal that the price isn't right here. And Stan Druckenmiller picked up on this. He said, well, the statement itself from the Treasury Department said, we are buying from a place with strong sponsorship in the market.
Yeah.
Well, it was like, well, if you're buying from a place with strong sponsorship, why are you buying? That doesn't make any sense. What liquidity operation are you doing to fix a problem that you say doesn't exist? And so when you look at this in the context of, as you pointed out earlier today, these efforts to bring down oil, you go, wait a minute. We paving the runway here for Warsh to come out on Friday and go, rate hikes? Let me tell you about task forces. Boy, are they busy. And do that for an hour.
Makes no sense, because if you have the mindset that the administration only cares about tilting financial markets in a direction that are most beneficial to the narrative that they're pushing at any point in time, because this is the most intrusive, meddling, so much for the invisible hand of the market. This hand is wearing like a bright red glove and punching you repeatedly in the face. It's very visible, right? There's no invisible hand in this market.
It's very visible. It has a face.
Well, Ilya, obvious. And how the hell did we miss this and not monetize this view? Because obviously they're going to tilt.
I have, to the extent that gold was telling me by the end of July that something is different, and so I loaded the boat on dovish rethink. Long gold, long silver, short dollars, long Bitcoin. I have all.
I think gold's going to have a huge week, right? Conspiracy hat time.
Here we go.
So we definitely have more evidence.
We got that good Reynolds wrap here.
The intervention near 475 in the 10s, 475. This latest thing, the bonds. Oh, the Iran sanctions and oil prices coming in, right? Warsh will have every excuse now. Oil at $80, Ilya, is fundamentally different when Warsh speaks on Friday than oil up at 88.
It might as well be mid-range at this point.
If oil's below 80 when Warsh speaks, he is not going to be hawkish at all.
Well, and so this is where we go to what we started with. Stan Druckenmiller is almost certainly right, but he usually is. but he doesn't have to be right in the moment, and he doesn't have to be right about these big spiritual questions of bond market integrity in any kind of a tradable window. Let's
Sure,
remember.
he does, because he's echoing my view that I was stating last week, and I have a position that expires in 3 days. So yes, it needs to work in this window.
Well, listen, this I cannot help you with. Even my powers do not stretch that far. But
that is true.
I can tell you that in Japan, yield curve control survived for years and years until inflation post-COVID made it untenable. And it wasn't a policy error that made it untenable in the sense that the thing collapsed on itself under its own weight. No, it collapsed under the weight of inflation, which came courtesy of the supply chain disruptions during COVID and the aftermath and the scarring thereafter. And there was just nowhere to go. You were looking at 10-year swaps versus 10-year JGBs and going, well, I can clearly see where the market thinks this is supposed to be, and I can clearly see where the BOJ is holding it. The wider this delta grows, the less the BOJ is going to be able to sustain it, because the market now clearly sees what the correct yield is. This is not the case in the US here. We're just announcing something that isn't even yield curve control, strictly speaking, but a whiff in that direction. This can persist for a long time. The market can fight this back and forth, but the Treasury's armory is deep. So
how quickly that escalated, by the way. Besson was saying that he's willing to tap the Treasury's $1 trillion general account to defend the bond market.
Well, because the bond market didn't buy the initial ante.
So that escalated from
Besson anteed up, and the market said, weak sauce. But I got the general fund.
So if he draws down,
won't you please believe me?
If he draws down the general fund to do this, what happens to bank reserves? Isn't that the question? In a theoretical example,
well, then the Fed's going to have to feed him. Is what happens, because if bank reserves get drained, that now is a financial stability issue for the Fed to deal with.
The sequencing here, Ilya, right? So Treasury general account gets drawn down in order to refill the account. Assuming it's for non-tax reasons, the TGA gets refilled basically every April, right? And then again by October, smaller wave when people finish their filings. But if the Treasury wants to refill the TGA, it can just go out and issue more debt. If the Treasury is issuing debt and selling it to the private sector, what is it doing to bank reserves? All else held equal, if the Federal Reserve doesn't sterilize that in some form or fashion, then the private sector absorbs all the issuance, which means bank reserves go down.
Would you like to hear the next fun point?
But you made the point. Are Bessent and co trying to drain bank reserves from the system right now?
Maybe. Because here's a fun thing that happens, right? The Treasury goes out, buys bonds. The Fed needs to refill bank reserves. Maybe it needs to. How does the Fed do these things, right? It has to buy bonds and mark up the accounts for cash, right? That would be sort of standard QE type stuff, where the Fed goes to the banks and goes, hey, I'll take illiquidity off your hands and put liquidity with you. So I'll buy these assets off your books. I'll give you money. Okay, now there's a bid in the bond market. Now the authorities are buying the bonds and engineering their price rises. If the Fed makes money on the trade, where does that go? The TGA.
Yeah. So that's it. That's Ilya. That's a lot of steps to say long gold.
I'm long. I'm long. It's almost like we're saying, listen, we're going to eat the inflation or attempt to eat it as a way to basically disperse of the debt through almost like a bad bank, where the Fed and the Treasury are the bad bank.
Well, here's the sequence. Like, this is why the sequencing matters, because before you get the drain in the bank reserves, and like in the future, when they refill the TGA, the first thing that happens is when the TGA gets drained, right? It's the exact opposite process of the long-term implication. The short-term implication is, so the Treasury's going out there. They're saying, okay, we're going to spend $10 billion from the TGA. TGA goes down. They're buying bonds. That's $10 billion going into the bank's hands. So then the TGA gets drawn down, and when they have to rebuild, then all of a sudden they have to issue all this debt. So the question is, so like short-term bank reserves up, long-term bank reserves down. I bring this all up because if you're pushing up bank reserves, Ilya, you're increasing, like, you are deliberately engineering an attempt to add liquidity to the system by force.
Yes.
Because the banks aren't, once they have this new liquidity unlocked, they're not just going to sit around. They may just jump right back into the long end of the curve.
They're going to
themselves.
deploy it somewhere.
They could literally
they
just
need to make their spread.
Well, they could go from off the run. They're getting relieved by Treasury. They can just back into on the run. You can get a 30-year bond at 5.3% locked in.
There's congratulations, you're financing the deficit. You're just doing it in a very inflationary way.
And now, okay, so this is where I'm going with this. So,
this is funny. You're not actually letting inflation erode your debt. Your debt. You're creating the inflation so that it can erode your debt. Next level, man.
I don't own enough gold. So today,
typically you'd wait for the inflation to organically appear. This is like fermenting wine with yeast. Typically, you would let the wine ferment unto itself. But if you wanted to get there quickly and sloppily, throw some yeast in that grape juice. It'll go. Won't taste any good, but it'll be something.
Yeah. Whatever the Treasury draws down to defend the bond market, it really better get bang for its buck. This is like the SPR, Ilya. At a certain point, you just run it low, and then there's nothing to keep prices down anymore. And then you have to go through the process of rebuilding the TGA. So let's see what he does here. This is fun. These are going to be fun times.
We're trading with the balance sheet of the U.S. government. We're running the balance sheet of the U.S. government like a hedge fund.
Taxpayers.
That's right.
That's our money. It's our money. But
we're apparently deciding that we're going to let Scotty B run the fund, and I don't think he's getting paid 2 and 20, but I know we're not getting the other side. At least in a hedge fund situation, we'd be standing in front of 80% P&L if he makes it work. But I don't think that's what we're looking at here.
No. So look, if they do this and they're going to really deploy the TGA to defend the long end of the curve, every time it goes down, then they step in. They're going to be reducing the available, off the run securities. The float of the long bond is going to go down. Therefore, the supply of long duration available to the private sector decreases. And, you have the same number of mouths trying to be fed by less food on the table. It's going to compress spreads. So it could work.
Well, and you have to constantly then roll over your debt at shorter term maturities. And if the market smells that you can't do it and you have to escalate constantly, it's going to make you refi at higher and higher rates, which incredibly makes the need for this scheme to artificially inflate the debt away that much greater. It's fantastic.
It's fun, and it's all tethered around election day. with all this.
Fantastic.
It's fantastic. We got back to the low that we had here in November in Bitcoin, 80,750. We touched a high today of 81,350 here. So a little bit of a breather.
Somebody was writing this Netflix show. The producers would go, listen, you can't, this is so implausible. Nobody's going to buy this.
Bitcoin super technical. We were talking about this last week when I put on those call spreads, the 4550s in IBIT.
I'm enjoying.
But it's Bitcoin because it doesn't have legitimate fundamentals.
Right. I mean, I hate it that I'm enjoying, but I'm enjoying.
Sometimes it feels good to be bad, Ilya.
Yes, it does.
Step over to the dark side. Play around with it a little while. The bad news is, of course, that now
I can't bring myself to get on the long side of the NASDAQ yet, but if I do without a serious haircut, then you'll know I've gone full Darth Vader.
Say head injury would actually work here. Yeah, I've been thinking more about what Druckenmiller said. Listen, if I'm really mixed on this AI writing stuff, I'm curious what people think about it too. You know,
I like the argument he made. Well, he said, look, I use this the way I would use a calculator when I do math. Why is this different?
I'm on this fence where I read things because someone spent their time crafting the message. And I know that they're like, the message matters because someone spent their life putting time into it. Right.
But Stan Druckenmiller is not that guy.
He's not that guy. And also, you know, people have writing assistants, people have ghostwriters, and then they slap their name on it because it conveys their opinion and their tone and their syntax and their cadence and their prose and yada, yada. And so like they say, oh, this is my opinion. I endorse this view. And you wrote this on my behalf. So, you know, AI is like that. We mentioned earlier, the Google Maps example that Joe Weisenthal over at Bloomberg Odd Lots brought up, where if you walk around a city and someone asks you for directions and, you know, they're not using Google Maps, you kind of look at them like,
well, yeah, I mean, at this point, everybody has an intern. Congratulations. You now have an intern.
I'm curious what the folks in the chat think. Do you get bothered by people using AI to craft you responses? I will admit, and the folks who I've subjected this to, they're aware of it. Did a little experiment last year where I set up a new email address. I told a handful of people I had a new email address, and I used an agent to basically respond to the conversations. I had specifically programmed where it would have 7 back and forths with people before I settled on an answer for them about meeting them somewhere or someplace. I just wanted to see how long I could keep conversations going with people. And I would get these angry phone calls and text messages. Why are you pulling my leg like this? Why do you keep changing your mind? It's like,
stop Skynet talking at me.
It's like, I haven't been talking. It's like, by the way, that wasn't me talking to you all day today. I'm running a little social experiment here. Thank you for your time. So yeah, no, people don't like it, but I'm curious. I mean, do you use AI for your writing? I certainly use a lot of it for charts and data analysis. I know a little bit of Python coding, Ilya. I've taken the time to learn some C# and, you know, various things along the way. I should not have wasted my time trying to learn Rust because I'm not a computer programmer. But now I can just go to Claude or ChatGPT and say, like, do this for me. And it just does it. And it can even spit out the Python code that I need now. So I'm mixed on this. Words carry meaning, but also,
yes,
if you're using it as a ghostwriter and it's your own views.
Yeah, I mean, I think it depends. I think, as ever, it depends how you use it. If you're using it in a way that is honest to what you are putting out there, and the output is your output, if it's your ideation, then Godspeed. I think it's valid. If it's the artistic output of a writer, well, then that's a different story.
Now, the art, if
a
you're
writer, you know, a historian, a great op-ed in The Economist, let's say, that's a different thing. You read that for a different reason. So, if I am creating some meta art for my blog on tastylive.com that I usually do in GPT, I put a different artistic sort of lens on that than if I was attempting to sell a painting.
Sure.
There you
I
go.
get it. Ilya, one final closing note here as we wind down overtime for the day. Last year, the year before, I mentioned this Slaughterbots PSA on YouTube, which I still recommend everyone go and suggest it. We have not talked about here on overtime since March 26, 2025. I keep my paranoia right at the front of my mind here because I keep a timestamp for this. What triggered the conversation back then? North Korea tested suicide drones equipped with artificial intelligence capability. We just learned today that Russia's been using autonomous AI drones to attack civilians in Ukraine. And they found this because there was an Nvidia Jetron GPU on board of one of the recovered drones. I put that tweet out into the world here today. So, hey, yeah, go check out the Slaughterbots PSA if you want to have a horrifying afternoon. And with that, overtime's out of time. We'll see you tomorrow morning to make your morning much brighter than this drag ending here. This has been such a drag. 8:30 Eastern, 7:30 Central Time. Mike, Butler, Jermal, Chandler, they kick off the trading day. I'll be there with them to talk about morning news and movers as we look for trade setups to start Nvidia earnings day again, folks. We'll be back tomorrow with all the great trades that you know and love, and probably some that you'll hate too, because there's certainly some that I hate. Ilya, good to see you, folks. See you tomorrow morning. You've been watching Tasty Live.
What's up, Tasty Nation? We are back with another daily show for you. Happy Tuesday. It is August 25th. We've got one day until the elusive Nvidia earnings report, but there's still some others hitting the wire. My name is Mike Butler. I'm here with Jermal, Chandler.